Right, ladies and gentlemen, a good morning to you here in Bucharest on a Sunday morning, right? Sunday morning, your usual Sunday morning, I'm sure, well, I'm not sure actually, I have no idea, but I guess, I'm pretty sure actually, today here, coming to this right here on a Sunday morning is not a usual thing, but let me tell you, over the next 2 days together, again, it's going to be a place of learning, a place for resourceful 2 days together to really understand and get to grips with the insights of moving things forward. Again, the next 2 days here essentially is what? It's about those conversations, right? Conversations not just around crypto, but really around the transformation of we could say global finance, the builders, the disruptors, the visionaries coming together in one place under one roof, again, to hear each other's insights, opinions, to help you move forward and make better decisions as well. So before we go any further, my name is Peter Hopwood. I will be guiding you through these 2 days together. Again, resourceful days, and by the end of it, hopefully, just hopefully, you'll walk away feeling better, in a better place, smarter place, again, ready for those better decisions that you will make moving forward as well. So let's kick off with our first session right now as well. Again, really looking at Europe's new tech economy. But if I was to ask you, where does Romania really play in all of this? What's Romania's role, and what's the future for Romania, certainly in this space? I couldn't tell you. I have my own ideas. I'm sure you have your own ideas as well. But the next discussion, healthy, productive discussion here on stage, hopefully will give you a few insights as well. Let's now welcome on stage our panelists and our moderator as well. Please welcome to the stage General Director of ICI, Victor Vevera, together with Vice President of the European Parliament, Victor Negrescu, and the moderator who's going to shape this conversation moving forward, Luca Dejan.
Good morning, everyone. So nice to be back at Crypto Expo. Nice to see you again. So we'll start this welcome discussion since we have representatives of the European Parliament as well as a representative of a research institute in Romania. So I would like to start with a question about regulation. So we know that MiCA, it's right now in force. It's already become applicable. We are on the finish line of the grandfathering period. I would like to see your approach with respect to MiCA implementation, MiCA's future in Europe, and how will Europe still be competitive with the other countries in the MiCA regime?
So first of all, good morning to all of you. I know it's not easy to be here on a Sunday morning, but I think it's indeed a very important topic to discuss about. And there are ongoing discussions right now at European level on what to do with this regulation, how to make sure this is implemented accordingly across member states. And we all know, unfortunately, that here in Romania we encounter some delays, especially when it comes to the responsible authority and the actual implementation of this regulation. So what we wanted to do with this regulation is to harmonize legislation across member states, to come up with elements that will show predictability, and in the same time introducing tools that allows the supervisory authorities to monitor the transactions and making sure we are also fighting against money laundering. Despite this fact, there are still elements that were not defined well enough, and there are still things to be improved, and we will be talking hopefully about that today. But what is clear is that Europe has to do more in order to make the crypto economy an added value for its own single market. Right now, Europe is lacking behind. I have here some data showing that unfortunately we encounter some problems. We have users of crypto assets, but we have difficulties in keeping our innovators here. We have more and more people understanding this kind of technology, but also in the same time avoiding this kind of technology due to the regulatory regime that exists here in Europe. And again, if you look at statistics, we see that we are lagging behind. So what is clear right now is that we should probably better define the legal framework, but in the same time use the upcoming competitiveness fund. Why not? To push for innovation. Because we are speaking more and more about the fact that we need to invest more in our competitiveness, and we are now defining this specific fund for the years to come. We speak about close to 100 billion euros that are supposed to be invested in our competitiveness across Europe. But in the first design that the Commission has made when it comes to the financing objectives, we do not have anything about blockchain, anything about crypto assets. So I think now when we are defining actually the upcoming objectives, we should also push to make sure we are investing in this kind of innovation in trying to keep Europe at the forefront of this kind of tools in the years to come.
So it is safe to say that the European Union's approach is to keep a balance between innovation and protection.
I think it's a right line, but sometimes, you know, we overdo it as well. And therefore we have this ongoing discussion, and we discussed before being here on stage about the digital euro. I think digital euro offers a lot of opportunities. I know some of you are not so happy to see this discussion about this kind of digital currency, but digital euro is not there to replace cryptocurrency. It's a financial tool to allow us at European level to do safer transactions, to have a European tool for financial transactions. Indeed, this will be a big competition for financial institutions, for banks. It will offer, in my opinion, an easier way to do transactions here in Europe. We can associate it with stable coins. It's kind of a stable coin. And if we look at statistics, we see that most of the stable coins are correlated with the dollars. And actually, a limited number of stable coins are correlated with euro. By creating digital euro, euro will become a relevant transaction tool also for this kind of assets. So indeed, this is why I called a couple of days ago for Romania to do more to try to get in the Eurozone. One of the reasons I'm pushing for that is also because of this digital euro, which will, I think, in my opinion, have a huge impact on the financial market, and in the same time will be a driver for innovation when it comes to crypto assets.
Thank you very much. Now I would like to switch to Mr. Vevera, which has a slightly different approach as leading a research institute. So I would like to ask you about ECD Services, which is the first European institutional digital asset platform developed by a state institute. So my question is, what role does the state players play in the innovation across EU? Should the innovation be left only to the private individuals, or should the state actors be involved in it?
First of all, thank you for the invitation, and good morning, everybody. It's 1st of March, and it's a happy 1st of March for the lady. And of course, yes, to answer your question, yes, it's not a very fresh entity. It's an old entity. 55 years already this year. And we have in our institute, ECD Services, you already mentioned, was the first marketplace for transaction, in part using NFT at the time when we start, and now using MiCA for a crypto active and crypto asset. But I think it's not, innovation is not just for private or for state. Innovation is in this sector. And if you have a very good regulation, and now MiCA put some new in part of using crypto asset and crypto active, and give just a way, but don't stop the innovation. And if you are state or private, you can use the regulation, but use your creativity to make innovation. And I think we are now in Crypto Expo, and maybe half of people from this room made innovation in this area. But in the same time, we are here. Victor Negrescu is part of the European Parliament. I'm part of National Institute for Research and Development. And I hope, and I'm sure, no, I hope, I'm sure, we made innovation in part of regulation, in part of technology. It's not a way just for state or just for private. And maybe the best way it's a public-private cooperation to make innovation in this new technology.
So I think this panel is very interesting because in the beginning in the crypto industry, everything was about things against the systems. Bitcoin came as first against the financial systems. And right now, all the institutions are involved. We have regulation. I think it is very important to also address from a political perspective, how will the future of crypto look like in this political perspective? Because when we first had MiCA came like a very comprehensive regulation with a lot of rules, a lot of things to came up. And my understanding right now is that the European Parliament and the European regulator is looking to simplify the things. So I'm really interested in finding out some insights from a political perspective with respect to this approach. How will MiCA 2.0 or 3.0 look like in the future?
So I liked what you said. So dear guest, continue to fight the system, but in order to fight the system, you have to work with the system as well. And regulation is one of the tools to do that. So today we are currently discussing a lot about simplification. And probably you've noticed the Commission came up with different proposals called Omnibus, which are basically regulations to simplify regulation. It sounds strange. And there are specific provisions that were presented already by the Commission when it comes to the digital sector. A lot of discussion about the Digital Markets Act, about the DSA as well. And of course, I believe there will be proposals also related to the crypto economy. But what could be those proposals? And what is lacking right now? So first of all is decentralized financing, which was not defined well enough in that specific regulation. We have an issue with interoperability, which also needs to be better defined. We have an issue with national authorities that have this responsibility to assess, but also to approve the different platforms. And here, again, we have to make sure we have a level playing field, and this exists across Europe. We have an issue with digital contracts, which again are not clearly defined, and in the case of some member states, the reaction of the authorities goes beyond actually the regulation, and this creates a burden for those innovators that do this kind of technologies. So I hope in that simplification we will have a redefinition of those key elements, and not only those. So I said earlier you have to work with the system. I think this kind of event allows us as decision makers, and Victor mentioned that earlier, to interact with you here on stage, but also beyond stage, to see what are your ideas, your proposals. We can certainly inform you about what is possible and what's not possible, but it is key for us to get new ideas. So now for simplification, I will be more than happy to hear your inputs on where we can improve the legislation, correct the mistakes, but also come up with added value in the current legal framework that exists at European level.
Thank you very much. So another question for Mr. Vevera. If my understanding is correct, and now I guess I will promote some Romanian achievements. So we have European Center of Excellence for Blockchain, Trading Platform, Blockchain Intelligence Academy, a national AI infrastructure. So from your perspective, what legislative change do you think we need to get even further, to be among the first in Europe in matters of innovation?
Yes, we have this all infrastructure, and for Romanian AI factory infrastructure, the first infrastructure here in Romania, I want to thank you to Victor Negrescu, because he support our proposal to be in this plan. And we have infrastructure, and starting with next year, we have the infrastructure working here, a factory. The rest are working already in our institute. I think we have everything. We just have, now is necessary just time and to start, and we are open. We already open to create an ecosystem before having the infrastructure, the ecosystem part of AI. Now, 6-7 years ago, we already started to create an ecosystem in part of using blockchain in part of public entity. I think we have already everything. And the legislation, European legislation, it's enough what we have to do.
But how do you see this process of implementing strictly the blockchain technologies in public institutions? How do you see the future strictly from this perspective?
Yesterday was a news about ANAF and CTC using blockchain to put in the fiscal devices. Blockchain is already here, the same like AI. If you look in your phone, you saw the blue point announce the AI working for you. Technology is here, it's already working for us.
What do you think it lacks to be implemented more faster? Do you think there's something that's blocking this implementation, or?
No.
And I think this is also a good question for you as well.
What is happening in the implementation of EU regulation, not only the specific ones that you mentioned. The Romanian public system encounters several problems. So first of all is the know-how about these kind of tools. So I know it is boring, but you also need to do this work to brief, to inform public servants, decision makers about your technology. So we have ICI, we have other institutions where they have the know-how, but they need your support to also brief others that have an impact on your ecosystem. Secondly is the issue of responsibility. So we have authorities that get designated by EU regulation to be responsible for the implementation of different kind of EU regulations. And here we have the supervising financing authority who has a responsibility. We also have ANCOM, we also have other structures that are involved in all of that, and they need to coordinate also with European structures, the European Banking Authority, the Anti-Money Laundering Authority, and the specific authority that was created to supervise the markets. And this is not easy. There is not enough know-how. So when there is not enough know-how, we should see which model we can replicate. We often mention Estonia. Estonia could be a model, but also Malta could be a model for crypto. I know you like that kind of model. And they are doing rather well. Malta, Cyprus, when it comes to this kind of technology and attracting investors over there. So why not, define yourself, the ecosystem, the stakeholders in this environment, define what you believe should be the best regulatory framework that allows investors to come here and to develop that exists in Europe and promote it. Convince people that this should be done also here in Romania, especially because right now there are deficiencies in terms of implementation. So take advantage of the incapacity by coming up with solutions that will offer the capacity of the national authorities to actually act and implement accordingly the EU regulation.
I would like for both of you to assess this topic, because one of the hotspots around the crypto areas right now is the tokenization. Everybody's talking about tokenization. The future is tokenization. So for tokenization, of course, we need blockchain technology. How do you think, from a regulatory perspective and from technical perspective, will this tokenization occur in the future?
It's very specific questions, and Mr. Bevera is pushing towards me. So yeah, localization has been one of the goals of the EU regulation. This was not supposed to happen. We refer to blockchain, so we should be everywhere and nowhere in the same time. But in the regulation, we clearly say how the platforms get registered, who approves them, who supervises them. So it's localization at the end. But in the same time, despite this trend, there is a new kind of trend also. The interlink between AI and blockchain AI in cryptocurrency and how this will have an impact. So I think this goes against localization to a certain extent. So I think there are a lot of potential evolutions that we do not currently oversee, we do not currently predict. So in the European Parliament, we have a structure that I'm coordinating, a Vice President of the European Parliament. It's called the Platform Focused on Innovation and Foresight. Specific committee of the European Parliament that I'm supervising, and we try also to assess there. We have conducted, by the way, a couple of studies. We invited experts to come up with their inputs to see how we can define those different evolutions. So we are trying to assess all of that and to see if this trend will actually be translated in more regulation on that. What is also clear, just to conclude, authorities like the EU Anti-Money Laundering Authority, they like localization. They want to see where you are, what you are doing, to be able to provide data to them, to look at the evolution of this kind of industry. But in the same time, if I look at statistics, 9% of EU families own crypto assets, which is okay in terms of numbers, but most of the crypto owners in Europe have small amounts. So, in the same time, we see a democratization of access to cryptocurrency, but in the same time, if we introduce too much regulatory burden, those small owners, they will sell those assets. They will give them away, because for 1,000 euros or 2,000 euros in terms of crypto assets to be supervised, monitored, and to make declarations to your financial authority, this is too much, in my opinion. We have to focus on the big players. We have to fight crime, but in the same time allow individuals also to own, if they want, these kind of assets.
We have the technology, we have the skills, and this process is in progress. It's already here. And I think we just must keep the step with regulation and go forward.
I'm really looking forward to see how Romania will help build this tokenization process. I guess since unfortunately, it looks like our time is up. Thank you very much, everybody. I hope we'll see you again here, because the political and the technical approach from this perspective is very important for the future development of crypto. Thank you very much.
Right, so ladies and gentlemen, we continue again, and what a great way to begin an insightful conversation to give us a kind of trying to make sense of really where Romania is, where it's moving forward to, certainly in this space. And again, the conversations, the insights we heard here in the first panel, I'm sure those will trickle out and spread and drop throughout today and tomorrow, helping us again make sense of really where things are moving forward to. Right now for an honest conversation. We have honest conversations throughout the day as well, and tomorrow also. But this is really an honest kind of conversation all about that marriage between the blockchain and AI, and trying to get down to grips with it all with another healthy, productive panel right now here on stage. Ladies and gentlemen, hands together for our panelists and our moderator as well. Please welcome to the stage right now Alexandra Cernian, Daniel Serb, Radu Ionescu, Marco Đurđević, Bogdan Majorenu, and our moderator who's going to healthily put this all together for us, Ital Elizur.
All right. I think I'll go there. Oh, it's all good. Sorry about that. Yeah. All right, perfect. Good morning, everyone. Thank you. It's a pleasure to be back in Bucharest for this great event. My name is Itai. I'm the founder of Market Across. We're a marketing and PR agency based out of Tel Aviv, Israel. So it's a great time to be stuck in Romania. Perfect. So I'm happy that we have the entire panel here. I think the subject has been talked about in endless forums and has been said almost every general line out there. We're going to try in this panel to dig a bit deeper and go above just the buzz itself of talking about AI and blockchain. But first of all, I'd love if every speaker could present himself briefly, who they are and what they do, and then we'll kind of get back into it. Please.
Hi, I'm Bogdan Majorenu. I'm a market analyst for eToro. So what I'm doing is looking at markets, analyzing it, and trying to explain to people what are the phenomena that are happening in the markets right now.
Good morning, everyone. Thanks for inviting me here. My name is Marco. I am founder of Super Team Balkan, and I'm building the Solana community and ecosystem in the Balkans.
Hi, everyone. Great to be here. My name is Daniel. I'm the VP of Business from MultiverseX. Elrond, the old name. It's great to be here and also see some familiar faces from the old times.
Hi, I'm Alexandra Cernian. I'm Associate Professor at the University Polytechnica of Bucharest, and I teach and do research both in AI and blockchain. Thank you for inviting me.
Okay, and I'm Radu Ionescu. I'm professor at the University of Bucharest. I'm happy to be here. I'm working on AI, machine learning, deep learning, computer vision. So this is my area of expertise.
Perfect. First of all, thank you for keeping it brief. I love that. And yeah, full disclosure, we've worked with Elrond for several years back in the past. So yeah, perfect. All right. So let's get kind of straight into it. We in the blockchain industry are looking for use cases, and everyone thinks that each one is the one. Gaming is the one. DeFi is the one. Identity is the one. Why is AI and blockchain different? Why is this marriage specifically something that we, the industry, are really bullish on, or is it just AI is really hot and we're trying to jump on all the bandwagons? Please.
Okay. I think that we should start with what's going on right now, because what's happening in the crypto world, in the AI world, is not happening in a vacuum. So what is happening right now is that we are seeing the start of adoption. We have seen in the past year the beginning of the institutional adoption in crypto. Right now, in the markets, in the stock markets, AI was the engine in the past year. But the markets are trying to ask questions right now about what is AI doing, how it will impact society, and we have seen the movements in the markets as one company or another announces an AI agent that can do what other software companies can do. If we are speaking specifically of adoption, because I'm coming from eToro and our clients are retail investors, we are having a poll that is looking at what type of assets, by example, investors have in their accounts. And in crypto, I can tell you that eToro Retail Investor Beat was saying that, by example, in terms of adoption, Denmark has only 26% investors that own any form of crypto in their portfolios. Then we have Italy with 27, France with 28. If you're looking at the bigger economies, Germany is with 39%, Spain 38%, UK 32%. But if we are moving, one point and I'm moving on, and if we are moving in the Eastern European space, here, by example, the Czech Republic, 50%, Poland and Romania, 52%. And this is important because these are the investors that already embraced this phenomenon and pushed the crypto market forward. One of the words in our panel was adoption.
Perfect. Love it. Thank you.
So why is blockchain and AI important? In my opinion, it is because
Not important. Why is it more unique? Because everything is
unique, of course. Yeah, of course, unique. Because everybody knows AI is hallucinating a lot, and without having blockchain to verify the data, you don't know. You have to trust it. And I think that's a big problem, and I think that's where the intersection comes in the future, where blockchain will be able to verify all the data and where we will have the bigger trust levels because we know where is that data coming from, is it true? That's my take.
I know.
I like how you phrased the question initially, because for so many years we've been discussing about the killer use case for blockchains, and it's funny because we build blockchains for humans, but apparently blockchains are better used for agents, which is crazy. But you know what? The marriage between blockchain and AI, I think, is pretty obvious. There's things that AI cannot do without the blockchain. One of them is payments, right? You're going to have like orders of magnitude more agents doing payments online than humans. And the blockchains are specifically purposed for that, right? Microtransactions, agents transacting, doing business on the internet, that's gonna happen through blockchain. Then another point, of course, is authenticity, traceability of everything AI agents are doing. So we're heading into a world where
auditability as well, it's audited, it's transparent.
Exactly, everything. So funny enough, we build blockchains for humans, but actually blockchains are for AI, which I'm excited about, we're ready for it.
Okay, so I'd like to bring 2 points to this question. I hope to keep it as brief as possible. So the first thing is about how blockchain can help AI. And I think this is really important with deepfakes nowadays because people can post anything online and it's hard to verify where that video or image comes from. And people can be deceived by this, and I think verifying the data with a blockchain and probably having a different system actually to publish these kind of media would be helpful. That is based on blockchain. On the other hand, AI can also help blockchain to detect fraud, to maybe predict future trends for coins and so on. And in general, AI can help in any technology or in any setup where I think humans can figure out a way to solve a problem, but it's hard for programmers or for, industry or technology people to define how to solve that problem. I think this is where AI can help. I'm not saying that AI nowadays is ready for this. I'm saying that like doing classical programming is not enough.
Final?
I'll just reinforce a bit what's been said.
Sure. You'll open the next question, don't worry.
Basically, AI is about intelligence and speed, but we keep saying it still lacks transparency. So this is where blockchain can come and fit in. It can bring this layer of trust where we can prove where data comes from, who has been training the models and so on. So it will just add this layer of more trust and can help with the traceability and auditability of the systems. But it's important to keep a right balance between what we centralize and decentralize so that we keep systems scalable and functional.
We'll get to decentralization in a bit. Thank you for the answers. I personally, not that anyone asked me, but I'll still say it. I think that AI helps solve one of the biggest issues in blockchain, which is UX and UI, which we really suck at, like really, really terrible. So I feel like a prompt type of engine can just help a lot of other things, to be honest. So the second, the next question is actually funny when it comes to the timing of it. So I wrote these questions 4 days ago. And I said, isn't this all about incentivization? OpenAI could go and raise $50 billion and start giving people money. So OpenAI yesterday raised $110 billion. So I don't know if you saw that. So they took my question and made it a joke. But how much is the initial love of the blockchain industry and crypto with AI more about just our ability to incentivize people, give them these future tokens for all these data points or whatever? Because it seems like a lot of, by the way, if you ask me, adoption in general right now is being over-pushed by a lot of these airdrops and different incentivization mechanisms. And it's cool by one point, but it also, by the way, brings a lot of other problems and bottom feeders and just like this cycle of stuff. So what are your thoughts about that? Is incentivization a key part of blockchain, or actually we're seeing that it becomes maybe a bit of a catalyst for bad behavior? Please, I'd love for you to start this time.
Well, it is a key point of blockchain.
Of crypto.
Of crypto, yeah. most of all. Yeah. But for example, we've also used blockchain in enterprise systems based on incentives to motivate people to use our, we can expand beyond crypto a bit. So yeah, why not? OpenAI can do that. They can start incentivize people for giving them data and processing them and so on. But the truth is that this won't solve the entire problem. This won't help us be able to control what AI is doing if we speak about what OpenAI is doing. So it will not be a long-term solution. But in terms of crypto, yeah, this is basically the main business model that is still being used. But talking about in AI, we keep saying that we have these big players that are kind of monopolizing the market, and starting to do these types of approaches will not lead us to a democratized development and use of AI on the long term.
Okay, I'd like to add something to this from an ethical or maybe environmental perspective. I read an article recently about OpenAI that they're spending around $800K per day just to run ChatGPT. So that's not getting money back for that. And that uses a lot of energy that translates into CO2 emissions. And I think the AI right now they are developing, and what AI are using nowadays is really inefficient. And I think we have to be aware of this, and maybe in this setup, incentivization could be a bit
to mitigate some
harmful. Yeah, and we need to mitigate this as well.
So is blockchain, on the other hand, when we talk about the
So is shipping, so is flights, so is air conditioning. Yeah, it's
not all of them.
Energy's a bitch.
Not all of them though.
Yeah.
We're carbon negative actually. Yeah. No. I think look, incentivation. There's always going to be some types of incentivations in some forms, but the fact is we can't. I think the world is changing, right? I mean, we've seen that with AI from one week to another. Everything is changing. You don't even know which tool you're supposed to use anymore, and so forth. So I think that's going to happen as well with how we perceive tokens, how we perceive, airdrops and whatnot, and whatever worked in the past. I don't think it's going to work again in the future, right? people are changing, the tools are changing, the technologies are changing. We are seeing more institutional adoption. We're seeing more regulation. So I think, we're going to see some really interesting things in the near future around incentivization.
Also, the motivation to run these big airdrops, I think, is going down. There's some of the top exchanges in the world here.
Plus,
you can talk to them. They don't take it that seriously anymore when you see
No.
that. Also, for me as someone who do PR, if I now go to a journalist and say, oh, I have a wallet who has 1 million people in the whitelist, they're going to ask the first thing, did they do this as part of a point program? And if you say yes, they say, cool, talk to me in a month, tell me how much of them are actually using it. That's going to be news.
Exactly, exactly. So no, we're going to see things changing, evolving in the near term. So incentivization always going to be there, but in different forms, ways, and shapes. So.
Yeah, so to answer your question, obviously big tech can go and buy all of our data, but the problem is that they are still writing the rules. So it's not the best solution. And maybe unpopular opinion, but I think that monetary incentivization sucks. Because if people are doing something just for the money, then they are not the consumer, they are not the user, they are not the believer, they will just dump the token or whatever. So I think that the biggest incentivization should be education, and people should learn how to use it properly and what they can build with it. So I think the model is broken, definitely, and we need more education, more security around it, and more adoption.
If we look at the market right now, the big seven magnificent companies are collectively investing this year 650 billion in developing data centers for AI. This is a huge amount, and one of the questions that investors have is how will this money return into the economy and into the market, and how will these companies will produce profits and everything. Talking about the incentivization, one of the things that is characterizing right now the crypto environment are flows, and especially the lack of. Because if we look at the latest Bank of America report, last week in stocks there flew some, 13 billion dollars, but in crypto only 300 million. So this is something. But right now with AI, with all the questions that AI raises, this might help some of the flows go back to the crypto. Why? Because if investors are having a lot of questions about how AI will transform software companies, all sorts of companies that are already impacted right now by AI, might think, okay, in the crypto world there are some crypto assets which are store of value and might be interesting to put the money there, as we have seen they have cycles and might catch one of the raising cycle.
Perfect. I actually have a follow-up question, I think. So first of all, with the money invested in data centers, there's also a big of an issue there right now, because that's one of the reasons why the stock market is going down, according to a lot of analysts. There's a lot of just circular stuff. So Amazon will invest in OpenAI, and then OpenAI will buy Amazon services for the same amount of money, and then they go. So there's a lot of that cycle. But actually a question that wasn't on the list, I'm pretty sure you guys are smart enough to take it. Don't you think there's even a problem with when you're looking at adoption and the fact that all the crypto users are also incentivized by assets? Because let's say Netflix. I love Netflix. If Netflix stock goes down tomorrow 70%, unless they fuck up my programming or spike up the prices, I don't care. I'm oblivious to the financial concept of the price of the stock. And in crypto and blockchain, it's an inherent part. And what we've learned from people is even if you give them something for free, if it goes down 80%, you're a scammer. So isn't there maybe a problem with, so there's the incentivizing part of adoption, which is great, but as we want to hit mass markets, maybe the connection between user base and holding an asset is not the best thing in the world. What are your thoughts about that?
Well, yeah, it's a question of trust. In the ultimate, because right now, if you look, there are a lot of meme coins, a lot of coins, a lot of something.
Enough about the US dollar.
Sorry?
Sorry.
Yeah. But right now, because I started to speak a little bit about adoption, about institutional adoption, and the classical investor was looking at the institutional adoption as a marker of trust, you know, because right now we have some regulations. Actually, the first panel was about regulations, and we will have during the 2 days of conference other panels that will address specific regulation for the crypto. But right now, for investor, having a sort of regulation might bring this trust. Going back to the AI.
Or to the question, yeah.
Sorry?
Yeah, to the question.
Yeah. Might bring trust back into the market. But it's again about the flows. It's again about where the money are going, and if they are going into specific crypto assets. And it's about what's happening right now in the world. I was looking, we are in a global crisis right now, starting from the Middle East. I was looking at what happened in the market, and when the crisis started, Bitcoin plunged, and then with the news that something happened there, it started to rise. So it's related of what's going on around us. It's not only blockchain and the technical capabilities.
Yeah, the macro. It's the macro. Sure.
Exactly.
So again, what are our thoughts maybe quickly about the fact that users hold these assets? Is it a bug or a feature?
So in my opinion, I am talking with a lot of developers who are building on Solana, and they don't care about the price, which I agree with you. But the problem is that a lot of, obviously, VCs invested money, and a lot of users are adopting that mindset as well. If the price is going up, the chain is good. If the price is going down, the chain is bad. But as I'm speaking with a lot of technical people who are building, I see that narrative is slowly shifting. I still think we need some time to reach there, but I really believe that in future the underlying technology will be a better fix for the price.
Yeah, I know. I think crypto investors are probably the most resilient animals on the planet, to be honest. I mean, retail is being screwed left and right and all sorts of ways. And kudos to anybody who's like crypto investor. I think we are seeing a shift. Indeed, this is something I was speaking about like for 2 years already. You know, guys, we are not fighting each other anymore on the markets. We're fighting institutional players, and that's tough. So is it a bug or a feature? I don't know. But we definitely need to create better tools, better decentralized options, privacy, and so forth, so we actually stand a chance against institutional
And maybe
players.
a few less assets. We don't need as many cryptos, maybe.
Yeah. But that's partly Solana doing so many meme coins.
Yeah.
Sorry.
Yeah.
That's inflation on the blockchain.
Yeah.
That's what we call it, inflation on the blockchain, when you have too many tokens, and then there's this whole, attention game happening.
I've also never seen Anatoly or Serge not talk about price every day. So that's Solana. Thoughts?
On the other hand, you don't want just a few people to control everything. So I think in this sense, it's better to have users adopt and be at least in some form of control.
That's why we need academics in the world, to keep us grounded.
It's a business model. I don't think it's a bug or a feature. This is how the market grew. We do have an inflation of blockchains and tokens and assets. So in the near future, probably there will be some shifts on the market to stabilize. But on the other hand, I've read recent reports saying that recently investment funds became interested in crypto, which changed a little bit the dynamics. Stable coins are gaining more traction, so we will probably also see some changes in these models in the next years.
Perfect. So it's a great segue to the next question. So in general, what we see in the internet right now, up until now, is that usually there's a few winners that take all. I wouldn't say one winner, but again, there's a Google and then there's a few other words. There is an Uber and then maybe a few other, and et cetera, et cetera. Blockchain worked very, very differently in the beginning. Where there's more chains than dApps, that's for sure. How do we we can't make sure, again, it's open source, that's what I love about blockchain, but how can we strive to maybe have a bit less of an infrastructure bubble in this use case and maybe more a DApp or a user-centered cycle, because that's not what happened, I would think, in the layer 1, layer 2 phase of a few years ago. So how does the blockchain industry maybe try to better police itself, or where are we going? Do we need all this infrastructure, or is it all about dApps and users? What are your thoughts?
I am a fan of blockchain as an infrastructure, so this is what I mostly teach beyond crypto, the crypto world. So I think, yes, blockchain can become a real pillar in terms of infrastructure to provide trust and transparency. As you said, the market now is still a bit inflated, and we have different types of solutions. Everyone is coming up with new blockchains at the moment, trying to address new problems or to optimize something that was not working perfectly in the previous ones. But in terms of making it more accessible, I think instead of trying to have a few players that monopolize the market, giving access to this infrastructure to universities, research institutes, public institutions, in order to develop and to come up with real solutions for real problems, would make also Europe stand in front of of the research market, instead of just consuming blockchain or AI, and become real representatives in terms of development and innovation.
In my perspective, I think we can be more efficient, both from the blockchain perspective and AI perspective, and I think there is not enough maybe incentive to be more efficient, but I think we should try to keep this as a focus.
Daniel?
Yeah, I think there's two things that are going to happen. One, we need more infrastructure. Because we're going to have, guys, I don't think we see the tsunami that's coming. We're going to have so many agents doing payments online that we're going to be overwhelmed. And my prediction is many of the chains that you currently see that have adoption by the humans will not survive the AI wave, because they simply, from an architectural standpoint, they cannot handle the amount of transactions. So we need more infrastructure. That's one point. Two, we don't need to have like thousands of dApps on a blockchain. This is something that we learned ourselves the hard way. We just need one absolutely amazing dApp on the blockchain, or one use case to prove that everything works fantastically. So more infrastructure, less use cases, but really killer use cases in dApps.
Yeah. So I think the right answer to that question is that we are still in the process of building the railways. And as maybe most of us know, there were different methods back in the day. Everybody was building layer 1, everybody was doing ICOs, everybody was doing this and that. Same with bubble.com bubble. So basically, I think with time, there will be only, internet right now is operating only on 2-3 railways. I think with time, as you said, when they build more infra, there will be a few of projects that stay, and then the dApp level will explode on top of that, but we still need to fuck around and find out, and then we will see what stays, basically.
Yes, a small correction in the flows. There were 31 billion for stock, but still 300 million for crypto. So somebody here spoke about efficiency. Right now, the data centers and crypto are competing for the same resource, electricity. The data centers for AI are gaining right now because they have big money behind, and the crypto industry is in its infancy. So I think that some, 3-5 years down the line, we will see a more efficient crypto industry, and not so many meme coins, but real use cases, especially in the financial industry, where we are starting to move from from analog to on-chain. And because of this, we will see use cases in settlements, in collateral, where blockchain might be really interesting because you have a real
log.
Exactly. You have the ledger, you have everything telling everything that was happening with that collateral in treasury management, tokenize the real-world assets, which it will be a separate panel this afternoon, and we'll discuss there. But all of these are elements that are basically pushing the industry forward.
All right, perfect. So we talked a lot about decentralization, and actually I'd love a bit more of the academics to give a bit of insight on that. We talk about, the crypto industry and blockchain industry all talk about, replacing the banks. Now it looks like all we're doing is doing fiat faster. We talked about democratization and decentralization. 99% of all blockchain apps still run through AWS or different servers. So is decentralization still a core concept? And is it needed for adoption? Because the more and more I see, users aren't that centered about that. And I'll just give it one example. Right now, the biggest use case, and I think ever until now for blockchain, has been prediction markets. I'm not sure we have to have a blockchain, but it's Polymarket centralizes shit. They're their own oracle. There's not a lot of, I would say, place there for decentralization in that mechanism. So what's the future of this industry, and are we going to start giving away our centralization? And can we even say we're decentralized if it all runs on an AWS server in the back end?
I'll start.
Yeah.
The future will be hybrid, I think. We can't decentralize everything, that's for sure. There are use cases where we need to decentralize, or it helps, it has benefits. The key is to find the balance. When we need efficiency and speed, we go for centralized options. When we need trust and coordination, we have to decentralize and find the best fit for that. Definitely, blockchain started as this technology that was marketed everywhere as decentralized and that can bring trust. And that goes beyond the crypto market and the crypto world. This is what the promise that it also brought to the enterprise applications when we talked about keeping traceability in, farm to fork applications and financial applications and so on. I think the main problem still is at the moment that it hasn't proven full scalability in terms of this type of infrastructure. There are not...
Ethereum was stuck 3 times in history. It was for CryptoKitties, it was for NFTs. If there's something, and again, that's a whole different discussion. I think that the scalability talk is, I've never
it's a good
seen...
one. I'd love it.
Yeah, but how many blockchains have broken through scale issues? I know Solana has a restart button, that's cool. But, scalability, everyone's talking about that, but how many blockchains have actually seen high inputs?
But this is exactly this particular moment in history. That's why I'm so excited and so buzzed about this, right? Because this is the moment when we will see blockchains break for real. It's the AI guys, right? All these agents doing transactions and using the blockchain, that's what's gonna make or break a blockchain. So far we've seen so decentralization and scalability is like the tissue that you don't need until you have a running nose. Now we have a running nose. So we're gonna see the need of true decentralization, and we're gonna see the need of true scalability, finally, with AI. Why? Because if you have a private blockchain that, can verify what the heck the AI is doing, then that's no use to you, right? Because you need the decentralized blockchain to say this is true or not of whatever an AI did, right? And then the scalability issue. If we're gonna see like hundreds of thousands of transactions per second done by the AI, then that's the moment when you really need scalability. So we're gonna see some really interesting things in the near term.
Back to the PhDs, please.
Okay. Yeah, so I think from an academic perspective, decentralization is a good thing. So I think it's the more ethical approach. And if it includes everybody, it's kind of centralized from a different perspective, right? Like everybody is included. So yeah, from my perspective, I think this is the way to go forward. And I think, yeah, in terms of scalability, it's also what I said earlier, being more efficient. So trying to use maybe this, for example, trying to use the same infrastructure more efficient, that it's a step towards scalability, or at least better scalability. Yeah.
Thoughts?
Yeah, so as someone said here, and you said end user, no, you said basically end user doesn't really care about the decentralization. I know it's a big topic, but people are seeing hybrid models or centralization as something bad, which doesn't have to necessarily be like that. I also truly believe that the future is hybrid in a way, and I think that we can bring decentralization to some of the layers, but we still need centralization for something to work. So in the end, if something works and it's good, a lot of people won't just care about it. So yeah, I believe future is hybrid.
Unfortunately.
One of the things that is happening right now is that AI needs a lot of computing power. And because of this, they are investing a lot in those huge data centers. But also, some of the people which are, have crypto farms, by example, are starting to lending a part of their processing power to the AI. So yeah, I think that the future will be hybrid, but we still are in its infancy, and there will be competition for resources.
We are still early.
Yeah.
Perfect. I'll give, again, my opinion, not that anyone cares. I think that the infrastructure has to be decentralized. If then there's no reason to do this. Yes. I think that the applications don't, and maybe at most times shouldn't be decentralized. I don't want to go to a decentralized hospital. I don't want to drive a decentralized car. So I think the infrastructure has to be, by definition. The applications themselves, I actually think that they shouldn't. That's why they don't need these tokens, they don't need the governance. That's my personal opinion. And I think that the new wave of regulation, or just how the American president is acting without regulation, is going to make people understand that they don't have to keep these utility token models or whatever, and you're going to see those dying out. All right, last question before we're going to go into a bit of Q&A. So we're here, we're in Romania. We're in one of the leading, or if not the leading conference in Central Eastern Europe. We're in one of the most IT-heavy countries in the world. Please talk a bit about what you think this specific country or region has in its future, and how can it be a bigger part of both the convergence of blockchain and AI, on the adoption level, on the infrastructure level, whatever you, or financial level, whatever you think is the interesting point for this region specifically to contribute to the industry.
I would like to start with this topic as I'm leading the Super Team Balkan, and I'm basically helping the builders and startups go on a global scale, participate in global hackathons and everything. From my opinion, I'm also heavily involved with Romania. We have some of the best builders in the world, best developers, really smart people. What we lack capital, we lack education, and we lack the entrepreneurship mindset. However, on the other side, I truly believe that our region is really gifted with really smart individuals, and I believe that in the future, with the education, with people who are doing similar things as we are, building the community, also good professors and universities, I truly believe that the Balkan region in the future can be a golden place to find the best people for the job.
Inshallah.
Yeah, no, I 100% agree with you, man. We have the amazing talent in Eastern Europe, in Romania. The problem is the bloody politicians. Like, listen, Europe is screwed, man. It's absolutely screwed. I'm not joking. It's like, it's gone.
You remember the part that said I live in Israel? You're talking about how politicians suck? Yeah, I live in a region where they all suck.
But this is the truth. This is the truth, man. It's like we keep hearing these speeches about, bloody everything and so forth. Stop talking. You have amazing people in your own country, in your own, regions. Go and speak with them, because they know the technology. I mean, even earlier on this panel, we were discussing about, the ANAF authority building a chain for, fiscal stuff. It's built on a fork of Ethereum. Like, that's crazy. Like, think about the costs. Think about, nobody's actually speaking seriously about and understanding the technology and speaking with the people who build the technology. And then we have the audacity to say, oh, we are leading in this and that and so forth. No, we're not, right? The best talents in Europe and in Romania will leave the country and will go to the US or in some other region to build their stuff, because we suck precisely at the things that matter and actually speaking with the I'm sorry, it's a bit, we're closing in a depressing sort of tone here, but this is the reality. And kudos to anybody who is still building in the blockchain space, and you guys are doing an amazing job, but this is the truth. Coming from a company that has done everything they could to build in this country.
Okay, so I hope to raise a bit the spirits here. So I think, okay, I agree that some people leave, and these are good, talented people, but I think also many of them chose to stay here. I agree that not only in Romania, but in the whole Europe, we have a problem with maybe too much regulation, and this prevents development of AI and competing with US and even some now competitors in China that develop really good AI systems.
Developed is a big word, but yeah.
Yeah, so I think we need to be, just to have less regulation. So for example, we have an AI hub in Romania that is funded with almost 70 million euros, sorry. So we have funding for research, we have good people, talented people working on this project. The problem is we have a lot of regulations. So for this project, we have to do, like almost half of the time, we have to do reporting instead of doing research on AI and developing the systems, just because these reports need to go to the EU, who determine that we worked on research and haven't done something else. In US, that doesn't happen. They really focus on development and don't care too much about reporting.
Perfect. Any thoughts or, yeah? Yep.
A final thought.
Yeah.
The region has potential, in my opinion, but especially in Romania, we have to drop the late adopters mindset and invest more into shifting things towards innovation and definitely investing more in education and encouraging startups more.
Sure. Please, briefly.
I gave you the figures of adoption at the beginning.
Yeah.
In each eToro retail investor, be it Eastern Europe and Romania especially, had the highest number in crypto adoption. And also, because we're speaking about AI, according to the same poll, 58% of global retail investors would let AI peak or alter their investments in their portfolio, 60% in Romania. We know how to deal with hardships. We dealt with them a lot. And here people are going to adoption and they like new technologies.
All right, perfect.
I would like to add one more thing. That hard times build strong people and weak times build weak people. So.
All right, let's go. Unfortunately, we don't have time for questions. I will ask our speakers if they could, after this panel, wait a bit there if people want to ask them some questions. But please, outside the auditorium, so we'll let the great speakers do their job. Thank you very much, guys, and see you later.
Right, ladies and gentlemen, we crack on with our next session right now. Again, if you just join us again, moving through the day with these insights, conversations, opinions, which I'm sure, well, not sure, but I can imagine maybe challenging opinions maybe you don't agree with, which is all good as well. But again, why are we here for today and tomorrow? Again, for these conversations, hearing those conversations, but also for you to have the conversations that are going to help you make better decisions that we all need to do, certainly with what's happening right now in this space. We move on now to security. When I say that to you right now, security, I'm sure it means many different things, certainly in this space right now. But let's dive a little bit deeper and trying to make sense of really, again, where we are and where we're moving forward to in this space right now. Ladies and gentlemen, let's welcome on stage our panelists and our moderator who's going to shape this conversation moving forward. Please welcome to the stage Ignacio Aguirre Franco, together with Sabina Liu, Attila Vidakovic, and Luca Dejan, who's going to moderate this panel moving forward. Ladies and gentlemen, hands together for our panelists and our moderator.
Okay, hello everyone. So let's wrap it up. Let's talk about security. And in my opinion, security means a lot of things. It means cybersecurity as a matter from a technology perspective. No worries. So it means technology, it means regulation, it means governance, it means experience, it means a lot of things that I would really like to approach. So I would like to start with the ladies. This is the 1st of March, it's a holiday in Romania. We know that KuCoin Europe is building locally embedded governance in Austria. So it is also, in the meantime, of course, a global exchange. So I would like to see, how do you make local governance, it matters to European perspective, make it work? How do you actually make it work?
It is $1 million question, actually. It's not easy, right? Nothing is easy, but I'm talking about KuCoin, I'm talking about crypto exchanges or brokerage. It is no different from any organizations that has to face globalization, even if you're a car company, a consumer firm, or traditional finance banks, right? Same. So I'm not talking this just in a crypto bubble, but I also would point out some differences in a crypto exchange. So, hello, I'm Sabina Liu. I am the managing director of KuCoin EU. So KuCoin EU last year, about November, end of November, we received a MiCA license from the Austrian authority, FMA. And we are now based in Austria, using Austria as our EU hub. And under the license, we are going to be a crypto broker. Would also have linkage to many other liquidity providers to give the best service to EU clients. So that's the background and what we do. So you talked about governance and locally embedded governance. So I have a few things. Number one, I know a lot of people say a lot of crypto exchanges or firms using MiCA as a wrapper to do business in Europe, but in fact they're just not really doing what it's supposed to do. I think that's absolutely not true. I think a lot of my peers here, crypto exchanges, in fact, they really are very serious about how do we set up our business in Europe. So number one is definitely is not just a regulatory or sales wrapper by being in the MiCA zone. And second, I think if you are local in EU and if you are regulated by the EU regulators, inevitably you need to have local governance. And that means you need to have the rules that you regulate yourself. You look at yourself, how do I, as an EU entity, do business? But you also need to have the rule, how you, as an EU entity, interact with your headquarter, which is outside of the EU, and what are the responsibilities and decision-making power each one will have. So that's, I think, any companies going through globalization go through the same thing. It's not just a crypto exchange. And that goes into that slightly complex matrix that we needed to deal with, which is, in any global organizations, you will have business functions or, just purely functions. And you also can divide your operation into geographies. So this would come as a matrix. So for example, when we talk about, EU, we're looking at actually is a geographic division. Nonetheless, any global headquarters will have an HR function, will have a legal compliance function, marketing function, business development function, and product function. And these would have global oversights to a lot of different sites they have. So again, this comes to a matrix. I think the key is find the balance that as an EU entity, you need to maintain your independence, but you also do not lose your dependence to your global headquarter, because this is your shareholder, and this is also your biggest partner in a lot of things you do. But then I think lastly, I think we talked about governance, but one thing I think would be especially challenging for crypto firms is that, I come from a traditional finance background. If you're a bank, even if you're a bank in any jurisdictions, you will be already been heavily regulated by your own country, regardless, right? So it's the fact that you are regulated in your home country. Now you're going to another country or another geography. You need to adopt another set of regulations. So you're jumping from regulation to regulation. Even though it means to harder regulation, fine. Still, you've already got the mindset of regulation. Whereas for crypto, number one, regulation globally is not there yet, so a lot of crypto firms not regulated anywhere. Second, crypto is by nature probably not even have a headquarter or like a designated place for regulation to start with. Now when they come to Europe, it is a very high standard of regulation here. So again, that learning curve for any crypto firms to go into Europe, it's very, very steep, and we should help them. We should help them, we should help regulators to get this right, not to stifle innovation, but at the same time, still let the business thrive in Europe and still protect consumers in Europe. So that's what I wanted to say.
Thank you very much. I like one thing that you said, that the banks are also heavily regulated. The thing is that the crypto industry was not prepared to be as heavily regulated as this is just a personal opinion, as the banking was, because the actors in the crypto industry, I think they were accustomed with no rules, and now they started having MiCA, which has a lot of regulations. I think this is what they need to digest and prepare for it, but in my perspective, it's a really good thing, and it's a matter of security and should be observed. Okay, thank you very much for your answer. Now I have a question for Mr. Ignacio. Everybody's talking right now about tokenization. This looks like most of the people in the crypto industry says that tokenization is the future. So I would like to see how is BitGet preparing for, how is the BitGet's view on supporting the tokenized assets, and how do you make it sure that you make the transparency between the classical crypto and the future tokenization in crypto?
Hello, everyone. So thank you for the question. This is a great question. We recently launched the term universal exchange, because we believe that there shouldn't be, we have always talked about CeFi versus DeFi, and I think that's not it shouldn't be like a debate and a fight between them, because it should be unified. So today we launched a lot of TradFi products in these recent months. In January we launched tokenized gold. We launched like many other tokenized stocks and many other tokenized real-world assets. I think for me that is the future, and I think when you start thinking about it, it's not just about tokenizing. It's one of these words that people are, oh yeah, tokenized ice cream. Yeah, no, like that doesn't make any sense, you know? But the fact that having tokenized assets, it means that you have like 24/7 access to it. So it brings a lot of new different people, new different audiences. For example, when we launched gold, it's not that we just launched it because it's cool to have tokenized gold in your platform. We are an investment. We're an exchange where people go and they invest. They have their portfolios. They have their own like assets, right? So gold has always been a security blanket when it comes to investment. So tokenized assets definitely is going to be something that's going to come. And at the end of the day, as an exchange, we try to bring all the assets that people need. In some forms, it's going to be tokenized, but at the end of the day, what you want to build is a platform where all the assets sit in one single place. So I think tokenized, as I said, a lot of people throw it out in a way that doesn't make sense. But as long as you use it to add value, as I just told you, for example, stock futures, you can trade 24/7, which you cannot, or tokenized stocks. You cannot trade them unless, for example, if you're talking about U.S. stocks, you can trade in the hours of New York. You're going to be from 9 until 4. So you don't have to trade on their time. You can do it on your own. So I think as long as it adds value, definitely this is something that has appetite and people are looking for. So the fact that you can bring more and more robust, more assets that people are looking forward to do, I think. If you think 3-4 years ago, I remember that I had in my phone maybe 27 apps, and one was for stocks, one was for let's say for some crypto, but it didn't have all the blockchain, so I need to have another wallet for another thing. So, I mean, it was a nightmare. You were jumping between apps, between tabs. So I think the fact that we can bring everything into one single place under one roof, I think that's the value that it adds. And tokenization is definitely bringing a lot of assets that were not able to be kind of included in our platforms. And today we can, and we do it with a better experience for our users.
Thank you very much. Now, I have one question for Mr. Attila, and he was telling me something very interesting before this panel, that companies spend a lot of money on cybersecurity, but still the breaches occur. So maybe we should assess if the centralized model may be the problem, and maybe the DEX would be the solution. Even though we spend all this amount of money on cybersecurity, if still breaches occur, let's assess your point of view from this perspective. Do you think the centralized model might be the problem with respect to this approach?
Yeah, just let me say a few sentences about us, because maybe it makes you more understandable what we are thinking. So we are coming from the crypto anarchist side. So all of our team is all the team members is crypto anarchist, and of course, in 15 years ago, we want to change the world differently than we want to change it now, and. All of our solutions is coming from the decentralized part, but we want to bring it to the corporate sector, to the regulatory part of the world, because there is a need, and the world is changing now a lot. Changing because there is geopolitical stuff, and changing because the AI is coming, and our infrastructure and our IT systems is old, because just imagine we are still sending invoices by email in PDF. It's a 20 years or 30 years old technology. How can we handle this? How can we do this? AI can steal identities really easily. They can automatically make fake invoices. They can make fake calls with real voices. So that's the point. And there is a very simple solution for that. You don't have to store any user data, because if you store user data, that's a honeypot for hackers. They must do it because they want to steal data. And you can have insurance that doesn't solve the problem. And you can build big walls, and if the data is there, it can be leaked. And if you use a decentralized solution, you just have to know about your user. Who is it? He's allowed to use your system. You can do it decentralizedly, because you don't have to store the data. You don't have to store any data. You have to just store the verifiable credential about that data. And you can show for the regulatory, you can check everything what you want. Okay, maybe it's not that good for a marketing part, and maybe that's the reason it can be, the change is slower. But I'm sure we need to change our systems, because it's outdated now, and you don't have to store any data. And if there is no data, there is nothing to steal it. And if you ask your user, trust me, because I have a huge system to protect you, they have to trust you. But it's much more easy to tell. You don't have to trust anything, because there is impossible to store, mathematically impossible to steal anything from us, because we don't store your data. That's the big change. And maybe it's not easy to make a new system like this, because you have to reorganize everything what you have. But I'm sure it must be do it like this.
Thank you very much for your response. Now, I would like to ask Sabina. You said previously that your past experience is in the traditional finance, and if my understanding is correct, you previously worked more than a decade in the London Stock Exchange. So I would really like to find out what
what have the crypto exchanges have not learned yet from the traditional finance, and what should they learn more from this very large experience from traditional finance?
I think there's a lot. I mean, it's difficult to pinpoint one. And also, I wanted to say, despite I come from the London Stock Exchange, it doesn't mean that traditional finance cannot learn something from DeFi. The fact that DeFi now exists and is so vibrant is because they're fixing problems and gaps that a lot of the traditional system was not able to fix. So I think, if I may say, I think I observed a much difference in a lot of traditional financial services firms versus crypto is really the horizon of a long-term commitment. I think this is always a struggle when people are looking at profit and looking at long-term development. It is always a struggle, and one may just easily say, oh, in the traditional finance, you might be very big and you got a lot of money in your war chest. You can afford to create a product, sell a product in 2 years' time, but not in crypto. Crypto's only got 2 months lifespan. If you don't figure it out in 2 months, you're out of the game. I mean, this is reality, right? We need to understand what is reality of crypto. But I have to say, in traditional finance, it's not necessarily they're not profit driven. You think about a lot of them are actually listed companies, and every 3 months, every 6 months, they need to answer questions from shareholders, right? So they also need to have reports, CEOs are evaluated, and their share prices fluctuate because of their profitability as well. But I think one difference when I'm talking about long-term thinking is, I think if you're looking at a proper FTSE 100, the blue chip companies, none of them will put profitability purely ahead of sustainability and compliance. So compliance, sustainability, long-term development and survival, these are something that they will never compromise. And on top of that, they think about profitability. I think that first step is what the crypto firms are trying to build now.
Thank you very much for your response. So, Mr. Ignacio, I will cite something about your product. So, BitGet has made a bold claim. You're the world's first universal exchange, meaning that you're merging crypto, tokenized stocks, ETFs, and real-world assets in one platform, which basically means that you're looking forward to having, as you said previously, one product for all the things. So, is this the future of crypto industry and finance, in your opinion?
I think it is, and I mean, if I link a little bit to what Sabina was saying about why, what can we learn from traditional finance, I think the biggest issue that we have on our side is that we need to innovate. As she just mentioned, you have 2 months. If you don't innovate, you don't become relevant. But then, technology goes far above regulation. So it's hard for products to be able to be regulated because they're going so fast. The industry is just moving so fast. So when you talk about the universal exchange, indeed, I think there's no way that these worlds are not going to be converged into one. So when you talk about the big fight between CeFi and DeFi, DeFi is amazing. It's permissionless access, it's peer-to-peer, it's wild. But when you start digging in and you see the products, for example, in DeFi, sometimes you find very clunky infrastructure, interface, so it's hard to use. Then you don't have this deep liquidity. So I do believe that eventually all this is going to converge into one, because you were talking about bridging from one blockchain into the other. When you're in DeFi, you're swapping, you're bridging, you're doing all this stuff. So the fact that you can do it in a centralized platform, so today when we brought DeFi into the platform, you have access to all these 2 million new tokens that are being built every day. Now, this obviously comes when you're opening up so that people can have access to whatever they want. It comes at their responsibility, obviously. But I mean, I think there is no way, I don't think that anyone is kind of looking into dividing them. I think everything is coming together. And we believe, and I think all of us that are in the industry, I think one of the biggest challenges is that we need to tell them what crypto is. So when you go and you find a product, if you want a product that's going to give you 5% yield, if you think about traditional finance, you don't ask how it was programmed. You don't want to know what the technology behind it is. You want a nice interface, easy to use, that you can put your money and get your yield. But the problem is we're talking about what blockchain is it mounted on, and then you're swapping, and so this is not cool. So I think the fact that when you move everything into one single platform, it becomes a financial gateway. So you're not talking about a crypto exchange, you're talking a place where you're going, you're investing, you're finding a solution that helps you, you know, either if it's you're getting a loan with collateralized assets that you have. So I mean, I think it simplifies a lot of these things. I think crypto, what it brings, it takes a lot of out of a middleman, because I think the fact that you can have smart contracts and smart technology, it takes away the risk. And at the end of the day, I think our platforms, what we want to do is to have a easy access, because as I said, you don't talk about what technology or what's like the technology behind a banking app. You just use the app. So that is the biggest problem, and I think the fact that we bring everything into one place, it also takes out this friction of having difficult experiences and just simplify into one single place.
Thank you very much. So now one question for Mr. Attilas is, you already touched this subject, but I think it's really important from a cybersecurity perspective. In the era of AI, when it's almost impossible to verify the identity of someone, how can a crypto exchange ensure that the identity of the person is guaranteed, since there's a lot of spoofing using AI when onboarding a crypto exchange?
Yeah, our way, what we provide for our customers, and of course, exchange can be our customer. Everything is start in the EU. You know, there is ADAS, there is a qualified e-signature. Everything starts with that. From that, you can create a blockchain signing key, and that comes to the DID solution, and that's absolutely proof that there is a real person behind the key. And you can use that for everywhere. You can go by the KYC process to anywhere, and if you store your key well, there is no way to fake your identity, and this is a very secure way for the exchange, because he can be sure he don't need to store a selfie about the customer, because it's not good to store a selfie, and the AI age, you cannot know who is behind the selfie. Maybe it's just a bot. So this is a very simple way, and this can solve this problem very easily. That's all.
Thank you very much. So, since we have MiCA, so right now in an era of a lot of regulation, which of course comes along with a lot of costs, which may be very burdensome for some companies. And one might argue that, okay, we will not have this compliance because it will cost a lot of money and we will not have any profit margin. So, but your opinion, it's the other way around. You say that compliance, I'm not talking with Ms. Sabina, compliance is not killing actually the profit margin. So I would like to debate a little bit on that, and how big companies are not seeing regulation as a profit killer, but just as a matter of security and protection for its customers.
I think it should be true. In business, there are many profit killers, not just compliance. So again, we can't just say, just put the two on two sides. One side of the coin is compliance, the other side of the coin is profitability, right? We know, I mean, to make a, you know, in your question, you also talk about like margin compression, right? It is true everywhere, and it is a natural evolution for any industry. Traditional finance, I mean, looking at, when I'm now trading crypto, looking at like a crypto transaction fees, gosh, I mean, equity is much cheaper. Of course, I mean, depending on what market and which platform, right? So you think about margin compression, it happens in almost all industries, especially in traditional finance, the traditional asset classes, it already happened. In the past 20, 30 years. And it's a natural thing. We need to treat it as a natural thing. And we don't treat compliance just, oh, you are the showstopper. That's not. And in fact, for KuCoin and for all the exchanges here, if we get compliance right, that could be our advantage. Because that you're embedded in this, in your product, you get trust with your clients, you're building a long-term business. And that differentiates yourself in a brand. So again, I mean, I'm not saying this is an easy thing to solve, but I feel that we need to think about compliance in a different way. That's number one. And number two, you know, margin compression, it comes from a lot of things with the fact that everything is a lot more technology, AI driven, you know, the cost is coming down, you know, and customers become more and more sophisticated, so you have a lot more bargaining power when you interact with the products. Of course, this will happen, right? But I mean, for us, as an industry, as KuCoin, you know what, ultimately, you will reach a scale, and if you make your business scalable, you know, you can operate at scale that help you, you know, survive in a low margin environment. And of course, we got to know our customer really, really well. You know, you really know who are your core customer segments, and ultimately, everyone should have the discipline of cost control. And I think this is probably longer term for a lot of crypto firms, but I think that is sort of for me, it's a very natural evolution.
Thank you. Yeah.
Yeah, I couldn't agree more. And I think the fact of compliance, I think for us in the crypto industry, you have, as I see it, is three things. You need liquidity, because liquidity brings efficiency and people are going to follow that liquidity. Then you have innovation, because if you don't innovate, you're not going to die there. So you need to keep a balance between these two. And the third one is compliance. And I think compliance brings longevity, because if you don't have this compliance element, it's going to be hard for you to become, like, to grow at scale. If you don't have a proper framework, it becomes complicated. So I think it's a need. I don't want to say an evil need, but it is a need that we exchanges need to work with. And I said, like, if there's no compliance, there's definitely not going to be any longevity.
I'll have a follow-up question on this point for everybody, because I think the main problem with the retail market is not choosing the exchange, but it's trusting the exchange. So in the era where my mother, for example, if she would wanted to buy a crypto and she would enter the internet, she would find out a lot of crypto collapses and spoofing and people losing their money. How do you build trust in this era in simple words and not using like fancy architectural crypto security things? Well, I'd like everybody, sorry for everybody to ask on this one, because I think we are talking mainly to the retail market right now.
Well, I would tell your mother to buy now. It's in a good price point, so tell her to do it now. But jokes aside, I think the biggest, I think the fact that you show people this trust, I mean, I think proof of reserves is one of the things that you can have. We have, for example, we have 1.8 times proof of reserves of our customers' funds, and it's available in the platform. So it's not that I just tell you. You can go there and you can see, and it's updated in real time, which works. We have protection funds, which also protect the users. And at the end of the day, I think the most important part, I think a big job that we have is to be able to transmit these security procedures with our customers. I think in these past months, there has been a big shift from maybe attacks into the platforms themselves, but it's more about using AI and all this stuff to go after the users, because it's easier. Social engineering and all this stuff that is happening. So I think us as exchanges, one of the main things is to keep transparency into the funds, the proof of reserves that you have, but also I think it's important to be able to communicate and to educate the users into what are like the safest protocols, what to use, 2FA, and all the things that should be a norm now. But yeah, I mean, it's hard, but I think you don't create trust out of thin air. You do it by example and showing them all the procedures and all the stuff that is available for them.
Okay. I think I can just repeat what I told before. So, the world is changing, and the trust was always very important. But the way how we trust things is also changing, because there is too many informations, there is too many providers who want to sell you anything what you need or you don't need, and this is the point, and this is the point where we are thinking really differently, because if you want to get the trust of the users, you have to be transparent. That's very good, because people getting more and more value the truth, and they like when you tell the truth. So transparency is very important, but it doesn't protect the user, the transparency. The protection fund, or how did you say, that's good, you need it, because if something happened, you have to use it, and maybe if some hackers do something and you can protect with the fund or with the insurance your user, you will get more trust, and because we see this before. But if you don't need trust because you don't store user data, you don't store the assets, you cannot be hacked, and people will see. I think we are in that edge. People will understand what's the value in the decentralization. I believe that in these days will change a lot the minds, the people minds, and they will understand. And probably we have enough experience with the decentralized solutions, how to do it well, and how to integrate to the corporate and the regulatory sector. And I believe that that will be the winner, and that will be a value for everybody, for the big corporation, for the users. But yeah, it needs changes, and it needs to learn a lot of things from the users, from the regulatory, from the corporate sector.
But do you think we might get to a system where we will not need to trust the exchange in the future?
Of course, some trust you need, but you don't have to trust that part. They can protect your equities, they can protect your data, because they don't store it. That's a different thing. Yes, and that's an emotional thing. I like one exchange better than the other because the color is more nice, and they are talking in a different tone, and it's always important. We don't want to lose that. But the most trustable thing, if you don't have to trust anybody, only the cryptography.
Okay, thank you very much. So now one question for Ms. Sabina is, you have a MiCA license which covers more regulated activities, because as everybody might know, MiCA regulates more activities, so you have license for many of them. Out of these activities which are already regulated, which one do you think provides the most perspective for innovation in Europe from your perspective?
I think a lot, but I think looking at the MiCA license, and in fact we've got 5 out of the whole lot of licenses we can get, and these are the licenses, just the backbone for us to do a good business for all the crypto users. So you've got licenses, allowing KuCoin EU list tokens. You've got license allowing KuCoin EU users to trade crypto on our platform. So there would always be an exchange of crypto versus fiat. And that is sort of very basic. I mean, everyone trades crypto would go through all that, right? And of course, ultimately, you need custody. And so the license we get is what I don't see as is like certain license enable a standalone product. We can sell that standalone product. We see it as a whole. It is the infrastructure we provide to the clients. And I think each license would always have more scope for innovation. And that's where I would love to hear a lot of you coming to me and discuss sort of any product ideas you might have. And that's number one. Number two is, of course, we will, once we sort of the platform back live, we will launch KuCard, which is, again, a debit card that everyone will be able to use the crypto in their day-to-day consumption and purchases. So that's something we're looking at. But of course, going forward, when Ignazio is talking about the universal exchanges, and I think that is definitely a great direction of travel for a lot of players. And we are in the process of taking a bit more license in Europe, and for that to serve our European customers even better.
Okay, thank you. Since we have, I think, 1 more minute left, I would like to see brief approach with your perspective about the future. Because we have AI, we have quantum computing, we have tighter regulations. It looks like the future is going to be difficult for the crypto industry. I would like to see your brief view and how are you preparing for this outcome future. A few words and afterwards we're finished.
Yep, I mean, I think AI definitely is going to be an element that I think all of us are using, not only for security reasons, because when you process millions of users of data, you can find flags easier and in a more organized way. Also, we have a chat agent, an assistant, that you can ask for financial, it can analyze your portfolio, it can help you rebalance it. So you take out this friction element for people. And also, I mean, something that people don't see is that one of the main problems for people when they're investing is that as humans, there's this fear element and there's this panic cells, which AI also helps you to analyze and to make more educated decisions. So I think moving forward, I think we're going to need to, I mean, for example, the same way there's like vibe coding. People who don't know anything about code can now create an app just by putting a prompt. So I think all this AI evolution is definitely going to come to investment platforms and to crypto exchanges, facilitating and taking this friction off onboarding new customers and make it very simple for them to be able to start investing.
Thank you. And
okay, if we keep the topic the AI, I think AI is only a tool, and from the people's perspective, AI can make you much more effective, and it's true for everybody, for the hackers also, for the companies, for a mom, for a grandma, and for a teacher. Can make you more effective, and if you are using it the right way, you can be better than you were before. But we have to learn the risk. Probably if you have more responsible, you have more risk, and you have to be more careful, that's all. So, but this is really a new age.
unfortunately, AI is not taking over the world, but the moderator is, so thank you very much. It was a pleasure having you here. Unfortunately, the time is up, so I guess if you have any questions left, so maybe you can connect directly. Thank you.
Ladies and gentlemen, hands together for our panelists and our moderator as well. Thank you so much. Swiftly on to our next session. Thank you so much. Wonderful. Again, a productive, healthy discussion as well. And everybody here on stage, again, you're intrigued, you're curious, you'd like to know more. Maybe you'd even like to challenge what you've heard as well, which is all good as well. Again, all our speakers, everybody here on stage, they are here for today. Many of them here for tomorrow as well. So grab a coffee. Grab them, not grab, literally grab them, grab a coffee with them, sit down perhaps, have a chat and take those conversations forward as well. Right, we move on now to our next session, all about really essentially using crypto for these everyday, daily business that we're all into, turning digital assets into real operational tools. How to do this, but more importantly, how to do this well in a smart way. Hopefully, just hopefully, we'll get closer to that by the end of this session right now. Let's welcome on stage our moderator and our panelists as well. Please welcome to the stage right now Elisa Komarova, Felix Krijan, Marius Moura, Daniel Serb, and our moderator who's going to shape this all together for us right now, Avi Litani. Ladies and gentlemen, a round of applause for our speakers right now.
Hi, everyone. Super happy to be here in Bucharest. So I'm Avi from Market Across. We're a PR and marketing agency based out of Tel Aviv, which is a weird day to say it today. It kind of feels weird to be Israeli today and abroad. But yeah, gonna try to keep it cool. Why don't you take a moment to introduce yourselves, guys?
Yes. Good afternoon, everyone. I'm Alyssa. I'm the operation manager and deputy director from BitPay. I've been with the company more than 8 years and in the crypto industry for more than 10. And I'm very happy to be here and to attend for the second year.
Hi, everyone. My name is Daniel. I'm the VP of Business from Multiverse X. You may know it as Elrond. Fantastic to be here, guys.
Hello, everybody. First of all, I want to ask you something. Are you tired of winning? Yeah, not really. But maybe better days will come. I'm Marius Moura, CEO and co-founder of Tokero Crypto Exchange. Happy to be here, even in these not so happy times of crypto.
Hi, my name is Felix Kishan. I'm one of the co-founders of Netopia Payments. Now Netopia is owned by private equity, so I'm now involved in something called Netopia Ventures. So we basically invest our money.
Okay, great. Thanks, guys. I think we can start with the obvious question of this panel. What is realistically driving crypto, the shift from crypto as a speculative asset into real business infrastructure? Yeah, is it regulations, stable coins, anything else? Marius?
So there were, I think that the most important change in the past year that light somehow the fire under the crypto projects and so on was the regulatory change, meaning that in Europe we had this MiCA, in US we had the Genius Act, we will probably have the Clarity Act adopted as well, and these acts together with some in US in particular some activities around firing some not crypto friendly people and hiring some other ones. I think that these ones gave the business environment the view and the, if you will, the certainty that crypto will be here for the long term, and all the technical developments done in the past at least 15 years and all the proof of concepts that have been done by various corporates and so on, shown that crypto, at least in terms of crypto rails, if not crypto per se, meaning, I don't know, Bitcoin as Bitcoin transfers, so crypto as rails have real use in everything related to the world, starting for payments, starting to asset tokenization, starting to everything that you think about, and it's a more efficient way to do a lot of the business processes that were previously done through financial rails.
Thanks. Marius?
Yes, the regulatory part is quite good, but how I see it in the previous period, it's involving a lot of cost for startups or early stage companies, and if in the, I don't know, last years I was always saying that I'm a big fan of the regulatory part, now being more with skin in the game, I see that it's not so cost effective for us. Probably it's much easier for the big and established player, and it was a topic before our panel. They were talking about if the MiCA license or whatever license we have, it's a cost, or it could be something related to profit. Probably it could be related to profit, but on long term. Or if you are a startup, you don't have such a long term, maybe in terms of money that you have. So yes, overall is very good. It's shifting us from a gray or even black area, from t-shirts to suits. But yeah, we need to see how it will go. But overall, it's something good.
Yeah, I mean, from an infrastructure perspective, this is brilliant for us, right? Because if back in 2015-16 you'd have to you had some dodgy discussions and everybody was very cautious about crypto and so forth, you know, assuming that you're doing something dodgy. Now we are seeing infrastructures being used in all sort of companies, from, you know, banks, institutions, startups, and so forth. So this is great for us. Of course, this means that you have challenges, regulatory challenges, which seem to be working in our favor at the moment. Fingers crossed. And if we had 5 years or so or more of experiments using blockchain technology, now we are starting to see some pretty validated use cases for blockchain technology, right? For infrastructure, which is amazing. It's fantastic. What I'm even more excited about is how we are going to be using AI coupled with blockchain technology, but we'll probably touch on that a bit later.
Okay, thank you. Okay, let's get real for a second, and I'm going to ask, who actually benefits from crypto in businesses? Is it solving real problems? Are we creating new layers of complexity. Alyssa, do you want to answer in one of your 6 languages, please?
Yes, so I will base my response based on working for a payment processor. So what I've clearly see that who benefits from it are 4 main groups. First group would be e-merchants, e-commerce. Like, for example, we have Microsoft. For them, it's faster, it's cheaper, it's cross-border, it's 24/7. So that target group, we see they like to integrate crypto payments. The second group would be B2B. So companies like we see marketing media companies paying out to their customers. The third pillar that I can clearly see in the company that benefits from it is contractors, freelancers. We're working, for example, with ADP, which is a payroll company, and again, it's very convenient for cross-border payments, for getting the salaries paid out quicker. And then the fourth one, which is a bit smaller, but it's growing, is B2B to the big B, which is basically large companies which are making intercompany big payments. So yeah, this is what I've been seeing in the last years.
I will summarize all this by saying that the one that benefits the most is, in the end, the consumer. Because if all this translates into lower, and this actually does transfers into lower costs for businesses, for instance, for accepting payments or for tracking things or whatever, it means one of two things. Either the company's profit increase, but that company profit increase, it's not for long term, because the bigger your I think that Amazon, Jeff Bezos says, your profit is my opportunity. And in a connected world, everybody can see that, oh, I process this payment for 1 cent and I charge this merchant $3, then it means that there is an opportunity. So it's either the businesses, but that's a short-term game, or directly the consumers, and in the end, the marginal cost of anything related to electronic transfers is 0, so that's where the prices will be going.
Yeah, maybe just to add on that, I think what's even more interesting, the more companies are competing to integrate technology, the better it will be for the end user, which is really interesting. So, this also applies to blockchain technology. If years ago, as I mentioned, people were sort of skeptical about integrating blockchain, now they are actively thinking, how can I integrate one piece of technology that has to do with blockchain so I can be more competitive against my my peers, right? And that, I agree with Felix, that translates into better products for the end users. In what stage particularly we are in at the moment, it's probably the first stage where businesses are integrating, they are trying to capture profits and so forth, but we will definitely see that go into better end products for consumers.
Not so many things to add after such smart people into the room. But what can I say is not only in terms, yes, the beneficiary mostly is the end user, but this benefit is not only, let's say, financial in terms of fees. This is the primary one. But the second one, it's also in time and effort. And I will give you a very specific example. Besides competing on lower and lower fees, for example, traditional banks were quite forced to introduce something very simple and standard into the fintech world, liveness check. You can open an account very fast in, I don't know, 1 to 3 minutes with liveness check, instead of staying at an office with a lot of papers and spending, I don't know, 1 to 3 days to open a very basic account.
I will just want to make a very short addition to what Mario said.
Yes.
The reason why we all benefit today, at least in Europe and in a lot of the civilized countries, of instant payments is exactly because blockchain was developed and provided a very fast alternative to currency transfer. So somehow the competition coming from this side, forced banks, and now we have almost worldwide instant transfers.
Otherwise, we'll still pay $20 for a 3-day transfer.
It's actually a good segue to my next question. Do you think businesses actually want crypto exposure, or do they just want faster, cheaper rails and just stay in fiat fully?
Depends of the type. I mean, if you look from the principle of business economics, one of these principles would say that your revenues and your costs have to be matched. So if you have costs in euro and you have revenues in Bitcoin, then businesses would not want crypto exposure. Because this is a network game, it means that as long as people start to accept crypto, so instead of saying I will do this for you for 3,000 euros, I will say I will do this for you for 0.03 Bitcoin. The moment this starts to gain speed, then that moment crypto will not be seen as a liability anymore by businesses.
Maybe just to add on that, I don't think they will have a choice. Because especially if we're talking about, for example, agentic payments, commerce element, where if you want to expose your business to this type of activities online, whether you like it or not, these agents will need to do transactions on the blockchain. Now, of course, it will still come down to the fact that maybe when they check out, they'll have to go through Netopia or some other payment provider, and then in their accounts, they will still have Euro or RON or whatever. But in the background, I think they will still be using some form of blockchain technology, which is, again, even more exciting. So I don't think businesses will really, in the future, have a choice to not use. We are at that stage, guys. They fought us for a long time. Now they are at a stage where they have to adopt the technology in various ways.
Alice, go ahead.
Yeah, I agree with everything that's been said, and I don't think the companies want to be exposed, but there is a sort of FOMO and hype around it. So there is this feeling, especially in the last couple of months, that they don't want to miss out and they want to be part of this, and there are a lot of requests for partnerships and integrations.
We haven't talked here about these treasury companies in which there is a totally different story. But that's a macroeconomic story and a story about the, let's say, the dependence of the debt as a state and government level, which should push businesses towards long-term holding of fiat.
There it is.
Against.
Everybody wants to pet a cow. Almost nobody wants to grow one, but everybody wants the steak. It's pretty much the same with what we are talking here. Almost all the companies want the benefits, but not, or just a few of them want the exposure that it comes to crypto and volatility.
Okay, thank you. I think we have to kind of talk about stable coins, I think, in this panel. So my question is, what are the common misconceptions about stable coins in businesses? Alisa, please.
Well, if I can mention a couple general misconception in crypto payments, which would include stablecoins also. One main misconception is that by adding an alternative payment method to a website, that it's basically cannibalizing the other payment methods. And that's not really the case. It's actually adding value. It's a different demographic. It's also usually different type of users. So that's a misconception. Another one would be a typical one, transparency around the payments in blockchain and in crypto. Oh, it's not transparent. Oh, it's related to something with dark market or something like that. And no, that's not really how it works. We all know that there are transaction monitoring tools right now if you're operating under the AML regulations and in Europe or US and other geographical areas. So we know exactly what's going on chain, and we also can trace back. We might not know to whom each wallet belongs, but we do know what's going on more or less. So the transparency, definitely a misconception. Another one, and the last one that I would mention is, oh, but crypto is too small, it's too small of a market. And yeah, okay, I agree, maybe it's less than 1% of the total volume out there, but if we look at the market cap, it's over 2 trillion, it goes up and down, so we all know that. But we know that there are more than 600 million wallets out there with funds. So it's definitely growing, and it's only here to grow. So that's another misconception. And one more, if I can add, is the regulatory environment. The tendency to think, oh, crypto, unregulated, there's some strange things. And no, we all know that in Europe we're having a pretty strict regulatory environment coming in that kicked off recently. In the US, in most states also. So there are rules that are being followed, there are processes that are being followed, and that is also one misconception in general in crypto payments.
Maybe, from my opinion, one of the biggest misconceptions about stablecoins is that they're only used for trading, which I think it's true, right? Mostly stablecoins are used for trading, but what I'm super excited about to see in the near term, and by the way, that's why with X-Money we are launching 3 MiCA-regulated stablecoins, one euro-denominated USD, and then another one which is RON-denominated stablecoin. Will be interesting to finally see, with the regulation in place, stablecoins being used for daily economic activity and in closed-loop systems within a certain group of companies or banks. So that's another part. Probably, in any case, Felix will know much more about this aspect. But definitely, it's not only for trading.
Yeah, true story. The main misconception is putting in the same basket stablecoins with Bitcoin or other high-risk assets. And coming back to exposure, I was thinking that exposure is not coming from only putting in your treasury crypto, but also is coming with operational exposure. For example, we have crypto accountants, very good ones here into the room, is coming also with this operational part that you are also exposed to other types of procedures that you already used in your day-by-day activities.
Not to mention key management and so on. Yes, so going back to what Daniel was saying, people are not aware that a relatively important part of I think that these days crypto transfers through stablecoin reaches some sort of $3 trillion per year or about there. And it's true that a lot of it concerns transfers between exchanges, because people are using it to move funds from A to B. But also, there is a very important case, or there are at least 2 important cases in which stablecoins are used. One is, for instance, if you read about Visa, Visa has done, I think, last year maybe $4 billion of trades which were settled in stablecoins. So this is a use case. And another use case is when it comes to cross-border transfers. And that's like, again, multi-billion dollars of trades.
Thanks, Felix. And so we're out of time, but maybe really in one word, what still needs to improve for crypto to become a default for everyday businesses? But really briefly, though.
I will start again from stablecoin, and I will state that stablecoins are the good gateway for fiat into going into crypto. And I will also say that for the moment, the fiat part knows to, let's say, pamper the customer better than all the crypto industry does, because of this you will lose your funds, beware where you put your backup and so on. So in any case, I think that long term, we will not talk about crypto and banks and fintech and whatever. There will be a single category whatever will be, which will include all of them. And at that point, very likely, key management and all this will be hidden behind the blanket, and we won't care about it.
Thanks. Marius?
Something that wasn't covered, at least in this panel, democratizing investment through Xtalks, RW assets. I think it's a very strong use case and is giving access to a lot of people to invest with very small amounts, just to start.
Daniel?
Yeah, no, I agree. A lot of really interesting things. No, but for me, the most the most exciting thing that keeps me up at night in the next period is how we're going to use this amazing technology with AI. And that's just going to blow people's mind off in the next period with stable coins, with tokenization, with agents and everything. So it will be, I can't wait for it.
Alyssa, 2 words, please.
Yeah, nothing really to add. They covered it all, but basically it's a very strong use case. It's only growing, and I'm very happy to be part of this.
All right. Thanks so much, everyone.
Thank you. Ladies and gentlemen, hands together for all our panelists, our moderator as well. Again, and lots of insights, perspective, isn't it? It's all about those perspectives. And again, regardless of whether you agree with them or not, good to hear them. Again, it's sparking perhaps curiosity and a question and conversations leading on to helping you again make better decisions as well. We move on now to our next session now, all about what crypto companies need to report under the new CARF rules. So this is really exploring those new CARF rules and understanding them again to help you benefit in the right direction as well. Let's welcome to the stage all our panelists and our moderator as well. Please welcome Madalina Badescu, Bogdan Filimon, Luca Dejan, and our moderator, Krina Take.
Hello, everyone. Today we are cutting through the complexity around CARF. Starting in January 2026, crypto platforms face a new reporting reality, and our panel is here to map it out for us. My name is Krina Take. I'm the General Development Manager at the New and Emerging Technology Federation, and I'm joined by Madalina Badescu, Tax Director at Jasil, Bogdan Filimon, who leads the crypto accounting team at Jasil, and Luca Dejan, partner at Vidilo Group. So starting with January 2026, the national regulator provides new reporting obligations related to the crypto assets market. In this context, Madalina, could you share with us the legislative framework that has a significant impact on crypto platform operators?
Hello, thank you, Krina. It is nice to be on this stage again and to have this opportunity to share with you the new legislative framework in terms of CARF. So, starting with January this year, the Romanian Fiscal Procedural Code has been updated with this new legislative framework that has been transposed in our legislation from the European Directive DAC 8. Which means that starting with 2027, platform entities should report many information about their users. Long story short, these platform entities that would be reportable entities for the Romanian Tax Authority will be one of the most important player from this stage, because would be those entities to gather important information related to the users. So when I am saying important information, I am referring to tax residence, tax identification number, value of transactions performed through their platforms, type of transaction, and so on. Sorry about that. Furthermore, most probably you are wondering now which kind of services should be reported by these platforms. Oh, well, I would say that all of them, because normally the Romanian Tax Authority would like to understand the flow of the income derived by users, clients, individuals, or companies through these online platforms. And now I'm referring to exchange services, to payment transfers related to crypto, crypto administration, and so on. Our company is working with such platforms for years now, and we managed to provide services to them and help them and support them through this new legislative framework. And here I have my colleague Bogdan with an extensive accounting expertise that could provide you some examples of our services and of our clients. Thank you.
Thank you, Madalina. Thank you, Crina. Yes, over the past month, we analyzed our clients' portfolio to identify which companies should report under the new regulations. We identified some major categories of crypto companies that should report. Some of them most important are centralized exchanges, crypto assets service providers, platforms of payments, and also staking and lending platforms. The principle we used to identify these companies was if a company have crypto assets and have their clients' crypto assets in custody, and they are doing transactions on their behalf, they should report them. Thank you.
Thank you, Bogdan. Indeed, Bogdan, as I said earlier, has an extensive expertise from an accounting perspective and also from a tax perspective if we were talking about statements to be reported to the Romanian Tax Authority and so on. And I would say that he is making the most important process in our company related to crypto assets platform. So thank you, Bogdan.
Thank you.
Thank you, both of you. So the legal skeleton is clear now, but Madalina, when you look at what lands on the desks of the finance and compliance teams, would there be any additional aspects to be considered by these reporting entities besides gathering all the required accounting and tax data?
Yes, Karina. Indeed, a part of this specific tax and accounting aspects, in my opinion, any platform entity should perform or should have a well due diligence within the company in order to ensure gathering correct and complete information on these reportable users. So, in brief, each platform company should have a strong IT system able to gather this data. Furthermore, I would say that another important aspect would be to have traceability between the information collected through the Know Your Client file, also the information collected from anti-money laundering procedures, and all this information gathered should be aligned in order to to submit an extensive report to the Romanian Tax Authority, and that extensive report to be correct, because most probably the Romanian Tax Authority will apply some fines, but we could discuss after about these aspects as well. I would like to kindly ask Luca to share with us some information, because another important aspect to be observed is that crypto asset reporting framework is strictly related from a tax perspective, and MiCA is the legislation framework provided from a legal perspective. So these two aspects are separate, but are working together to create a well-defined legislative framework. So Luca, could you please provide us some information?
Okay, thank you very much.
Thank
so I'll have my perspective as a lawyer. I'm not a tax or finance guy, so I'll just leave you my approach towards legislation. First of all, okay, now we have these new CARF rules, which basically oblige you to report financial data towards the public authorities. But before that, you need to take some steps backwards, because in order to be authorized as a crypto asset service provider, or CASP, you need to have the license in accordance to MiCA. So before filing any reports to the public authorities, you'll need to have the MiCA license for the CASP. So right now we are on the final period of the grandfathering period. So starting from 1st of July this year, you won't be able to function legally without MiCA license in Europe. So 5 or 6 years ago, crypto industry was like zero legislation. Right now we have KYC regulations, AML regulations, MiCA authorization, CARF reporting. You need to also observe EBA and ESMA guidelines. So in my opinion, what is the most important thing that you should remember from this panel, at least, right now, without proper assistance from financial, legal, and technical point of view, I think it is almost impossible to function properly. So you'll need to have the proper persons around you who can provide you tax and financial advice, legal advice, and technical advice, because otherwise you'll get into a illegal area which can lead to fines which be maybe up to tens of millions of euros. So the most important thing that you should remember from here, in my perspective, first of all, right now, crypto is in a heavily regulated area. It's not no man's land anymore. It's heavily regulated. You need to observe a lot of obligations. Second of all, I think you will need proper assistance if you are a CASP. If you're a CASP, if you don't have proper assistance, I think you won't be able to digest and respect all of these obligations. And the third most important thing is what I see, in my opinion, with respect to the CARF rules, crypto is not in the shadow area anymore. If the public authorities across Europe want to know the data about your transfers, you need to be prepared and you need to be aware that this data is going to be processed by European authorities, also by both local and European authorities. So you just need to be aware that as long as a user you are using a crypto exchange or you are a client for any other CASPs, just be aware that your data will be transmitted to the public authorities and the public authority will know about your transactions. So be aware, and also as an individual, you should start preparing yourself and preparing your financial statements and financial audits in the crypto area, in the crypto industry, because the era where you can hide yourself from the public authorities, I think it's almost coming to an end.
Thank you all for mentioning that. I want to go a bit in the consequences part, and I want to ask you, what are the non-compliance consequences that crypto reporting entities should be aware of?
So, a failure to submit the report on an annual basis, or failure to submit entire data or correct data, would for sure trigger some penalties to be imposed by the Romanian Tax Authority, which would be a bad thing for you. So, As per the Romanian Fiscal Procedural Code, there will be several fines applicable in each case, and those would be ranging from approximately 4,000 euros to 30,000 euros. And I would say, as I said earlier, it would be very good for those platform companies to perform an internal audit, to discuss with the internal team in order to provide them trainings in this direction, and maybe to have a separate team, an external team, to support you in this process in order to avoid any aggressive approach from the Romanian tax authority, any penalty, and so that you could be able to develop your business activity and continue the activity in Romania.
It sounds for me like a clear warning for everyone in
Yeah,
the room.
indeed.
So we have right now on the table the following. We have the framework, we have the operational challenges, and we have the consequences. But I want to end up in a more actionable way. So I want to ask you, what practical advice would you give to reporting crypto companies to ensure a smooth process until 2027 and beyond?
Yeah, most probably here Bogdan could say you more. I would first say to start reporting accordingly in order to avoid any penalty, to gather a team of individuals highly related to this zone, tax, accounting, legal, and IT. In order to be able to ensure a proper collection of the data and have a positive position in front of the Romanian tax authority. Bogdan?
My main recommendation is don't think of DAC8 and CARF as just another reporting task. You should think business-wise as a new project. Make sure that if you're a larger company, make sure that you have a team or a working group that should supervise that process. And if you are a smaller business, you can also externalize this process. You shouldn't do this all alone. You shouldn't do this all by yourself. I don't know, maybe another advice, make sure all systems are ready, make sure you collect all the data, and also you can check where you stand now. If your data is okay, if you collect all the data you need to report.
If I can add one short thing, just from a lawyer's perspective, I can tell you for sure that early compliance is cheaper than litigation.
Indeed, yeah. And you could pick us to support you in this direction. Yeah.
So now we close the loop. We have the framework, we have the challenges, we have the consequences, and we also have the path forward. Thank you, Madalina. Thank you, Bogdan.
Karina.
Thank you, Luca. If you have any questions, you'll find us around today and tomorrow.
Thank you all.
Thank you.
Thank you.
Right, let's continue right now. I say to you one word, I say to you Mika, it's two words, Mika, and I say to you regulation, three words, Mika, regulations and license. Put all that together. I think you know what it means. The next gentleman here on stage, he's going to tell you what it all means and what you got to do about it if you haven't already done so. What does all that mean? You'll find out in just a second, ladies and gentlemen. Let's welcome back to the stage right now, Luca Dejan, who deserves a round of applause. There we are.
Thank you. Thank you very much. So, hello again, everyone. My name is Luca Dejan. I'm partner at VD Law Group, which is an international law firm providing legal assistance in the crypto industry for more than 7 years. So, I can say that we have a lot of expertise in this area of practice, and I'll be more than happy to share it with you. Some insights today with respect to the applicable regulation that will come, the applicable regulation that is already in force, and what are the upcoming trends. So first of all, I would like to present my company, which is listed in Band 1 in FinTech by Chambers and Partners, which is one of the most reputable firms, directories for law firms in the world. So to start off, everybody when he hears that we are lawyers says, I hope I will never need you. This would be applicable in the crypto industry maybe like 7 or 8 years ago, but starting from 5 or 4 years coming to today, it is almost impossible. I'm sad to tell that, but you will need a lawyer as long as you are a service provider or a token issuer or you are an actor doing business in the crypto industry. For sure, you will need legal assistance. Why? Because 5 years ago, there was like no rules. Everybody was doing whatever they wanted. So we have no rules, we can do whatever we want. So there's no market manipulation, there's no consumer protection, there's no public data that we need to show on our platform. So basically, we can do whatever we want. So 2 or 3 years later, MiCA came in force. And MiCA was copied basically from the financial markets legislation. Basically, the Europe approach was like that. Okay, so we don't have any regulation up to the moment. Okay, so let's take the financial market regulation, which works, and put it into the crypto industry. What that means? That means that we started from 0 to having like more than 15 to 20 applicable regulations in the crypto industry. So I guess it will be pretty hard for a crypto asset service provider to be compliant without proper assistance, because your job as project managers is to make money for the project, not read all the day European regulations. So, as long as your name it's on this panel. So if you're doing an activity which is related to something you see on the board, most likely you'll need a crypto CASP license under MiCA. MiCA regulates 2 very important things. One, licensing for CASP. So if you're a crypto exchange or performing payments, you will need to be authorized. And by the way, the grandfathering period will end on the 1st of July. So you have a couple of months left to get a MiCA license. Otherwise, you won't be able to provide services anywhere across European Union. The good part is, as long as you have a license in one European country, you can passport it all over Europe. So you need it in one place across European Union, and you can passport it all over again. The second one is the token issuer. If you are a token issuer, you really need to be aware of the regulation. There are 3 types of tokens. 2 of the most important ones are the stable coins, which are the EMTs, electronic money tokens. Is the token that maintains its value by reference to a currency around the world. So USDT or any coin which purports to maintain its value by reference to the euro or another currency needs to be authorized as an EMT. Is the IRT, is it asset reference token, which is a token whose value is referenced by a value of another asset. For example, if I make a token which has 1-to-1 value with gold, it needs to be authorized as an ART. So AMT and ART needs to be authorized. And we have the third category, which is the other tokens. If you are a utility token, you don't need to be authorized, but you need to have a white paper which is compliant with MiCA. And from our perspective, I can say that the public authority, when you are issuing the white paper and submitted it to the financial authority in the country you'd like to issue it, they will check if it is a security or not. And this is why it is very important to have a legal partner around you, because first of all, you need to check, is my token a security? Because as long as my token is security, MiCA is not applicable. We have the financial market regulation, which is applicable, and MiCA is not. Okay, if it's not a security, maybe it's an EMT or RT. As long as it is like that, you will need to get approval. You're not allowed to use it until you have approval. And when talking about RT, I also, when we are talking about Mika, I like to pinpoint one very important thing, and which in my opinion is a misconception. People say USDT is not Mika compliant, which is, my opinion, false. The MiCA regulation does not regulate the token in itself. MiCA regulation applies to the issuer of the token or the person who seeks it to admit it to trading. So USDT is not, the assessment is not made at the USDT level, but at the issuer's level. One needs to check if Tether is MiCA compliant or not, but USDT is not, you're not allowed to say if it's compliant with MiCA or not. So, in my opinion, crypto exchanges in Europe, because everybody is asking about it, because of course the crypto assets that are who maintain their value by reference to the US dollar are more popular than the ones who maintain to the euro. So, in my opinion, a crypto exchange can have a USDT on its platform because USDT it's not illegal in itself. But the CASP needs to observe some regulations in order for the CASP not to be MiCA compliant. So MiCA regulates all these things. So with respect to the white papers, I won't be very long. By the way, tomorrow we will have a workshop especially on MiCA. So if you want to get more insights and have practical perspective with respect to MiCA, you can come and you can register for our workshop in MiCA. So very important right now, this is the most simplest thing under MiCA. So if you have a token and you want to issue it to the public, you need to have a white paper which is filled in by reference to the rules under the MiCA regulations. You will need to observe some things, and it is very important. You cannot just write it down in the white paper and say, okay, issuer's identity, legal status. Okay, we have the company details. By the way, you are not allowed to issue any token without the issuer's identity. That era is gone. There's no more ghost crypto. You need to really write the rights and obligations of the token holders. It's not just like basic stuff and everybody's copy-pasting from other white papers, because you are responsible for that. So you will need to have proper guidance, because otherwise you can get fined and you can have, you as an issuer, you are taking all the risks. So as long as this part is not filled in properly, you are taking all the risks for it. So this part should be prepared with the help of at least a technical, a legal, and a financial advisors in order for you to be protected. Because once this part is done, your position is protected and you are safe under MiCA. Right now, one thing that everybody's talking about MiCA. Now we have MiCA authorization, MiCA white papers, but we are also, it will be funny what I will say, also providing legal services for meme coins. And you'll say, who's going to a lawyer for a meme coin? And I'll tell you for what? For the IP. Because everybody's looking at the newest regulation, and they say, okay, we need to comply with that. But everybody almost forgets the basic regulation. So we had many cases, and we're helping clients all over the world registering their IP with respect to meme coins. And we had several occasions where our clients managed to register the IP with respect to a meme coin, and we did deregister the other meme coins that were using the name illegally. We have deregistered them even from DEXs. So this is one thing that should be taken into consideration. Okay, I told you MiCA it's important, but don't forget the basic stuff. If you're dealing in the meme coin area, or of course if you're doing as a cosplay or a professional things, also it should be registered. But bear in mind that also for this funny part of the crypto industry, you should observe also some legal obligations for your own benefit. This is like a stimulation for you to do not forget about MiCA, because MiCA comes with rules, but also comes with sanctions. And for example, for natural persons, sanctions can be up to 700,000 euros, but for companies, they can go up to 20 million euros. So starting from 1st of July, it won't be some joke, okay, well, we're forgetting about MiCA, we will see in the future, we're starting the business, we don't have money for compliance, we're doing it is as it is right now, we'll see the compliance later. later it may be the end of the project. So just bear in mind that MiCA comes along with a lot of sanctions that should be taken into consideration. So, and you most probably will forget 80% of the things that I will say right now, but the most important thing is you need to understand that we are in a heavily regulated practice area, and crypto is no man's land anymore. So just this is, I think it will be the most important thing that should be bear in mind. This is our company details. If you have any questions, me and my team, we will be happy to answer it to you, even if it's strictly crypto related or basic legal advice for your projects. We're more happy to assist. My name is Luca Dejan, and thank you very much for your attention.
Okay, ladies and gentlemen, let's crack on. Let's move on now to our next session, all about, in fact, marketing, CEX marketing in 2026. What does that look like? What does it mean? And how can you make better decisions? We'll find out all about that in just a moment's time. Let's now introduce all our panelists and then our moderators as well. Please welcome to the stage Mr. Ionuț Vulceanu, Marius Mora, Ignacio Aguera, Franco back to the stage, and welcoming back to the stage once again a moderator who's going to helpfully shape this conversation forward, Mr. Itai Elizur.
All right. When the agenda came out, I asked to moderate this panel. They said they had someone better for it. And he's stuck in an airport, so you guys are stuck with me. And I'm very happy I was able to get this panel. So again, I'm Itai. I'm from Market Across. We're a global marketing and PR agency. In full disclosure, we represent Bybit's global PR account. So just to be sure about that. Perfect. Before we start, I'd love if everyone could really briefly present themselves and what they do, even though a few of you have already been on stage today. But yeah, let's do it briefly and then we'll get straight into it.
Hello, everyone. Thank you for having me here. My name is Ionuț Vulceanu. I'm marketing manager at Bybit, dealing with marketing in Central and Eastern Europe.
Are you tired of winning? Marius Mora, CEO and co-founder of Tokero, and usually CMO.
Hey, my name is Ignacio Aguirre. I'm the global CMO for BitGet. It's a pleasure to be here.
Perfect. All right. So the panel here is talking about centralized exchanges, marketing in today's realm. So first of all, I want to start with the term centralized exchanges. Today, do you guys feel that the difference between centralized and decentralized, if that's on the application layer for sure, does that matter for users? Is that still an issue that you guys think is a major concern for users, or they're just looking for good user experience, they're looking for volume, they're looking for all of that? So is SEX versus DEX still an issue?
I think they're combined somehow, and we're layering the same users. You know, they probably use a DEX as well, they probably use a checks as well, so I don't think we're competing right now.
Yeah, for me, I think definitely the battle for us, at least at BitGet, is over. We became a universal exchange, and we pretty much brought
centralized exchange, decentralized exchange, and TradFi under one same roof. But I think that the moment that it doesn't matter is when it's going to come with more adoption. I think we're still talking a lot about technicalities and all these tech big words that people don't actually care about. So I think eventually it should all merge because at the end people don't want to have 30 platforms, right? They just want to have one place where they pretty much trade. So I think that's where the future is going.
Yeah, usually the users are looking for the next horse, aka hot token, to bet on. So it depends probably where they can find this token. It's on a decentralized exchange or a centralized one. At Tokero, we are a little bit different because we are integrating. In behind, we are working with integration. We are integrated with all the major centralized exchanges, including Bybit, but also with a few decentralized exchanges like PancakeSwap, Uniswap, and Radium. And this is giving us the possibility to offer the new tokens into a very simple UI UX, quite similar with what the users are expecting from a centralized exchange.
Perfect. So we're of course in Europe that introduced Mika not too recently, and we're here with well, at least there's two representatives from big Chinese exchanges that also have European operations. Mika is good for institutions coming in, and you do see money flowing in. But has it done good for retail as well? As in, isn't it making retail adoption a bit harder, especially for exchanges?
Absolutely, absolutely. More secured, people trust to leave their funds there and trade more. It's more regulated, more secure. They know what's happening with their funds. So of course, retail, it's very happy to use regulated exchange. Yeah, definitely.
Totally agree on that. But few days before, I was trying to think about something smart to say today about how a marketing campaign can provide very good results. But what it came in my mind even today when I was coming here, it's that probably the best marketing campaign is called Fear and Greed Index. And I think this summarizes a lot of what we can talk about marketing stuff.
All right, perfect. So I want to talk a bit marketing. I think crypto for years and blockchain is more of like, I would say, a movement or of course a lot of assets. As a marketer, I've been in the space for a long time. I think the first 3 or 4 years, none of my clients had CTAs. They didn't have a product. So now we're entering the product stage and we're getting into user acquisitions and funnels or whatever. Today, when you're an exchange, are you mainly trying to, I would say, get new people to join the crypto revolution, or trying to maybe get people to open an additional account or move from another exchange? Where's most of the marketing efforts today? Is it growing the ecosystem or getting the whales to convert to you?
Let me do the FIFA move.
Yeah.
Okay, so yeah, we're focusing right now, at least in Romania, Central Europe, and the region I'm managing, on bringing new users which never heard of crypto or they never traded something, and we're doing that through events, for example. So we're going and we're targeting events like, for example, we did in October, Sub Auto. That's an event in Romania happening for 20 years. It's a car show. No crypto exchange ever made an activation at a car show. So we went there with a Lamborghini and a Dacia to showcase exactly how the trader's life is. So today you're in a Lamborghini, tomorrow you're in a Dacia, or the other way around. And we had a very good result on this event because we were targeting non-crypto users, and we came and showed them a card with one of the biggest cashback in Europe, and this actually brought a lot of users. So yeah, we're looking in places where we haven't been looking before.
Yeah, for us, it's. I think you need to think about it as a funnel. Obviously, the low-hanging fruit is definitely the people you all know that they're already trading. You want to bring them here. So at the end, it's. We're eventually being a commodity. You can move your funds from one to the other. But what you're gonna do is, the trust. You need to build this trust for people, and while getting the people who are already trading, you want them in your platform. But still, you need to do the top of the funnel. So we're still very early. I think when I I mean us, I think sitting here, all our Twitter is crypto Twitter, all our Instagram is crypto Instagram, so you are in an echo chamber where everything for you is natural, so you feel like everyone is the same. I was in a university not long ago, like 3 months, doing a keynote, and basically when I asked the room, which was 1,000 people, how many own crypto, it was less than 5% of the people. So this is young generations, so sometimes we are kind of biased because we're always talking about crypto, always like going crazy on crypto, but still it's very early. So I think there's like a big education factor that we need to keep in mind because at the end we're bringing like a financial solution to these people. So I mean, you need to balance it in a good way.
Thoughts? Yes, probably we need to be focused also on retention, because if you have a client that is satisfied with your services, you need to keep the client into your platform. But also we need to be always looking about new customers. And talking about the results on campaign right now, I think here the term result, it depends a lot on your stage as a company. If you are an early stage company or a well-established one, and I'll tell you why. Because, for example, when you are investing some money into a company, the ROI probably it's very different for a startup than a well-established company. When you are a startup, probably you are looking for an ROI like tomorrow or in the next 1-2 months. But maybe when you are a more established company, you look at an ROI, I don't know, in 6 or even 9 to 12 months.
So let's talk a bit about airdrops. Airdrops seems to be the major mechanism of marketing or user acquisition in Web3. I personally feel it's very innovative for Web2. I think it's going to be interesting to see SaaS companies just airdrop licenses or whatever. But in the Web3 world, it seems to have brought also a lot of noise. So it used to be one of the reasons to do airdrops is to maybe get big exchanges to want to list you or to get the first kinds of user base. But now it seems a bit like doing business with Trump. It looks good, but in the end, it doesn't end very well for you.
Airdrops actually bring tourism, but real campaigns with real features bring habitants, that stay with the platform.
So that's the thing. I'd love to, as marketers, with a few years already of retrospect, I'm sure that there's individual cases, but today when you look at these type of different mechanisms, do you find it to be positive marketing tactics or maybe a bit too much spam for the system?
At least for me, I think it's not the right way to bring the people. I mean, we have seen, for example, last year with risk-taking platforms, people were waiting for the token drop. Once the token drop was done, everyone would move, all the liquidity would move to the next platform. So, I mean, this is a way to put yourself out there. It could be like a more of a branding and awareness play, but I don't believe that it's the right way.
Yeah.
Yes, we're talking that we already have experience with this kind of marketing, and it depends a lot also on 2 things. First of all, the timing into the market, because I know some projects that perform very well only on airdrops, clickers, low-value users, and some projects that didn't perform very well. Talking very specifically, we had this type of campaigns last year, and unfortunately for us, they didn't pay very well, so I wouldn't recommend this kind of marketing campaigns. At least, once again, maybe it's a very good timing into the market, but you can do something very specific related to your objective, but overall, all of us need, at the end of the day or the month, you need the revenue and you need paying users.
All right, cool. So how do you today, when you try and, let's say, find new users, how do you try to market to them? I think there's a lot of discussions about trying to maybe market directly towards different wallet users. Of course, there's the crypto scenes and the events or whatever, but what are some innovative things that you have maybe already deployed? I don't want you guys to give your secrets yet, but how can we as crypto marketers try and, I think, of course, there's a lot of Web2 core marketing that needs to be done. Today, we in the agency are talking to our clients about SEO and geo SEO and all these things, but what's the next airdrop mechanism? What's the next way to get new users into the space?
So I think first
Pictures of digital dogs is not it, by the way.
Yeah,
That's what you think it's going to be.
So I think first of all, we need to make the apps easier for the users, less number of clicks, easier onboarding through KYC, and smooth client journey in order to bring them fast. Because a lot of people, okay, they see us at events, they check the website, but then they stuck on KYC. It takes too long, so they just go home. So in order to keep them, we're all the time focusing on making the app better, simpler, nicer buttons, less clicks, and I think that's a very good way of attracting new users.
Yeah, I think I couldn't agree more. I think the fact that also understand what people are looking for, because I think the term just like crypto platform, no one searches for this, but people are finding, hey, I want to like investment. So SEO is definitely a huge thing. And I believe that that you need to be creative. I think sometimes we're lacking this creativity and this storytelling, and the narrative is just like, I was in a panel just an hour ago, and I was saying that people are, yeah, this is like a blah, blah, blah on a blockchain, on a layer 2. That's not the way to sell it, People just want to know what's the value. And I think we need to start telling stories and make it more accessible, because that's how people, that's what sells, Be able to tell a story how can you kind of align something that you're doing towards what are the benefits. So I think when you find this formula of being able to tell a story that people care about, I think that definitely hits the spot.
It's wonderful that we don't fight each other, we don't debate too much. We are totally agree on those strategies.
Where is it best to try? I'm kidding.
what I can add here, it's about the product and the utility. I think what can attract much more the users are the utility. And if we can come here not with just an vitamin, but more than that with an aspirin, something that the client really needs, probably the conversion will be much easier and more positive.
Yeah, I think I really agree with what you said, Ignacio. I think that for sure exchanges have been a bit commodified. It makes sense. Today it's hard to maybe go and say what is the core difference between A, B, or C, and then why it becomes an actual connection between a human and a brand. So people will go and put their money in a brand that they feel that they trust and they want to be connected and they have favorites to. I think a lot of action has now been done for, I would say, above the fold, above the, trying to get a lot of attention. Brands doing a lot of things around, I would say, sports partnerships, a lot of things around that. Do you think that it's healthy for crypto marketing to be so aligned, let's say, with betting marketing and all these different things? So we're getting a lot of attention, but is it maybe the right path to it? Because I don't see interactive brokers going and, doing all these different things. So I feel like we in the crypto market are looking for a lot of attention, but I'm not sure if the noise we're creating is the same of the users we say that we want. So we say that we want, institutions, but we're doing airdrops. We're saying that we want this. So isn't there a bit of a disconnect between the main marketing tactics today and the demographics we all are saying? And I'll add another line to that. As exchanges, all you want now is AI agents trading on you? Actually, isn't it not even marketing for humans?
Yeah, I can say something very relatable with what you said, that traditional institutions are not making airdrops. We have a very, very specific example here in Romania. We have a very traditional bank. It's called Banca Transilvania. I think one of the biggest one from the country. And they have a kid, a fintech, very similar with Revolut. It's called Salt Bank. And the traditional bank didn't make any airdrops, but this small kid, the fintech, did something relatable with an airdrop. So we are coming back to the utility. I think when you don't have so much utility, you don't have so much market fit, you need to make much more noise. And that's why I think most of the startups in the crypto industry are doing this kind of guerrilla marketing, airdrops, etc., just because they don't have yet market fit and utility, unfortunately.
And it's about awareness, People need to see the brand 10, 15 times when they're driving in the city. They need to see it on a billboard. They need to see it on a car. They need to see it on a football stadium. They need to get used to the brand. And when they come to Crypto Expo Europe and they see our stand there, and they, I know these guys already. Let's see what they're doing. Okay, let's scan that QR. Let's sign up. Let's see what the app is about. Okay, let's trade. So it's also awareness.
Yeah, and I think when you make this connection about the digital and the physical, sometimes when they see you in an event, it becomes more real. You're saying that traditional companies don't do airdrops, but I mean, let's be honest, banks want to get you to open an account and get you a toaster airdrop or a microwave. You know, they try to bring you up with an appliance for your kitchen. That's their airdrop.
Yeah, that's
so they, in some sense, are doing this stuff. But I think that attention, we need to be out there. As I said, it's very yeah, we're still very early, but we are. So the fact that we need to connect with people in an emotional level, because you talk about sports, I mean, sports are.
I love sports, by the way. I'm not saying it's a bad thing. It's just
no. But for example, we work with La Liga Española, right? So that's something that people are very passionate about. So it's a way that you can share your brand in something which has like a lot of heart, a lot of sentiment. So it's about brand building, I guess. I don't think it's bad that we're out there. I think we need to be more out there.
Perfect. We're getting signs that we need to cut it a bit short. Lunch is going to be starting. My kind of last question for you, and specifically, I would say we're in Romania, we're in this region. We see a lot of interest. Also, some of the biggest exchanges in the world are here. Again, I don't know if you understand, we have the head of Bybit Europe here, we have this global CMO BitGet, we have local projects here. Why is this region, specifically in the area of, I would say, interest for your company and in general for the market themselves? What do you see interesting in this region?
First of all, there was a gap in the market. There was a missing product, a card missing from Romania. So we came in and solved the problem. So the user acquisition was super organic and very easy to grab those clients because there were no other major crypto cards on the market at this moment. So we solved the need.
Just a market gap that you saw in the market. Yeah. What about you guys? When you look at this region of, I would say, the Balkans or Central Eastern Europe, what's the opportunity you guys see here?
I mean, I think there's like the adoption is there. It's always been, these countries have always been like high on tech and very advanced. So, I mean, early adoption definitely happened. So it's a matter of going to increase the audiences. I mean, we see that, at least from our side, we see a big adoption in the region.
For me, I find it very funny for a lot of people today who are protesting and asking for communism around the world or socialism. Please see the user adoption and then the country's socialist or communist history. You'll see that almost every nation who's living in communist regimes actually really want their money hold it by themselves and not connected to their nation. But I won't get into politics.
This is I wanted to say that in a local market, first of all, you need to, let's say, analyze the behavior of those people related to money. Our relation with money here is more emotional than rational one. So it means that what we can do to attract customers, bring very hot projects in maybe very hot period of time. I think this is one of the best strategies. You can't have it every day, but it is what it is.
Perfect. So we're going to cut it a bit short for everyone for lunch. I will ask, especially also our I would say, more global guests, if you guys could leave a few minutes. I'm sure people were going to want to talk to you. Again, not a lot of times you guys have such high ranking officials from such leading companies in the space. So I urge you to pick their brains and learn a bit more. And I want to thank you very much for joining us on stage. And I think, guys, lunch is going to be served now. And there you go.
Ladies and gentlemen, hands together for Marios, Ignacio, and Itai. Thank you so much, gentlemen. Wonderful. Right, ladies and gentlemen, guess what? That's right. It's time for lunch. We will be back here on this stage. We will be back here on this stage at... Should I stand here? All right. We will be back here on this stage at 2 o'clock. So remember, back here at 2 o'clock. But in the meantime, on the screen behind us, Bing X, which is our stage sponsor. You're going to learn a little bit more about what they're doing, what they represent, and maybe how you can get involved as well. So I'll leave you with that and join you back here on this stage at 2 o'clock for more Crypto Expo Europe 2026. afterwards. Again, everybody is here actually for those conversations. So you hear something, you're intrigued, you like to challenge what you've heard from people on the stage as well. Afterwards, grab a coffee, have a chat, and take those conversations forward as well. Again, because we're all here essentially to, hopefully, at the end of these 2 days, to make better decisions, what's right for us, and how we can move forward as well. Let's move on now to our next session, which is essentially the future of token models. Token models, how is that looking and how does that move forward, but also making sense of where things are right now and how they're going to transform or develop in the future as well. We're going to find out that and plenty more throughout this healthy discussion right now. Let's welcome to the stage our panelists and our moderator as well. Please welcome to the stage right now Mr. Bastian Choquez, Daniel Nitza, Adrian Codilashu, and Andreas Solterman, and our moderator once again, who will sit here, Itai, to take this conversation forward as well. There we are.
All right. Thank you for coming back. After lunch, everyone should be rested and calm. It's great. Please no snoring while you nap. So I'm Itai. I've been here already several times on the stage. I don't need to present myself again. Actually, to be honest, it's a panel I'm really excited about. I think there's a lot to talk about. I'd love if everyone of you guys could really briefly introduce yourselves and what do you do and how you got here?
Hi, everybody.
Yeah, you're good. Don't worry.
Okay. Hi, everybody. My name is Adrian Codilashu. I want to thank you for the invitation to this conference. I'm a president of CFA Society Romania. I have 25 years of experience in financial industry.
Hi everyone. First of all, thank you for being here. Way different vibe from last year. I think the crypto market's down, right? It looks like it a little bit. But we'll be back, don't worry. My name is Daniel Nita. I do investing, trading in YouTube. I started investing in the crypto market in 2016. And for now, I just do investing in YouTube for a while. I since 2018. I'm very excited to talk about the future of this industry. Thank you.
Cool. Hello. My name is Andreas Solterman. I'm the co-founder of Edel Finance, and we're building infrastructure for tokenized equities. Happy to be here.
Hello everyone, my name is Bastian Choquez. I'm a blockchain lawyer at Chiliz. Chiliz is a layer 1 blockchain where we issue fan tokens with sport teams and provide utilities for those tokens.
Perfect, and as I believe in full disclosures, I've worked with Chiliz in the past and are good friends of ours, so just so you know. All right, perfect. So the panel's about token models, and I want to briefly go into what brought us here. So we started in 2017, the good old ICO days, utility tokens, that was the model everywhere. And then tried to do security tokens. No one really liked that much. What's the difference between that and RWAs? I don't know, you guys tell me. Then there was NFTs, governance tokens, all these different models. Are they all going to survive? Do you think, what are our thoughts? And was it just a great way to build an infrastructure bubble that maybe isn't needed that much today?
I think the best parallel that can be made is with the dot-com bubble. In the 90s, any company that had a website had a big jump of its stocks on the stock exchange. I think the same thing happened. But on the other hand, Google went out from this dot-com bubble. So among those companies, there were some companies that became #1 in the world. So I think this is the situation also in the token space. I mean, most of them will disappear, but there will be some that really have utility that will be globally adopted. I think there are some use cases that have a lot of success. First, there is.
Let's try move it on. We don't need. We have a bunch of questions. Don't worry. Yeah.
Yeah, so I don't think most of the tokens will survive. I think utility in the end and blockchain technology will survive. I think the romantic phase of crypto is dead, and what comes next, it's the maturing of the market. And this is how maturing of the market looks like, with prices go sideways, no really hyped market just for a while, and then who survives this period will eventually win, and who wins most likely will have like a very big market cap. Like he said, after the dot-com bubble, a lot of companies like Amazon or others really survived and went up. A lot of people are really upset because the market it's like going sideways now, and for example, I don't know, Ethereum is not doing much, but it is doing a lot. But this is how the market matures, and sideways doesn't mean the market is dead. Gold stayed sideways for 15 years, Netflix stayed sideways for 8 years, and so on. So this is how it looks. Eventually, if the utility is good, the market is going to go back up. But to answer the question, I think the 99% of tokens will not survive.
Yeah, I completely agree. I think everyone in this room agrees that 99% of what you can find right now on CoinMarketCap will not survive. And I think it boils down to one thing, whether you will survive or not, and that's revenue. Are you able to build a business that people are willing to pay for, right? Do you have a service people want to pay for? If you do, right, then you're going to survive. You see
the biggest revenue protocols didn't have a token where they generated that revenue. Look at Pump.Fund.
Yeah.
Made a lot of money, hundreds of millions of dollars in fees, didn't have a token. Polymarket, printing money, don't have a token. So
they have a token now, Pump.
Yeah, they did it afterwards, but they were making a lot of money before there was a token. So to be honest, if you ask me what you want to do is business and revenue, how about making Bitcoin, USDT, and Ethereum fees? Like, that's a great way of making money.
No, I tend to agree, unfortunately, because everyone agrees, and it's not good when everyone agrees, but yeah, 99% of them are like, there is no demand for it, right? Issuing the token, it's actually the easy part, and I think that's why some projects like Pump Fund, you know, that's what they're trying to do. They're trying to actually launch a token because they want to bring more demand, but actually, is there really a demand for those tokens? I'm not sure.
So we live in a world where the president of the United States has 2 meme coins, he has a DeFi protocol, he has a stable coin, and he has 5 or 6 different publicly traded companies backed by these assets. Do you guys think this is a good thing? Like, can this end well for crypto, and has this maybe changed, I would say, the environment we talk about token models, is it a utility, not a utility? It seems like with Trump in the White House, all that discussion is, at least in America, out the window. No one's asking these questions anymore. This isn't going to end well, is it?
Nah, I don't think so. It can be a good thing, right? I mean, I don't think political approach of crypto is good in the first place. I don't think crypto should be affiliated with any political idea. Yeah. So even more in the US, I mean, it's not surprising, but of course we know how politics works there. Everyone is passionate about it, so it has to end up badly, unfortunately. I don't think it has been very good, and we've seen it already. Everyone was very bullish on having Trump in the White House again, and look at the market today. So I think people start realizing that actually maybe it harms the industry more than it benefits to it.
Yeah, you asked if it's going to end well. I think that at least after the term of this administration ends, that you will have some investigation what happened there, right? It was funny, there was the speculation on who Zach XBT wants to expose, right? Like 1 week ago. And me personally, I was thinking it's going to be something in this Trump environment, right?
On the Trump family, there's FBI investigations. It's not YouTubers investigating them.
Yeah, exactly. So I don't think it's going to end well. I don't think that it painted the market where we are putting blood, sweat, and tears into it as a good thing, right? If presidents are launching tokens and obviously benefiting a lot from that, right? So I don't think it's going to end well. On the DeFi side, I'm not sure. I think the USD1, what they are building at World Liberty, is interesting, right? Like a US first stablecoin, because Circle and Tether started in a time where stablecoins were in a mega gray area. No one really knew if they're legal or not. So having a US first stablecoin backed by this administration, I think it's very interesting. But everything else they've been doing, I'm not, I don't think it's good.
Yeah, there's two parts of the story in my view. There is Trump, of course, and his cronies, or whatever you want to call them, that are making like a lot of money, not only from crypto, but from the stock market as well, most likely. But it's
and
the other
prediction market. Yesterday, a few users, American-based users, knew to time the salt by the minute. So.
Yeah. See, so it's not only that, but it's a good part of as well, because after this administration will pass, probably we'll have clarity in relation to what crypto is, like for in relation to like the Clarity Act and the Market Structure Bill. And in my view, I think in 2 years from now, the crypto market is going to be unrecognizable in relation how things will look and how things will trade. And a lot of people will have a big surprise because you might see a lot of coins depegging from Bitcoin and so on. They already did, but in the negative way, but maybe it's going to happen in the positive way in the future. But it's a good part as well. So I don't see it all bad. I think it's something that should be done, and it's part of the maturing of the market overall.
I'm looking at the big picture. So he is coming from a wealthy family with investments in various sectors, like real estate, like media, now this in crypto space, and searching over the internet regarding nuclear fusion. I saw that also there might be soon a transaction. So I see it as a asset class in his family portfolio of assets. Basically, this means that they are believing in this asset class.
All right, perfect. Great. So moving to the next question. Everyone in Europe has been talking about MiCA for years. MiCA was released almost a year and a half ago, putting in a very, I would say, extensive framework. Some might call it limiting, but at least there is a framework. And people were very bullish about Europe's opportunity to become, I would say, the center of crypto, because at that point, a lot of other jurisdictions were very against. And then comes President Trump and just says, everything's open for game here in America right now. Does the current US administration, and I would say the current atmosphere in America, make MiCA almost redundant? Because if I'm a business right now and I want to try and set up, I can go to the wild, wild west, which is America, put some money inside US treasuries, and I'm good. Or I can go through the bureaucrat route with MiCA. What's going to happen? What do you think?
I personally like the US approach regarding innovation. The US leave the market develop and then came with the regulation. In Europe is the other way around. First came the regulation and then they hope the market will develop, which is not happening. So I think the US approach was the correct one. Leave the market develop, and then came with regulation regarding stable coins and now the crypto. Yes, basically I think they are thinking this could be a leap forward in finance and wants to be the first there. So in this way I see the involvement of the authorities and also of the classic financial institution in US, which are investing heavily in crypto.
Yeah, I think MiCA, Clarity Act, and all the others are different things on different continents in different countries, and I really don't think that the thing that's happening in US makes MiCA redundant. I think MiCA is how Europeans regulate usually markets very strictly. It is something, some say it's good, some say it's bad, depends on how they do regulation, but most say that Europe is highly regulated at this point and is not good for having new technologies here in European Union, and it's a critique to the European Union. I don't think the one in US makes this one redundant. This one is more strict, but defends in the end the citizens of the European Union of, I don't know, scams and so on. But look, US and Europe are way different. For example, the food, how they regulate food in US. Like, you cannot bring food from US to Europe because it's not gonna fit, because all of the things they have. So I don't really think. I think it's part of the process of how countries regulate. If you don't like it, you just leave basically and go to a different place where regulation is more clear or more favorable to you, and so on. So it's not a big deal, but you need to take it into account if you want to invest, if you want to trade, if you want to build a business somewhere. Clearly now it might be easier in US, even though there you need a lot of money to start doing stuff, and people don't understand that. Like in Europe, it might be like harder for regulation, but in US you need a lot of money to move things around.
But it is important to say that MiCA, again, every law can be changed, but MiCA is something that's, I think, a lot more foundational than what's currently happening in America, which is a lot of president orders or different acts. It's not the same thing as a law. So it's not like, here at least you know that there's clarity that should be a bit longer in its perspective.
Yeah, exactly. That's the main thing, right? Like in the US, in 3 years when Trump is out, then everything can change again. We might be able, or we might see another Gary Gensler type SEC chair who just wants to ban everything.
I don't think so. It's not that easy because they need to pass it through Congress. So this Clarity Act will go to Congress. If they agree on it, it's going to stay. Like, banks will have something to say. Crypto exchange will have something to say. Congress will be...
The major hurdle is if there's going to be $500 billion in stable coins, that means that there's $500 billion in US treasuries. And I don't see a new president going and say, let's get $500 billion out of my treasuries pretty quickly, because that's going to be the point of very hard to return.
Yeah, so I mean, whether we like it or not in Europe, if you want to serve European customers, you need to abide by these laws, right? If they're good or bad, I'm personally more on the libertarian side, and I prefer an open market where you basically make sure that innovation can flow more quickly and more freely. But these are the rules, right? If you don't like them, then don't build a product for European customers. But I don't think it helps Europe when it comes to global innovation. We're already lacking behind in so many different areas, not just crypto.
I think that's actually a good point, because behind MiCA, behind the text, you need to look at what's the mentality of the regulator, right? And as we were saying, in the US, it's very different from the EU. MiCA can be good or it can be bad. It depends how the regulator is going to interpret it and what they want to enforce. In the US, we've seen it with Trump. It's very easy to actually put some people at the CFTC, at the SEC, and then everything is changing, right? We don't really even need to change the law. Everything is changing. While in the EU, actually, you have the law, but politics doesn't have any power on what the regulator thinks and what the regulator wants to do. And for that reason, the regulator will always be looking for more compliance in the EU than they will be in the US. So actually, the text of MiCA is not bad. MiCA is not being redundant, but it's more the mentality and how we want to approach innovation, in my opinion.
Perfect. So I think a good follow-up question is, we're seeing a lot of interest right now with stablecoins, gold-backed, diamond-backed, whatever-backed stablecoins. Nothing new. Stablecoins have been around for a very long time. Why are we seeing such a resurgence right now in stablecoin interest? Is there actually real innovation being done in that space, or is it just because the Genius Act and people see a way that they can print their own dollars?
Basically, the Genius Act in US put the market on steroids in this regard. So now, being a legal basis for the operation of stablecoins, now the financial institution can use them. And I think this fact increased the usage, and we will see the usage of stablecoins increasing more and more. They are cheaper than transferring currency from one account to the other, and the transfer is instant. So cheaper way to make payments.
So that's what we're doing with crypto. We're just doing fiat faster.
In case of stablecoins, so far, yes.
Yeah, so stablecoins are the first killer app coming from crypto, and that's really a truth. It is ironic that is a US stablecoin like the dollar, basically, as the whole industry was like, oh, we are basically outside of the financial system. But it is what it is for now. It's not bad. Actually, it's very good. A lot of companies now are implementing USDC, USDT, and other stable coins. Other companies are creating their own stable coins and so on. It's easier to transact. It's lower fees, and people really want to transact more in this more and more in this type of stable coins than the US dollar or others, because, for example, in US, you still have to wait a lot when you send money for now. They're trying to fix it, of course, because the Federal Reserve wants to do transactions faster as well. But I don't think the stable coins are going to go away. I think they're going to grow even bigger. And I think the dollar is going to become digital. European Union is already having the digital euro that they're going to implement. We'll see if it's going to be on the blockchain or not, or it's going to be like a closed blockchain or so on. We'll see how that will go. This is good. Creates a lot of traction for the blockchain, especially for Ethereum. 70% of it's holding now in Ethereum. That means that chain is probably not going to die. And others as well. Solana holds a lot of stable coins. The tokenization of assets, it's coming, and it's not going to be one chain only. It's going to be multi-chain as well. So all of this probably will lead to a higher adoption of the blockchain technology and the utility that will come from the crypto market overall. And of course, this will be like companies that will have trillions, not only the ones from crypto, but the ones that are like, for example, Circle right now, that they did an IPO and their stock is falling. Probably those companies will do well because they generate a lot of revenue.
Yeah, I mean, you asked why is there a resurgence of stablecoins. I think number one is it's just a better product, right, than the normal fiat sitting in a bank account. Everyone who interacted with stablecoins before would never want to go back to normal dollars in a bank account where you have to wait for a couple of days, they can freeze your accounts, you don't have the composability, programmability. No one would go back, right? That's number one. It's just a better product. That's why I see it will not go away, right? The second reason why stablecoins are experiencing such a crazy hype right now is because for fintech applications, like PayPal, for example, who launched a stablecoin, like Revolut, who is most likely going to launch a stablecoin very soon, it's a money printing machine, right? They create new money, right? People are using it, people are sending it around. It's not about the fees, but these assets are one-to-one backed, not with normal cash in a bank account, but they're backed by treasury bills, right? So these companies can make free money by just holding the assets in the safest asset in the world, US treasury bills. Tether is making billions and billions of dollars every year with that. Circle, the same thing.
Tether's one of the biggest owners of gold in the world.
Yeah, and also treasury bills, they're number 5 in the world, right? And then you see what you said before, the US is not going to regulate that or kill that because stablecoins are the only players right now who are willing to buy US debt, right? Everyone is like, why would they're starting war here, killing presidents there. I don't want to hold debt of this country, but who does? It's the stablecoins, right?
And they also give yield as well, so that's important because they're fighting now about the yield.
4.5%, no taxes, yeah?
Yeah, with the banks and exchanges are fighting on the yield.
I think it's actually, in my opinion, pretty much about the yield, and that's it. I very much agree with your last point. I think it makes it very easy for companies also to get into the industry, to get into crypto, and it's a much better product. But I think there is also a risk that we tend to just forget because of the yield. If you look at the bigger stablecoin today, USDT, USDC, they are centralized. So even if it's on the blockchain, there is an entity that can freeze your assets. There is an entity that can actually apply sanction. So today it's pretty much the same thing, in my opinion, as having USD in your bank account. And it's funny because people are bearish about USD, but USD denominated stablecoins are performing very well. In my opinion, the main reason behind that is the yield. And the yield is right now what is blocking Clarity Act in the US. So I think what's going to happen there will define the future of stablecoin as well.
Yeah, well, if we started the panel 24 minutes ago talking about ICOs in 2017 and the ideas of these dApps and your haircut coin and your taxi coin and whatever, we're already 20 minutes in, and what we're doing is just making US treasuries with more money and then transferring dollars faster. Very weird. Also, let's say in stable coins, you can also just see the reinsurgence of the dollar. There's a lot of different backed stable coins. It could be backed by gold, it could be backed by silver. They're all pegged by the dollar. We still haven't seen real market cap usage of anything that isn't pegged to the dollar. So isn't our industry's romance with stablecoin a bit like a bunch of content writers putting, I don't know, Claudebot on their computer so he can better learn their job and make them out of a job in a year or two? Because all we're doing is making the banks move US dollars quicker.
So far, with stablecoins, this is the game.
Sorry to be gloomy, but you know.
Basically, the companies that issue stablecoins are like a private central bank. They get financing at zero cost, issue those stablecoins for which they do not pay any interest. They receive the interest by investing in various safer assets. This proceeds. But we have another issue. For example, BlackRock issue Builder, which is basically a money market fund, and it is a money market fund and in the same time also a payment instrument. I think this is the next step. The companies that set up stable coins to pay interest on them, so that the owner of a stable coin to benefit from this yield.
Yeah, first are stable coins, right? You said it, improving the financial markets and so on. Second will be tokenization of companies, assets, whatever, still improving the financial system. Then tokenization of everything. I really believe that's going to happen because Larry Fink talks about it constantly from BlackRock, so 100% is going to happen. So yeah, this is what blockchain was intended to do, to upgrade the financial system, and the crypto companies that are now in the space are helping on that, which is normal. I don't see it not normal, I see it like the normal, and this will continue till the financial markets will trade 24/7. Now Nasdaq will implement some kind of a 24/7 almost. So yeah, when Trump will bomb Iran next, maybe not only crypto will dump, it's going to be the equities as well in the same time, even if it's in a Saturday. So yeah, it's an improvement, and it's not a bad thing that crypto is doing that.
Yeah, I think you said something very interesting before. You said that the romantic days of crypto are over.
100%,
right?
yes.
Where people come up with all these crazy ideas, and I need to put this on chain and imagine here. Like, yeah, go back to 2021, all these projects. If you look at it now, it sounds crazy, right? What they try to do. I think since the very beginning, the intent or the power of blockchain was not in building crazy application, it was in upgrading the financial system, right? And you've seen it now with stablecoins, right? Like, it's cool that you can send a stablecoin around the world 24/7, 365, it's nice, but I think the real beauty of it is the whole decentralized finance ecosystem that we've been playing around actively. It was in open beta testing for the past 6 years, right? You have vaults, you have lending markets, DEXs, and everything else that's built on top. Options, you can build virtually everything that you can do in traditional finance on chain, right? We've been doing this now with Ethereum, with Bitcoin, and with stable coins. Now the next stage, what we predict, which is why we're building infrastructure for tokenized equities, we believe that equities are now coming on chain. You see Ondo building this, you see Xstocks launching it, Coinbase is doing that, Robinhood is building this. Like, this is the next wave of influx of new money coming on chain, right? Not because there is a new meme coin cycle and people want to have FOMO and they want to, buy the next Pepe coin, but because people are now able to use their assets that they hold anyways in their bank account, right? Like equities, for example, to earn yield on them, to take loans against them, right? This whole ecosystem, we predict that there is going to be a new decentralized finance ecosystem. We call it StockFi, where you basically merge equities with the DeFi ecosystem, complete open finance programmability, which gives people access all over the world to any financial instrument.
Do you think we really managed to upgrade the financial system as it is right now?
I don't think we're upgrading it because we're not upgrading it from the inside. There are a few people are trying it, right? But I believe right now we're building it on the side, like Bitcoin, right? Like Bitcoin was a network that was started completely outside of the financial ecosystem, but it gets more and more and more integrated every single year, more adoption, more users, more people buying it, more institutions buying it, and I see the same thing happening right now. We're building it next to it, we're building a better product than traditional institutions ever could, and my prediction is that it's going to migrate slowly over.
Right now what's happening is that the fiat is sucking out all the liquidity out of crypto, and it's kind of publicly traded companies are buying all the Bitcoin. So it's also a great way to castrate and neuter a potential replacement into making it a technology layer that you're using. And that's what it seems to be the rails right now. Let's get into RWAs a bit. So a lot of hype around RWAs, and it seems like everyone's wanting to build more infrastructure and a lot of talks about it. Still less volume in RWAs than, I know, in this room. If today I'll put one Class A New York real estate building on the blockchain, it will triple the market cap of real estate on chain. Last time we tried to do STOs, no one cared. So I guess institutions want this, but will retailers actually want to use crypto and blockchain to trade really regulated, boring things like stocks? Because it doesn't seem like that's needed, and it just seems like it offers mainly questions about insider trading. So how bullish are you about actual retail adoption of these RWAs?
I think here, in my opinion, it really depends on how you're tokenizing it. Because if you're just taking a stock, an equity, and you're tokenizing it, giving people access to it, but actually they need to still go to the person who issued that equity to that company to actually redeem their rights, or they can't even have any voting rights. We've seen that with what I think it was Robinhood launched last year when we had the X stocks, and you can actually, as a retail investor, you can actually buy stocks of companies like OpenAI that are private companies, they're not publicly traded. Here the thing is, yeah, okay, that's cool, that's fun, but actually you don't have any rights. So if you don't have any rights, what's the point of owning it? You know, you would rather, it's exactly the same thing as having the equity of Apple and being able to vote in Apple's decisions. So if you implement it and people have the ability to use their rights on chain and to vote on corporate decision, to get dividend on chain, then yes, in my opinion, there is a real utility because it's infrastructure. Otherwise, it's just adding another layer of complexity, and as a retail investor, you might get lost in that process.
I agree with what you're saying. I think this is where it's going to go in the future. However, we live in a very privileged world. We are here in Europe, or some people are from the US. Like, we can easily buy equities, no problem. But if you think about it, in countries where the iPhone or parts of the iPhone are being built, it's easier to buy an iPhone than it is to buy an Apple stock, right? So for us, it's easy to say, oh, we don't need that. If I don't have the rights, then I cannot. Then it's not worth it for me, right? But I believe for the majority of the world, right? Southeast Asia, Africa, Latin America, even Eastern Asia, right? Where there is gated access, where it's not so easy to buy US equities. And to be fair, the only equities people care about are US equities, right? No one is buying Romanian stock anymore. I'm from Switzerland. No one's buying Swiss stocks anymore. Everyone wants to buy Google, Nvidia, Tesla, right? And most people don't have access to these assets, right? And then this is the one thing, the accessibility. But what I think is even more interesting is what I said before, is what happens when these assets are able to move around freely. What happens if people, developers, can come up with systems where you can take loans against them, you can earn yield on your stocks, right? Where stocks are behaving the same way as money does, or as stablecoins do, right? I think that's where the majority of the value comes from, especially for us in Europe, where we don't have this accessibility problem.
Yeah, look, I'm thinking about this in this way. So you have a few ecosystems. For example, you have crypto, you have stocks, you have gold, you have ETFs, and so on. For example, from someone from crypto to invest in stocks, they need to create a different account. Going like on his idea, I don't really think it doesn't impact the world like the first countries. They do. It does impact. Because if I have an account on an exchange, I cannot really buy NVIDIA stock right now. So I think this is, again, uniting the ecosystems, like the tokenization, and overall, you'll be able to buy real estate as well. You go to one place, and you find everything you want there. So this is really powerful, and I think this is really gonna make more liquidity. Like, for example, the USDT, USDC, and all these stable coins that are now transacting only in the crypto space, they're gonna flood the other markets, and it's already happening, as you said, with like the Tether that's buying a lot of gold. It's already happening. That's why gold is like very going up now. It's not the main case, but it's one of the things that happens now. So I think this will bring a lot of liquidity to the traditional markets as well, to the crypto market as well, and it's going to be a mash, and I think the liquidity is going to move from side to side, depends where the strongest narrative, strongest technology is, and so on. So it's a more fair market if you think about it that way than it was like in the past, because liquidity can like move faster, like with the speed of light. You'll see like things go up very fast. You'll see trends go to the other side very fast. So yeah, it's in the age of AI and in the age of like the speed of internet, you really need this. And that's what I say. In the next years, you're not really gonna recognize how crypto trades, but probably you're not gonna recognize how the other markets will trade as well, because it's gonna be something really different.
One segment of the market which is hot right now is the private market, which is basically private equities or private loans. If we put this on the blockchain as tokens, those assets will be available also for retail. Currently, trading such kind of assets.
Yeah, the question is, do they want it? Not it will be available. Will it actually meet market fit? Because crypto users want to flip pictures of digital dogs and try to make 10,000% whatever. I don't know if people look at crypto as somewhere to making nice yield. It's seen as a financial casino, not as a retirement plan.
I mean, we're growing up as well, right?
Yeah.
I mean, when we joined the market, that's what we wanted to do, but now we're getting older as well. We're thinking about the future. We may want to buy a house, exactly. So maybe we are also changing, I don't know.
And another point for tokenization, I think it is very important, is the custody. When I buy a token with a real asset behind, I want to be sure that this real asset really exists. So the custody and auditing of all the activity, I think, is essential for the credibility of that token. And also, this needs also to be solved.
Perfect. So we're going to finish briefly with the last question. I think two of you touched about it, which is like ETF. So Bitcoin ETFs, Ethereum ETFs have been launched. Now there's also DATs, digital asset treasuries, meaning difficultly publicly traded companies backed by different crypto assets. Is this good for the crypto market, or is this another way of Wall Street getting the hype and the buzz and stripping away from the liquidity? What are your thoughts?
I think it's a little bit of both, to be fair. I think it's great for capital, and it was needed. I think we've seen, if you look at Bitcoin, for instance, the ETF has been supporting the price over the last months while everyone was selling. At the same time, I think it introduced systemic risk, right? Because everything is being built on the same asset, and you just hypothec it again. And if something goes wrong at the end of the day with one little thing, which is USD, then it goes wrong for almost everyone. So,
yeah, I mean, I think ETFs are great. It gives people the chance to buy this asset without creating accounts here and there. It allows people to buy crypto via their bank account. Amazing. With that, I'm like I'm buying MicroStrategy, but it's a mega gamble that I'm doing. Like either debts are the greatest invention or financial invention of all time, or it's going to be the biggest Ponzi scheme that mankind has ever seen, right? So only time will tell. I don't know.
No, we're not talking about the US dollar anymore. Oh,
No.
sorry. I'm kidding.
No, but it's interesting. But you know, it's dangerous what Michael Saylor and all his copycats are doing. But interesting.
Thoughts?
Yeah, so ETFs, yeah, it's nothing new. BlackRock has 600 ETFs or whatever. You can study gold, you can study silver, you can study all the commodities, and they all have the same trade. First, the ETF is approved, then the market is going up, then the market's going down and it's going sideways. So, and then it's go back up again. Why is this happening? Because the ETFs is just maturing the market, the asset, and some say they suppress the price, which can be a case made there on the short term, but ETFs cannot suppress the price or any instruments like options or whatever, because everyone talks about Jane Street now. They cannot suppress the price on the long term, but on the short term, yes, it happened. A lot of banks get a lot of fines that they suppress the silver, gold, and metals markets. They get fines for billions of dollars that they did that for like years on end, like 10, 15 years. And I think now it's happening to crypto, and the gold bugs and the silver bugs is like, oh, welcome to the ETF market, welcome to the financial markets when things can trade like this. So yeah, on the long term it's good because it's going to provide liquidity. On the short end might be more of a sideways a little bit market and more stable.
All right, bring it home.
So basically, Bitcoin entered the Wall Street officially at that point, and my opinion is that those blockchain technology will enter into classical financial system and will be a merge between them, and the large financial institutions will be the largest players also on the crypto space.
All right, perfect. Thank you very much. I'm going to ask our speakers to stay a few minutes in the kind of, I would say, lobby outside, so if people want to ask them some questions and you won't interfere with the next panel. But again, thank you very much. It's not the easiest subjects to digest, but I think that we agreed a bit, but we also had some good opinions, so thank you very much. And yeah, enjoy the day.
Ladies and gentlemen, there we are once again. Hands together for all our panelists and our fantastic moderator as well. Again, sharing insights, perspectives again that you might want to challenge as well. And again, you're curious, you'd like to know more today, this evening, tomorrow perhaps, have a chat with them, take those conversations forward as well. Right, what should we do now? Let's move on now to our next session. But before we do, just again to remind you of really some of the things that are happening this evening. Again, we have two great, fantastic side events that are happening this evening. All you have to do is make your choice of where you want to go. I can't do that for you. Only you can do that. So when you get a moment, have a look at the agenda, have a look on the website, and choose where you want to go. Again, you'll have to register. Don't forget, you need to register details so we can make sure you're registered for those side events. And then all you have to do is be there this evening. So that goes on to this evening. And again, tomorrow, we're going to do this all over again. Again, more insights, more conversations moving forward for day number 2. Again, all of this essentially to help you make better decisions. Okay, right, let's move on now to our next session. Again, if I ask you what the next generation of crypto markets would look like, what would you say? I guess I can imagine, not assume, but I can imagine there's optimism in there somewhere, otherwise you wouldn't certainly be here, right? So, but how's that going to look like, and how's it going to play out and unfold? Somebody now, the next person here on stage, is going to unpack that for us to help us kind of visualize what that's going to look like. I'm intrigued as much as you are, really, to see and hear what this is all about. Ladies and gentlemen, please welcome to the stage Tiana Aptiauri.
Hello, everyone. So when people explain why crypto market moves, they usually point to the headlines or narratives. But the real story is really deeper than that, and it's structural. And this structure is growing not gradually but fundamentally, and we are seeing that crypto markets are moving to their second phase. So the first phase was speculation era, and the next phase is infrastructure era. And when markets are moving to their infrastructure phase, something important is happening. So participation does not lower, but it becomes more scalable. Also, the competition doesn't fade, but it becomes more structural. And also the the volatility does not change, but it becomes manageable. And we are seeing the early markets of the cryptos, where the main three fundamentals were and characteristics was that there was retail-driven participation in the early stage of the crypto. There was spot-focused trading and also the fragmented liquidity. And also there was liquidity, there was a scatter across the market and the infrastructure that was still developing. But it was not actually the flow, it was the stage of the development itself. And we are seeing this kind of evolution in every major financial markets because, let's take the equity or foreign exchange or the commodities itself. So they all had this kind of phase where they have started, where, for example, equity had a very big volatility until the big exchanges take the execution, and also the foreign exchanges that was unclear before the digital markets were unified the pricing, and the same was with the commodities as well. And this is so important for crypto as well because the crypto is going the exact same flow and the rules are changing. And this is so important because it defines who succeeds in it. And we are actually seeing that more capital is scaling and participation is increasing and the acceleration is increasing as well. And there are more sophisticated traders are coming on the market, and there are all big institutions entering the market. Also, the rising of the derivative markets, which is so important because the derivative markets are now risk manageable, not just risk taken itself. And derivative markets are not just the instruments of the speculation, but this actually defines how the real price are defined itself. Because the participants can actually make the capital allocation, as well as they can just understand how the market itself is moving and make the more decisions. And this is important because historically the derivative markets defines how mature the market is, and crypto are moving this way exactly, which means that more institutions will be coming, and the institutions are not just looking at the hype, but they are just looking how the infrastructure is working. Another example of the institutions is actually the tokenized assets, which helps the traditional finance to ride to the digital space, actually, with the help of the blockchain rails. And tokenized assets are not just created, they define how those capital is moving, actually, how the settlements are done, and how the participation is increasing on the markets itself. And one of the example is stable coins as well, because stable coin defines how the capital is moving across the borders, right? without the friction and without the help of the traditional digital banking or like without the understanding of the geolocations itself. And we are also seeing the rise of the AI because currently the risk, the problem is not to access the market and understand the data, but to access the data itself. But the real problem is to understanding it. And AI helps here a lot with analyzing the charts on the market itself. And we are also seeing a high popularity of the prediction markets actually, because we are seeing that traders currently are trading not only based on the pricing, but based on the information as well and the prediction itself. So right now, the three main points are so important for the market itself. The first one is liquidity, the second one is collateral, and the third one is execution. So liquidity defines how it is easy to enter on the market or exit from the market, and collateral actually defines the capital efficiency, and execution itself defines the speed and precision. Because crypto traders might have the same capital, but one of them might be succeeded not because they were clever or knows something better, but their system was the one that outperformed. So that's why we are seeing the main changes here, and we are seeing that traders are now prefer systems instead of the interface itself, and prefers infrastructure instead of the attention. And institutions are also coming the markets based on that and not based on hype itself. And on XT, we are concentrated to build the next generation of crypto markets, and we are covering the whole liquidity, multi-product architecture, institutional grade liquidity, and integrated execution systems as well. And we also suggest the broker program, which defines how traders and institutions can access on the market without creating the new one, and to increase not their users only, but the market itself overall. And this is so important for everyone because, for traders, infrastructure defines the better execution. Also, the projects for projects, it's the deeper liquidity access, and for institutions, it's scalable structure. So the major markets are not actually defined how prices are increasing, but the major markets are defined where infrastructures matures. So thank you.
Right, before you go, Tiana, before you go, okay, so you're curious, you'd like to know more. We're going to open it up now for questions for anybody that has a question here. If you stand on there, just go back on the stage there, and if you have a question or you're curious, put up your hand and I'll give you the microphone. Any questions at all? No questions? Curious? Like to challenge what you've heard? You don't agree with what you've heard, perhaps? All good? All good. Ladies and gentlemen, hands together for Tiana here on stage. Thank you so much. Ladies and gentlemen, let's move on now to our next session. So we'll move on to an area which we haven't really looked into or kind of even stepped into at all since we began this morning, and this is the world of crypto and blockchain in higher education. What does that all mean, and how does that look? What does that look like right now? But maybe just more importantly, what's that going to look like certainly in the future? Well, this next healthy, productive panel here on stage, this conversation that we're going to experience now, hopefully will answer that question and many more as well. Again, I'm intrigued really as much as you are as well, really to hear and see how this is going to unfold right now. So let's welcome to the stage our panelists and our moderator as well. Please welcome to the stage Lucian Boter, Radu Rizoiu, Sorin Nitsa, Alexandra Chenian, Sherban Meza, and our moderator who's going to shape this conversation moving forward. Please welcome Diana Marculescu.
It's working, right? Okay. Lovely meeting you, everyone. Thank you so much for being here. We have such an amazing group. Should we do like 30 seconds each, like just to tell a bit about ourselves, who we are, and like what's our connection with the space, with like blockchain space? Yeah, you can go.
Okay. My name is Sherban. I'm coming from the Technical University of Cluj-Napoca, where in the past years we try to expose our students to the techniques of blockchain technology and different use cases. And yes, sometimes, as this conference clearly illustrates, is crypto. Thank you.
Hello, I'm Alexandra Cernian. I'm an associate professor at the University Polytechnica of Bucharest, and I teach and also do research related to the blockchain technology. Thank you.
Sorin Cristian Nitsa, pleased to meet you all. Currently teaching at FAPIS, a lecturer at ASE Bucharest. I've been involved in crypto for the past 6 or 7 years, and right now we're coordinating the master's program over there with regards to blockchain. We're going to talk about that in a few.
Yeah.
Hi, my name is Radu Rizoiu. I'm teaching at the law school at the University of Bucharest, where I am interested as a sidekick, let's say, in legal nature of crypto assets and smart contracts.
Hi, I'm Lucian. I'm a professor and also the VP for Digital Transformation at the Romanian American University. I'm teaching subjects related to the crypto and finance world as well, so that's one of the reasons.
Amazing, thank you so much. I'm super excited actually to be here with you, like close to you, because you guys basically represent one of the biggest academic institutions in Romania. I can say 30 seconds about myself as well. I'm Diana, I'm the founder of Comets of Web3. This is one of the biggest builders community in Central and Eastern Europe in the blockchain industry. So maybe if we can start, and obviously as you were mentioning, like the connection with the blockchain, like everyone is teaching or involved in the research around it. Can you give us like, I know, in a nutshell, maybe, or like what made you, or like what was the moment when you realized that blockchain should be brought in the universities or like in the institution that you work? Like when was the aha moment that, like, I don't know, when you understood that, yeah, that's super relevant for the students?
So we start from here. Basically, it was the moment when we realized that the students are already knowing about Web3 and about the new financial technologies. So that was the moment when we started to adapt our curriculum, basically adapt our courses, including chapters related to fintech and cryptocurrencies and blockchain and so on. So we are actually, I think the economy is changing and we are moving to a digital economy. So I'm sure that this will be the future. Unfortunately, in Romania, the academia adapts a little too slow sometimes. So we'll see if we'll manage to keep the pace with the change.
Yeah, to me it was some sort of a surprise before the pandemic at a conference organized by the central bank with a lot of bankers. The topic was cryptocurrency. It was something the bankers just realized they need to take care about. So I made some research and I had an intervention in that conference. 2 years later, I extended the research into the larger category of crypto assets and their legal dimension. That second research became a paper that was published, and from there I was asked inside my university to be part of the curricula of the, at that time, brand new master program in new technology, law of new technology, where I started the smart contracts course. So I was learning by doing, let's say. Together with the students, we were asking questions and trying to get answers to those questions.
So we have this industry, which is worth literally billions. We have all governments, which are researching right now ways to develop CDBCs, which are developing alternative methods of payment. And we have the universities. Now, if the universities are not going to do anything, they're just going to be left behind. So basically, education is just going to suffer a hinder from that. At ASE, we kind of saw that coming. So that's why we decided to introduce blockchain concepts in all of our current courses. And this year, we're going to launch an entire master's exactly on this topic. Yeah, it's going to be the first in Europe, the first in Romania, Eastern Europe, I mean. And we're trying to do our best to basically accommodate foreign professors. We're going to work with Humboldt University of Berlin. We're going to work with other universities across Europe. It should be something big. But we realized that a couple of years ago, and we started to work towards reaching that goal. And I think that this year we managed to do that. The next university year is going to be visible.
For me, the trigger was back in 2018, I think, talking about blockchain as infrastructure and how it can address problems from enterprise applications and solutions. At the moment, I was already working with a Romanian-based company, which was developing blockchain database solutions. So we were working on different pilot projects. So at that time, I decided to also introduce a course in a master's program that we are running at Polytechnica University to teach about how we can protect and secure information with digital information with the blockchain technology. So that was the start. We also had a partnership with this company that I was telling you about. Unfortunately, they're not operating in Romania any longer. But at the time, I think it was a success to also have this partnership because we were basically really talking about real problems and explaining how blockchain can enhance real solutions for those problems. So it was really hands-on because we also had guest lectures coming from the private sector, which I think helped students understand that we're not just talking about a technological concept, but we're talking about a technology that can be really applied to the industry and to the economy sector.
Yeah, so I come from a technical university, so yeah, it was, I think, 2006. I read the paper in 2011 or 12. There was a bit of, let's say, spur in the industry, in the technical part, in the technical world about Bitcoin and how it's going to be the new thing. And then it was in the drawer, and then in 2015-16 a couple of students approached and said that they want to create a new consensus algorithm for their final year projects, and to do different types of projects which were not necessarily crypto, they were related to what the blockchain technology can do. And lately, yes, there is the money that fuel it, they come mostly from crypto for now. And this is like large ecosystems that are making some profit and they want to give back to the community, and this is now what is happening on educating about the blockchain technology in general, with an accent on fintech products. And students aiming and going into this. And I think the interest is because it's a new industry, a new type of technology, they think that they have an edge being latecomers in the industry, let's say in the software industry. Focusing on a new technology will be beneficial for starting a new career rather than being a developer and catching up. This is how I got into, and what's my feedback from students as well, which fuels the effort.
Yeah, very interesting. And just to add one point actually is that, for example, at Comets or in the community, we operate across multiple countries, and actually what we see is that Romania stays very good versus like the actual other countries like in the region, in the Central and Eastern European region. And I think the best example is that right now, like, we have like basically the biggest universities, like technical universities and like business universities and legal in Romania, that everyone, right, has a presence in the blockchain space, or like has initiatives in the space, and we see the same across the region. Maybe one other question, I think that, and I think both, like especially you, Sorin, you hinted, like, but I would want, like, would be nice to understand at the level of the universities that you are representing, like what are the specific ways in which blockchain was integrated? Do you have already like classes or workshops or like research, or like are there already specific initiatives that the students can take advantage out of it? And actually, as well as a context for this question, at Comets we had yesterday evening like a side event where we had as well like a lot of students coming, like from the, especially with the technical background, and the most voted question, we had as some like a pool of questions. The most voted one was, are there any scholarships for students in the blockchain industry? So I think it's particularly relevant to understand or to share from your side, like what are the existing initiatives in the universities that are already around the blockchain. You can start. Yeah.
So there are, I think, two major ways to tackle the question. First, me and also I have colleagues that are working on research that uses blockchain to solve certain problems, particularly research projects that are linked to energy management and power supply management in this type of context. This is research where they use blockchain. So yeah, they are PhD maybe position in those type of projects when they get funded for 2-3 years, like usually this is the research cycle. And then we have courses in which, okay, the name of the course is the same like last year, 2 years ago, and 3 years ago, and so on and so forth. But gradually from one final lecture based on blockchain, it became 2, 3, and now it's half of the content is based on blockchain because there is interest in the students. And yeah, this is what we have in Cluj. And then we have all the partnership, like you mentioned already, Diana, with the Comets and the ecosystems that come in and they do a summer school or an autumn school or something like a weekend or 2 weeks crash course introducing a certain technology, being Ethereum, being Sui, being Solana, being whatever. Yeah, thank you.
I think it's more or less the same in Bucharest as well. We're also a technical university. So from a teaching perspective, we have these dedicated courses on blockchain technology. Then we also have other courses where the technology is integrated in a more extensive curricula, but it is mentioned and a little bit explained in different contexts. We also have summer schools where we have dedicated tracks on blockchain, and I think one of the main benefits for students there is that they also get to engage with people coming from the industry directly, and they can talk about specific use cases, projects, benefits, problems that you can encounter when developing blockchain-based solutions and so on. Dedicated events to students like hackathons, different workshops organized together with our industry partners. And I think one of the main benefits, I would say, for students that they can have at Polytechnica is that we have a lot of collaborations with companies who are very open and willing to come and engage with students and organize workshops with them and do seminars and so on. So they can have this close relationship with what is happening in the real world outside of the university. So hopefully there will also be some funding available for them in the future coming from companies. Why not? So that we co-create and co-develop solutions and applications targeting the market as well. We also encourage them, for example, with programs like innovation labs, and they also come to Cluj with that and to other cities in Romania to think about innovative ideas that they can transform into products and solutions that they can go to market with, and they get to work with mentors and companies and so on to validate the ideas and to grow faster. So I think that's also one place where they can integrate blockchain in crypto, financials, different other applications. So
a lot, right? Yeah, it is a lot. Yeah,
In our case, when we started on this road, so to say, it was more like an idea. We started from doing a hackathon, and we did not know how people are going to respond. So we started off low with literally no budget, and we saw that our students basically came in a very large number and were very interested on the topic. We were surprised by that. So after the second edition, the hackathon was called Blockchain Marathon, and it's organized on a yearly basis at FABIS. After we saw that, we decided to integrate in courses, and we have disciplines, I'll give you examples, as risk and investments, in which students are taught how to trade and how to look at the market and how to understand trends. We have disciplines such as digital transformation, in which they can see how exactly all things come together, because blockchain is not just crypto, it's not just trading, it's a little bit more than that. Big companies have acknowledged that, and we have a lot of partnerships with companies which are trying or have already implemented blockchain in their day-to-day activity, so to say. So from there on, we decided to do a little bit more, and that was the master's program that I told you a little bit earlier about. We don't know how it's going to be received by the market. I'll tell you brutally honest that. But we're expecting to fully occupy the places. So I guess it's going to be the first year in which we're going to have an official position in the higher education area on blockchain. So stay tuned for more, because it hasn't yet been announced, but probably in two or 3 weeks, everything is going to be official.
Nice. So basically it will start from this year, like in
this
autumn?
Next university year, this calendaristic year, yes.
Wow, okay, nice.
Okay, I'm a little bit out of line here because I'm a lawyer, you know, I don't know about all this technology stuff. But I will follow with what you, Diana, mentioned in the introduction. You know, there was a joke after 9/11 that a Romanian was planning the attack on the Pentagon, because after the Pentagon was chipped, by the attack, then the House of the People became the largest building in the world. I would say that the Romanians are also behind yesterday's attacks, because right now nobody in the industry will go to Dubai anymore, and they will come to Bucharest. We have the nice, I will speak now like Trump, we have the nice De Veselu shield in here, so nothing will happen.
We have also tunnels till Dubai, anyway.
Of course. You know, the students, of course, are very interested in new technologies and new things. But as the law school starts with teaching them Roman law of 2,000 years ago, they become bored and they say, okay, we want something very fresh, very new. We don't have hackathons, but we have each year an session where the students can come with their viewpoints and they will present their memos on, and of course they will receive prizes. There are panels of professors grading them and so on. And each year I see that at least 3 to 5 topics are about new technologies. Starting from that, 3 years ago, as I told you, we launched this master program in new technologies. Of course, it's a law school master program, so we are dealing with the law background for new technologies. Something of a conundrum, because, for example, I was charged initially to teaching smart contracts lecture. And the first thing I knew about smart contracts was that Nick Szabo 30 years ago said we need to get rid of all the lawyers, you know, like Shakespeare. And we will do contracts without lawyers. And then I was a lawyer trying to explain my students, yeah, this is kind of an utopia. Smart contracts still need lawyers because they sometimes end up in court. And we had some cases, even in Romania, dealing with these issues. So at the end of the day, you still need a lawyer. We didn't reach the utopia Nick Szabo envisaged initially. So we have this master's program where we try to discuss with the students all things related to the legal background of new technologies, and where we are trying now, after 3 years, we are trying now to have some guest lectures from various areas, a part of the legal field, so from with technical background, with economic background, in order to show them that, as you said, it's an ecosystem. You cannot touch only one aspect of the phenomena, and we will be thrilled to have the industry coming and presenting the new technologies, and we'll try to see how it fits with the classical structure of the legal background here. Because, you know, the law is pretty flexible, including in this.
Really?
Yes, it is. Actually, you'd be...
with a good lawyer, I guess.
You'd be amazed to see that solutions which were designed 2,000 years ago are so flexible that they can be replicated today. For example, solutions of Roman law regarding intangible assets are perfectly suited for treating crypto assets as assets. So, and then to apply to them the whole set of legal provisions designed for assets, for intangible assets specifically, which are not designed for crypto assets, of course, but they can be applied through a very simple assimilation process. So this is what we have, and also, of course, in PhD studies, we have opened this topic for further research and so on, but this really depends on the interest of the students.
Amazing.
So what we did at the Romanian American University, we actually started years ago. And we started with some of our graduates, actually, which were involved in the industry. So when the NFTs were in hype, we have got some graduates from that area coming with NFTs concepts and everything else to explain to the students how they work and so on. In the last few years, I would say that we went to the crypto and blockchain technology a little bit more, of course, on the financial side. And we had one of our graduates, Alex Cărbunariu, which actually came back to the university and started courses and classes with our students and open to any youngster actually that wanted to attend those classes. We are actually, we started the master program in new financial technologies, I think 3 years ago. And also 3 years ago, we started the research center in economic analysis, blockchain, and big data. We are looking to develop actually a Web3 lab as well, but that's in our future planning to do it. Of course, most of the subjects which are taught in the finance and also on the other economic schools includes chapters, one class or two classes related to blockchain and crypto. The finance students, of course, they have more, they have dedicated courses on that.
That's wonderful, and like for me it's so insightful, and I guess as well for the audience, just to hear out from every of you, like how many things are actually happening in this space. Like maybe, right, being in our individual bubble, it might look, I don't know, not hugely, but then if we put everything together, it's actually a lot, right? Like research centers, white papers, like partnerships with the industry, like classes, masters, and so on and so forth. That's actually like a lot, like, or at least what I'm seeing. And I think, Radu, you at like a point, you hinted that we should see this industry like from the full perspective. So it's not just about technical, but it's also about legal, it's also about business, it's also about like the financial analysis behind it, right? So maybe at some point, somehow, now we will do like some sort of initiative where like everyone, right, it's coming with their own pieces, maybe, I don't know, a hackathon or something. But I guess every of you hinted that there are some collaborations in place between academia and like the industry players. So maybe from this point of view, what you saw, like from your experience, like in the ones that you were involved, what was the best model of partnership between the academia and the industry, or like the private sector, that helped the best, like the universities, like moving forward, or like the education moving forward? Right, like how you integrated the industry, or like what was the best way of like collaborating, or like the most helpful way? Yeah,
I would say getting the input from the industry with guest lecturers, because they are the ones which are at the forefront of the technologies. So academia sometimes is a little behind on that. So the best option to give the students the latest technologies and present them is to get the specialists coming, invited in courses, and to combine the theoretical part with the new technologies and everything that's related to that. So I think that's one of the good options to collaborate with academia in the industry. What else it's important is to get the students exposed as much as we can to extracurricular courses and trainings and meetings, and that's what we try to do in the university. As we know, in Romania, the curriculum is somehow standardized, let's say, more or less, and the best option, and we usually take it takes a couple of years for the academia to adapt to what's new. If we do a change in a subject in a certain year, it might take 3 years to do that change. So that's the bad part of it. But the good part is that we can work together with the business environment, with the specialists to cover that gap. And we can have them invited to guest lecturers, or we can get them to do extracurricular trainings for the students. So that's the way to collaborate. And also, I think, for the near future, to build like, let's say, common laboratories or common research centers in which the business comes together with the academia, and not just one university, a group of university together with a group of companies that can create a lab that students can share and use that in order to do research or discover new technologies. Thank you.
Interesting.
I kind of second that, at least the first part. You know, it took me, while I was vice dean, nearly 4 years to rewrite the curricula of the law school.
Wow.
So it was a bureaucratic mess. After that, I waived any leading position. You know, they asked me, "And don't you want to continue for another term?" I said, "No way. It was enough. I need now some vacation
You give
from
back to the
from
society
any
now.
bureaucracy." But what I want to say is that it is not impossible. It can be done. There is some struggle, but it's not impossible, and that's the good vibe about it. Now, about the working together between industry and academia. You know, the first year of our master's program, 2/3 of the students were not freshman graduates, but they were members of the industry, of various industries. So I had the chance of discussing with them problems of the industry during the lectures and the seminars, and then some of them took the dissertation on these topics because they knew about those topics. Some of them, I remember 2 or 3 dissertations were case studies. How to use blockchain for an handball league tournament, for example. You know, very particular case studies, which were very interesting. And we adapted our curricula, our internal curricula, each year based on the feedback from these kind of students who had their own needs. As I've told you, we are thinking that from next year we'll start that we'll start to invite people from the industry also as guest lecturers, because this will not affect the bureaucratic curricula, but it will add new knowledge to and new exposure to the students. Now, for the law, labs are not very necessary because, you know, law is about talking and talking and talking. No, it's about writing and writing and writing, but anyhow. But of course, an interdisciplinary lab would be useful, I think.
Interesting, yeah.
I think the secret in actually going forward on this is starting to treat education like a business. And once you start treating it like a business, you see that things are starting to move. I will second my colleagues, actually, when we're talking about changing the curricula, because it is kind of difficult. Nevertheless, if you do have a great team behind us, and we do, we were able to change it. I can say that. And by doing that for the past 3 years, students have started to react. The number of students have increased automatically. And right now, we're in the position in which people do want to come and talk with us, do want to come and participate in the lesson so they can share their knowledge with the students. They are more than welcome. because the best way to actually keep in touch with what's going on in the business environment is to have the business environment come over and tell us. So that's what we're doing. We do have guest speakers on the majority of lessons. We have international weeks. We're trying to accommodate the new tech, and we're hoping to be doing a good job.
In my experience, that would be co-creating, co-developing programs between the university and the private sector. I think that engages students more than just having guest lectures in the university for discussions. And I'm happy to say that we implemented this model, and we try to implement it as often as possible in our university, and we can confirm that it works. To find, together with companies, real projects that students can be involved in, even if they are willing to, as it was my case with the blockchain course, we started this partnership where also the company had some suggestions about what should be included in the curricula, what use cases to use and so on, besides providing students access to some specific technology. And I think this was a big success for students because they had the opportunity to understand the real use and the real benefits of the blockchain technology in this case. We had, for example, we developed in partnership with a blockchain company, we developed a pilot project in the university to store the diplomas issued by the university on blockchain, and students were involved in this. And I think they were very happy and really had a drive to work on the project. So that is also, besides having the opportunity to listen to guests coming from institutions and companies, providing them access to be involved in real projects is also a good thing for them.
I think the answer to the question of how a successful collaboration between a university and the industry works has answers which lean towards one or another, similar to what we have in blockchain. Is it a DEX better than a checks? Because sometimes it's good that the university takes a lead. Sometimes it's good that the let's say industry takes a lead, but sometimes it's also beneficial to be on, let's say, on a par level, on a peer level. And I think from this point of view, peer levels and make work much better, because when you are at peer, you kind of understand that you cannot do something without the other. I think the industry, because it's a new technology, will always have the edge in terms of the technical know-how and what actually happens. And it's not acknowledging this, it's actually not acknowledging what is happening outside. I think we are past that. However, the industry has to acknowledge also that the education system cannot be technically on that level. However, there is a lot in terms of delivering content, educating, addressing how a content can be shared with others, which the industry doesn't have the time or the resources to spend. And I think that if you match these types of expectations, it's one step forward, and the second step forward is in terms of the cost of the resources. For instance, what I think it worked for us is the fact that we have a certain cost of hosting events like a conference, a summer school, because we already have the infrastructure in place. However, and for us it is a cost, but it's much different from the cost that a private institution will have in order to rent a room, deliver something in a different environment. And if you pair this type of costs with the fact that the industry doesn't have to pay a specialist on an expert like a university will have to do when inviting, but will actually be part of his work and giving back to the community. This type, pairing these two, acknowledging each other's strengths and weaknesses, together with pairing the cost model for both of the parties, is kind of a success story, at least for the Technical University in Cluj.
Lovely. And I think what I like a lot was, Alexandra, when you were saying that you also involve the companies in defining the curricula as much as possible, because I find it so relevant as the students or the future graduates will like try to find jobs, right, in these companies. So then I think it's particularly relevant for the companies to be involved, at least to hint what they are their expectations, what they are valuing, like what they are looking for, like when hiring someone. Amazing. Thank you so much for being with us today. It was such a pleasure to hear you and learn what you guys do. So yeah, it was a super insightful conversation, at least for me, I think, anyway, for the audience. So thank you so much.
Thank you.
Ladies and gentlemen, hands together for our panelists and our speakers as well. Thank you. Right, we are moving further on to our next session very shortly as everyone leaves the stage right now. Again, just to remind you, again, this evening, once it all finishes here in this area here, remember, this evening there are 2 side events to choose from. You choose exactly which one or none of them that you'd like to go for this evening. All you have to do, remember, you have to register on the website, put your details in, you're registered at either one of those side events, and then all you have to do is go there and enjoy your evening however you want to do that tonight on the 1st of March. Let's move on now to our next session right now, all about tokenizing assets and really looking at that future of finance and investment as a whole, really trying to give us a kind of grasp on making sense of what it really looks like right now. But again, you'll agree with me, in some challenging times right now, how potentially is that going to look in the future? And again, we're going to unpack that right now with our panelists and our moderator as well. Please welcome to the stage all our speakers on this panel, starting with Alessandro Derold, Federico Nardelli, Bogdan Majorenu, Andres Solterman, and the person who's going to shape this conversation moving forward, our moderator, Silvia Mogas.
Hello, everyone. Thank you for being here today. And thank you for inviting us to speak on this special day in Romania, the 1st of March, the celebration of spring. And well, we are going to talk about tokenized assets with these speakers, that we have a little bit of everything involved in the tokenization. So I would like you, if you can introduce yourself first, starting from Alessandro.
Yeah, absolutely. So thank you very much, Silvia, and the organizers for having me here. My name is Alessandro Darold. I work in policy and government affairs at Kraken.
Hello, everyone. Thank you so much for the invitation. I'm Federico. I'm at Avalabs, the company behind the Avalanche blockchain.
Hello, I'm Bogdan Majorenu. I'm market analyst for eToro.
Hello everyone, my name is Andres Solterman. I'm the co-founder of Edel, and we're building open finance infrastructure for tokenized equities.
Well, I'm Silvia Mogas. I'm moderating today this panel. I work for NextBridge and NextPlace. NextBridge is an asset issuer on Bitcoin technology, and NextPlace is our real-world assets exchange. So let's start. Why tokenization assets now, after we have seen many use cases about tokenization of the US dollars or the US Treasury bills? I would like to understand why we are going to do tokenization of assets, of capital markets. What are your thoughts?
Yeah, I think what we've seen now over the past 10 years now, a little bit more even, was the tokenization of the dollar, right? That's a stable coin. The next phase was the tokenization of treasury bills, right? Now we've seen in the past 2 years a lot of DeFi protocols that are building or attracting users based on the yield that the treasury bills are paying, right? And now you see the next evolution is the tokenization of equities, right? Why is it equities? Because they're liquid, right? In RWA or in tokenization space, people are talking about tokenizing art and real estate and diamonds. I've seen people wanting to tokenize air or the forest, right? But it's not liquid, right? You can tokenize that, you can bring it on chain, it's cool, people can invest in it, but then people cannot trade it, right? So the next step after dollar, after treasury bills, is equities, and you're seeing this happen right now. We have Kraken here on stage as well with X stocks. They're leading on that front. So yeah, super exciting times.
Yeah, absolutely. I agree, 100%. Look, I think if we start with what tokenization is not reinventing the wheel at the end of the day. It's bringing traditional financial markets at the digital speed of the internet. So what we're doing is we're bringing mainly equities now on the blockchain, and we are correcting those inefficiencies that are there in the traditional financial markets. I think that is why we're now looking at equities. It's not the end game. There is a world out there of other assets, as we discussed just now. So I think that's a great starting point, following up what is more traditional. I think the last point that I would like to make in this very quickly is that, at Kraken, what we tried to do since the beginning was to bridge that gap between traditional finance and the fintech world, or the 21st century. So how do you do that? You do that by, again, correcting things that are not working as well, but you also do it by bringing on the blockchain things that are not naturally digital. And I'm thinking about, for example, real estate or those kind of commodities. The angle there, which I think is very relevant, is the accessibility that tokenization gives. So the idea that you can fragment unfragmentable things and you can then distribute them, and then it's the compliance part that we can discuss later within the token that is also very interesting.
You want to share?
Yeah, I think that I totally agree with the fact that tokenization will not be done overnight. It's a lengthy process. It has a lot of facets. In eToro, by example, we started with offering extensive hours, like 24/5, not 24/7. And this is because, there are a lot of young people which are using or having crypto assets in their portfolio. In our poll, eToro Retail Investor Bit, it's a study that is made on investors. The average percentage of global investors that have crypto assets in their portfolio is 38%. But if you look at the ages, you will see that 52% are Gen Z or Gen X, or millennials. So this is showing that people are starting to invest in a specific way, and they are already with crypto, they are used to have the 24/7 access to their investments. And it's easy. Right now, we are in a global crisis. We have the Middle East, and all the markets are waiting right now for Monday to see how the stock exchanges will open after what happened in the weekend. But, by example, we have a non-tokenized gold asset that can be traded 24/7. And during this period when the usual markets are closed, investors could take advantage of what happened, because we have a spike in gold, and then when the news that maybe suggested that the conflict would not be so long came, the gold then corrected, and right now it's going up again. And this is happening outside the regular markets, and this is something that investors are looking for into tokenization and being able to trade 24/7.
So the main advantage is to trade 24/7, to avoid maybe this market close during the weekend. And yeah, there are many other advantages. Do you want to share another advantage of the tokenization assets as well?
Yeah, I think what you said is super interesting, and we've seen this as well with the US elections, for example. Polymarket has been so much more efficient at predicting on a state and even county level who is going to win the election, or is it going to be a red or blue, right? And now as well, you have venues, you have avenues that are trading gold and equities on a decentralized market. People are trading it, right? And they are predicting what's going to happen, right? Like it's really interesting how it already happens, and you said it's going to evolve side by side, right? You have the traditional world, and it's not going away, and it's probably not going to be upgraded in one day, but you will have an ecosystem that's developing outside, right? That has a lot of different like use case or advantages. You asked about the advantages. I think trading 24/7 is really nice. I think what we cannot miss is that tokenizing assets gives people all over the world the ability to buy into different asset classes that they might not be able to do right now, or that they might not be able to buy easily, right? I had a talk before 2 hours ago, and I said it, I'm going to say it again. It's easier to buy an Apple stock in a country, or it's easier to buy an iPhone in countries where the iPhone is built. It's easier to buy the iPhone than it is to buy the Apple stock, right? So a lot of the world has no access to these instruments, right? But thanks to players like Kraken, like Xstocks, people all over the world are able to buy into different equities all over the world. That's another advantage. And then the programmability and composability that DeFi brings, that you can build products on top of each other. You have an open marketplace where developers compete for liquidity, for volume, instead of closed ecosystems that are fighting each other.
Yeah, definitely. I totally agree. If no one wants to add anything, I'm going to jump with the first question for Alessandro. He has one of the first business case in the space, Kraken bot backed, and I would like to understand what was the experience regarding regulation, that it has been always a main thing for Europe. You mainly operate in Kraken in Europe. Let us know a little bit what is your point of view.
Yeah, thank you, Silvia. I think we should definitely hire Andres to be an advocate for Xstocks, because he's talking so nicely about it. He's referencing it. Look, so what is Xstocks? Xstocks is, at the end of the day, tokenized equity. So what we did was we took originally the first 50 listed equities in the US market. We brought them on the tokenized space, and then we started distributing them. We then moved, we amplified the number of equities that we offer today. We also moved to some ETFs and trackers. So today you can go on different platforms. One of them is Kraken, but there are also others like Bybit and others that have Xstocks on it, and you can trade whatever asset you want, be it a stable coin, be it fiat, for a tokenized version of whatever equity. Let's take Tesla, we call it Tesla X, and that's what you can do. Behind what Xstocks and Backed and Kraken do is that we buy the underlying equity. So we self-custody it in segregated accounts, and then you get, at the end of the day, the token version. There is a mint and burning, process as for anything that is on the blockchain. And what this does is, again, give you accessibility. That's something that is very cool. Of course, we are particularly privileged in Europe because we have access to the stock market, and we can, trade these kind of things daily on different platforms. But imagine for those areas where this is not allowed. I'm thinking about some countries in LATAM, some in Africa, some in Asia. So what this does is democratize the access to finance, and I think that's one of the biggest advantages. When it comes to the regulatory point, and with this I'd like to close, Silvia, I think you know, in Europe there were different ways to do this. There was the derivatives point of view, which, however, does not give you a concrete backed one-to-one asset behind. We actually chose the other way. So today we are we own a MiFID license in Cyprus, so a traditional financial assets license. The way we structured it is a little bit more, let's say, complicated to get permission, but once you have it, it's a little bit more solid. So what we have today is that we have a European prospectus, which contains all the details, all the information, and all the, let's say, assurances that what you're buying is a product that is regulated at European level and is granted. Of course, in different jurisdictions, this is going to be different, but that is what we do in Europe. As of today, just to give you an idea, there are, I read recent studies, there are 25 billions of assets tokenized, and through Xstocks specifically, both on the DEX and on central exchanges, we reached 25 billions in volumes over time, which is quite interesting. It means there is something there, there is the interest of the people.
Yeah, definitely. A lot of companies are building as well, and yeah, it's something that it's coming, right? We cannot avoid it. Someone else would like to add something about this topic, or shall I jump?
I actually have a question for eToro. Me personally, I got really inspired to build what we are building after Robinhood made the move and said, okay, we're going to become a crypto company. We want to tokenize stocks, we want to open up the market. Right after you had Kraken, you had Ondo, you had Coinbase doing something. So I'm asking you, I'm curious, is eToro thinking about tokenizing stocks as well? Is this something that you have on your plate that you're discussing, or not at all?
Yes, actually, one of the things that Ioni Asia, who is the CEO of the company, said is our mission has always been to open the global markets. So extended hours trading was the first step, 24/5, as I said. Takes a step further, however, tokenization brings 24/7 accessibility. Tokenization removes boundary, providing transparency and control. It has the potential to democratize finance, exactly what we discussed, making assets more accessible to more people. And yeah, it's something that eToro is doing right now. It is a project that started several years ago, but as I said, it's a project that takes time. It cannot be done overnight. And yeah, it's something that we are working on.
You shared with me earlier that you are tokenizing gold.
No, actually, the gold is not tokenized, but it's part of the project that will come. That gold is 24/7, it's extended hour, but is not yet tokenized.
Federico, we want to learn about your experience. We know that you work with infrastructure, and without this infrastructure, this wouldn't be possible. So explain a little bit us how important is the infrastructure to be able to move this TradFi wall to this DeFi wall and to try to mix both.
Yeah, sure. Thank you, Silvia. Yeah, I think we already talk about some of the important point, and I do really think the real unlock is actually the composability, leveraging the DeFi. It's actually extremely important. Also because into the traditional finance, you cannot use the same asset in multiple ways simultaneously. So that's extremely important. Also, you get also to have an instant settlement. Like on chain, you can actually immediately have the full flow in minutes. So I can buy some tokenized asset. It could be anything. It could be commodities. It could be stock, equities, whatever. And so you can buy. You can leverage the DeFi, and eventually borrow against it. Get some stablecoin if you want to bet on Polymarket. Meanwhile, then you pay back, and that can happen in literally minutes. Instead, in the traditional finance, you need probably 1-2 business days. So that's a huge difference. And we also already talk about the difference to have 24/7 or actually count into the traditional finance having the hour market and also like close on the weekend. That is really a huge difference in that side. Also, there is another extremely good point that is not all important for institution, but also like for the small investor. That I think should be like have some great importance to share. Is actually the fractional ownership. So we mentioned actually before, like also the real estate is taking some part of the tokenization, and let's imagine some product might be really expensive. So some small investor cannot definitely go into it, or maybe like they have just enough capital, but they don't want to have so much exposure into that. Maybe they just want part of their portfolio into that. And so if you tokenize and have like, I don't know, some small amount, like $100 or something like that, it is way more accessible to small investor, and also like for bigger investors that can diversify and have more specific quantities in their portfolio. So yeah, I think those are like the main advantages in the tokenization compared with the real world asset tokenization.
Yeah, financial inclusion is very important, and this is fixing a main problem that we had as a society, right? So you can buy with $1 any equity from around the world, and we avoid the brokers. And yeah, to have this power to be able to have access to the New York Stock Exchange from a country that with a phone, it's incredible. I would like to jump now with Andres that he's doing a great project that Kraken is a little bit part of it, and I think I have to plug you as well with my company that we can do something together. So I want to understand the securities lending, how it works, because it's mostly institutional and you are as well in democratizing it.
Yeah. So when we started to build our company, we were inspired by equities coming on chain. They're going to be able to behave like money, right? They can be freely transferred. Me personally, I've been active in decentralized finance since it started in 2019. The first use case that we received from decentralized finance is lending, right? There are companies that have in total around $100 billion invested in their lending markets like Aave, Morpho, Euler and others, where you can easily, without asking for permission, lend your assets and you can borrow against your assets as collateral, right? Which right now you would have to ask your bank, hey bank, please, I have some stocks, can I please borrow some money? They need to do manual credit checks, they need to say yes or no. In our system, they don't need to ask. You don't need to ask anyone. As long as you meet the rules, you have this much money as collateral, you can borrow this much money, you can do it in seconds, right? Without having to ask for permission. And this system or this industry is called securities lending or Lombard loans. It's actually two industries separate from each other. Securities lending is what allows these large brokers and banks to earn so much money. Everyone who is buying stocks is buying them with an intermediary. The intermediary is lending them out in the background to hedge funds who want to short this stock, right? And the broker is pocketing the interest rate. There are a few companies that forward this to the end user, but the way that this system is designed, you cannot do this for smaller investors, right? It's an industry that's only reserved for big institutions. So this industry is around $3 trillion big, and over the past 40 years, around $220 billion have gone missing, or the actual holder of the stock, if you hold a Tesla stock, your stock is generating revenue in the background, you just don't know it because it goes through so many middlemen that at the end of the day, you're not able to get anything back, right? And with our system, we don't need to hire 20,000, 50,000 people to run a system like that. It's code, it runs automatically, it's on chain, and we're able to provide everyone in the world who is holding stocks with a little bit of yield on top that they would receive, but they're not, because the rails are not there currently.
That's really interesting, and I see here a big opportunity. I would like to try. So it's launched already, or is it still in beta?
Yeah, we're currently in testnet. We have around 85,000 users, so we've been battle testing the system a lot for the past 3 months. We're going live in the next couple of weeks. So if you're interested in earning some yield on your stocks very soon, you can check us out on Twitter or find our website, edel.finance. Yeah.
Great, thank you. I have a question for Bogdan. So we are changing the rules of the game. So we are putting now the tokenized assets on the different exchanges. I would like to understand how it changed in the level of liquidity to have these assets in the exchange.
Well, as a market analyst, I'm looking at what's going on right now. And I think that the tokenization is a step in going from the analog finance to on-chain finance. And we at eToro, we believe that all assets will eventually be tokenized. And in terms of money, in the next maybe, I don't know, 15, 20 years, we are discussing about $100 trillion moving into these assets. And this is important. This will change a lot because it will change not only the markets, but it will change how people are interacting with the market. It, as I said, can democratize the investing. Also, what we are seeing is that right now it's something that is happening. It started, if you look at the whole crypto phenomenon, it started from the retail side of the market, not the big players, you know? And it is moving into the classic finance right now. And eventually, the capital markets would love to copy the crypto markets, you know, because trading 24/7 can bring a benefit not only for the investor, but also for the counterparties, for everybody involved in this project. So yes, I think it will change the tokenization, it will change liquidity, it will change how participants to the market interact with the market, and of course not forget about AI and how AI looks right now to be ready to go into the on-chain part of the markets much quicker than on the other side of the market. So yeah, it's something that is evolving really quickly, and we will live and see how we'll develop eventually.
I think was Alessandro who was talking about the demography, that I don't recall who was talking about the demography, that 50% of the...
No, it was me, it was me,
so
yeah.
I wanted to ask this. How do you see this shift then? Because if we have the traditional finance guys coming, and then we need to help them as well to understand how this works in this side, but on the other side, these tech savvy or these crypto bros or agents, how do you want to call it? They need to understand as well the challenges, no, of the TradFi, because TradFi is really complicated.
Yes, it is. But what I think is that tokenization is not about hype. It's a process. And as a process, you know, and it will take a lot of time, my opinion. And having this much time will allow a smoother transition than if something will go in huge steps and then we have to catch up with something that it's really new. And what will move on chain first, in my opinion, will be treasuries, will be private credit, will be money market instruments, you know, structured products, real estate vehicles. Somebody discussed about this, and this will prepare all the other, how should I say, participants better to do the step when they will feel that the step and regulators and everything, when everything is ready basically to move to this on-chain type of finance.
I mean, I can quickly take on the hat of a user because I started my investing journey through crypto, right? I wasn't investing in stocks before. I got into investing because of Bitcoin, right? I wasn't even old enough when I bought Bitcoin to open any Toro account, for example. So that's all I know. And imagine there is so much wealth that was created in this on-chain ecosystem, right? A lot of crypto bro millionaires that maybe want to now start to invest in other assets, right? Maybe they're sick and tired of buying coins with dogs and cats and whatever. They want to buy something real now. And for me personally, I was waiting for Xstocks, for a product like Xstocks to come out, right? I was actively waiting for it because I live on chain. My funds are on chain. That's how I like to manage my money. Other people feel uncomfortable with having a lot of money on a private key that you have 16 words and if you lose it, you're done. But this is how I grew up. This is my world. And I don't want to take my money out of this world into a world that I don't know, that I don't like, right? I would like to be able to use the same infrastructure that I currently have to invest in stocks, right? So I think it has to happen, this shift from off-chain to on-chain, just because of the way people, the younger generation is growing up now, how they invest. They don't want to have 7 different accounts because on this account I can buy this, on that account I can buy that, and on another one I can buy this because on the other 2 I can't, right? I want to have my wallet where I have my money and I want to buy whatever I want, whenever I want. I don't want to wait for Monday. If World War III starts on Saturday, then I want to trade it, right? If I want to. So it is going to happen. Yeah, just because of the generational shift.
Yeah, exactly. What you are basically saying that it will be a generational change that will drive the change in the markets. And we had the panel, the first panel this morning, and what I said there is that basically right now everything that is related to crypto is in its infancy. All the other instruments are really old. Some have hundreds of years of experience behind. But the technology evolves. We have data centers right now. Everything is moving online. Everything is related to data. And yeah, finance will have to adapt to, but also regulations. We still need institutional adoption at a different level. We need flows. We need everything. It's not, something that can be singled out at one shift. There are several small shifts that in my opinion, have to be done in order to get from off-chain to on-chain.
Yeah. And it's moving fast,
Yeah.
I'm going to say, because it's very challenging, but still we are fast. I've been in crypto enough to say, wow, my last years had fly. And
You grow, you
Yeah.
age faster in crypto.
Yeah, but 3 years ago, we didn't have any ETFs. And it still was the wild, wild west. Right now, we started to have regulations. We are going into the ETFs area. We are going right now with the tokenization of the stocks in some classic markets, but on a more modern basis. So yeah. It's moving fast.
The last point I would like to make on this is the beauty of what we're seeing right now is that we don't have to wait for the regulator, for the institutions. We don't have to wait for the banks to do something, because right now we are basically building the future of finance next to how finance looks like right now. They can coexist, right? So now you have the traditional finance world, the world that has been built for the past couple hundred years, and now you have the on-chain world, which is slowly developing, right? Like, now you have companies tokenizing equities, you have companies that are doing real estate tokenization, money market fund tokenization, you have lending markets, DEXs, prediction markets. Everything is happening without the need that the old world is the old world doesn't have to move. They can stay where they are. We are building this world here, and we're building better products. We're building more liquid markets. We're building 24/7, 365 markets, right? At some point, users are just going to migrate. Users are going from the old world to the new world. We don't have to ask for permission.
I like your vision, but I really think that is a little bit more complicated than this. But I can say that the big guys are entering already, so it's a good sign. So we are very bullish, I can say. But I would like to understand as well, and I'm sure the audience as well would say, okay, this looks very well, very interesting, but what are the main risks that we are facing? Because we're talking about compliance, regulation, liquidity. What are these risks? And all of you work in the different hats. So I would like to understand, with your perspective, putting together what are these risks that we didn't mention yet.
Okay, super. Well, I think, look, I'll give you a different perspective. I think that what Andres was mentioning, I agree to some extent, but I also agree on the fact, Sylvia, that it's a little bit more nuanced than that, and that's why I'm going to add an additional perspective on that. I think that crypto is in infancy, yes and no, in the sense that the crypto world was born in 2009 with a Bitcoin advent, let's say, and then it developed over the past 16 years. I think it developed much faster than anyone could have expected, but it remained niche for quite some time until when, and of course I do policy and government relations, so I'm going to say something unpopular, but it remained niche until regulators started to look at it and started to think, okay, look, we are going to regulate it, and the regulation made the big guys, the old guys, comfortable. And that is this shift that happened, and it was a paradigm shift. So at European level, you will have a panel on that. We have now the MiCA regulation, which brings clarity, not only for the big guys, banks, institutions, etc., but also for the small guys, as you called them earlier. I call the small guys my younger sister, who's in her early 20s, and she wants to make sure that her paycheck, she wants to invest a little bit, so that's great. You do that fractionalization, you do that democratization, but she also wants to make sure that she's investing in something that doesn't burn her early hard-earned money, right? And so that's where that regulation is helpful. Same story for the big guys. They want to come into something that follows that historical path that was regulated over dozens and dozens of years. So that's the angle. To conclude on that, crypto has been showing what works of the digital blockchain, let's say. Now we need to bring that into the actual tokenization piece. So when I said tokenization is not reinventing the wheel, I actually believe it. It's mainly taking those assets that we're discussing and bringing them on the token world. At European level, I think we need to push fast, because other jurisdictions are looking at tokenization. Qatar has a new in-place regime, South Korea, Singapore, United States, in LATAM, they are looking at it. So what we need to make sure is that at European level, we give that confidence to the small guys and the big institutional guys. So we regulate it with a smart way, but we do it fast. Otherwise, the risk is that it's going somewhere else.
Yeah, I definitely share Alessandro's vision, absolutely. And I think there are also other kind of points that push a little bit back RWAs. So, for example, all the interoperability is kind of lacking between chain. So there is a liquidity fragmentation. So, of course, an institution that spent quite a lot for tokenize some asset, they want to reach as much user as possible. So you share those assets between multiple chains, could be Avalanche, Arbitrum, Solana, Ethereum, whatever. So actually, between this chain, there is some spread. So the price is not really fetching the right one. And that is one problem. Another big problem for the institution, as Alessandro said, that they want to have more certain behavior. So instead on a chain, they needed to rely on a third party. Let's think about the bridges, so third party for moving those assets, and we know like in the past that there were billions of dollars that were lost into those. Also, you needed to rely on oracles to fetch the actual price. So another weak point that might scare them. And yeah, so the interoperability is kind of a huge problem. Like I can talk for Avalanche for my point of view, since Avalanche is not like a single blockchain. It actually is an ecosystem, so it's a network of network. So institutions are actually kind of happy with Avalanche because they can eventually also like for privacy things. Some banks doesn't want like actually to share everything on a public blockchain. They can spin off their own blockchain into the ecosystem, and it is proof of authority. They can manage who deploy, who can read, whatever, and actually use native interoperability protocol to send those tokens across all the ecosystem without rely on bridges. And that might help them, and we have some institutions that are doing so. And lastly, there is another aspect that the same asset can be tokenized in a really different ways. So different institutions can have a really different way. Some might not pay the dividend back, might be not connected to the real asset. Instead might be some synthetic. So it can be really, really different. And for a user that try to invest, maybe someone that doesn't have enough time to spend on to research, can be really, really challenging. And so I think there is still some friction into that, and we have some work, but like it is growing quite fast.
I think one of the risks might come from the complexity of the topic, from the complexity of the crypto field itself, because there are millions and millions of coins, and for an investor who is coming from the classic world of investing, it's very difficult to adapt. And because of this, regulation it's a big part. It gives trust. It gives a framework, and yeah, this should continue. And another risk because of regulation might be that the time in which the regulation will be ready might be very long.
Quick one, Andres?
Yeah, I mean, in terms of risks, we obviously need to make the step into or approaching the regulator, especially the asset issuers. I think they really, really need to be regulated because that's the single point of failure. So I'm happy that Kraken is taking good steps, good measures, but also the other issuers of tokenized equities. And then on the smart contract side, if you want to build the open finance infrastructure where equities can freely flow and you can create completely new use cases, there you rely on the old methods, just auditing your code base and being diligent with security, right? It's nothing new.
I'm going to add the last question, 1 minute. Very quick, very quick. It's not financial advice, by the way. What is your favorite equity? Fast. Quick one.
Equity.
Okay. ETF.
That I'm investing right now?
Yeah.
MicroStrategy right now, yeah.
I invest in Luxottica because I come from the place where all your sunglasses and glasses are made, so I invest in that one.
Actually, I'm not investing right now into equities, but yeah, I need to think about not financial advice. I don't want to say anything.
I am market analyst. I cannot have favorites. I have to favor everything.
One.
No.
Okay. Thank you so much, everyone. Thank you.
Ladies and gentlemen, hands together for our panelists and our moderator. Thank you so much. Wonderful. Again, another intriguing conversation here on stage, really helping us to get to grips with these ideas. And again, we're hearing these different perspectives. And the great thing is you don't have to agree with anything you hear on stage. Listen, take it in, absorb, and then up to you to really make sense of that and then make your decisions from that on. And again, just to remind you, all our speakers, moderators, panelists, everybody here on stage. Again, if you could, they're here. Most of them are here for today, tomorrow as well. So it's a great chance to grab a coffee, have a drink maybe, have a chat, have a conversation, and take those forward. Let's move in now to DeFi. So this is really looking at the evolution of DeFi, but more importantly, perhaps the performance, cost, risk management, all that put together. Take a look at it and then make sense of it. That's what we're going to do right now on this session. Let's now welcome to the stage all our panelists for this. Please welcome to the stage Andrei Duma, Adrian Cordilashu, Daniel Yanev, and our moderator who's already been on stage already, Mr. Felix Krishan.
Yeah, everyone has a mic. Yeah. Hi everyone, thanks for staying so late. We are going to talk today about the, let's say, mysteries of DeFi and how does it evolve. And I will start by asking the panelists to shortly present themselves and the company that they represent.
Sure, thank you. Hey everyone, I'm Andre. I'm the head of DeFi for a company named LeFi. We do on-chain orchestration. I like to give the example that if you've ever done a transaction in DeFi, it's very likely that you've used us under the hood. If you've done a swap in MetaMask, in Phantom, in Rabbi, if you deposited in Hyperliquid, all that is powered by our infrastructure of swapping, bridging, and depositing.
Hello everyone, my name is Danny. I'm head of DeFi trading at Raven. We are a trading company, we are a market maker. We provide liquidity on every centralized exchange you've heard of. We provide liquidity and managed pools on DeFi, we trade on DeFi, and we are very big on prediction markets as well, covering almost anything and being a launch partner for a lot of the new up-and-coming prediction markets.
Hi everybody, I'm Adrian Codirlașu. I'm the president of CFA Romania. My expertise is at professional level in economics, in derivative trading, and risk management. I have around 25 years of experience in these domains.
I will start by asking how is DeFi solving today some of the scalability issues that it has encountered in the past. I mean, if we look at let's say, the original DeFi, as I recall, it was around 2017 when the concept was born and began to spread. And in there, the first instances, I guess, of DeFi were these ICOs. I guess that would count as the first DeFi application whereby people would buy shares in a company. And even then, the performance issues were very obvious. In the meantime, we figured out that we need to evolve some things, and that's why a lot of layer 2 solutions appeared. But I want to ask you, how does it present today from this scalability point of view?
Well, it's super important, right? And there are two problems that you're solving here. One is security. So in order to be secure, you have to be extremely decentralized, which has the obvious costs of things moving slowly, things being more expensive. When you have to move slower, there is the question of, okay, if we have this capacity and somebody has to trade, but there isn't enough space, now it becomes a bidding game. And this is where the cost comes from. It's very nice that right now we have seen a lot of improvements in that. So still we have new chains, innovating, sharding, like making things go fast without sacrificing that security. And we have the other group that say, okay, we are a level 2, we will be very centralized. This is Base, for example, built on Ethereum. So we are going to leverage the security of Ethereum, but we are going to be more centralized and we are going to go fast. And fast means capital efficiency, it means cheap. it also generates more for the people there. It's a better user experience for the user, but also for the liquidity provider, the faster the chain, more trading, more fees. And now they are pushing the boundaries. Mega 8 is something that I'm really interested in personally because they claim this 10 milliseconds block time. And we'll see how it goes. In theory, that's very much pushing the limits of capital efficiency. So I think they will attract a lot of liquidity. But that is still to be seen how they actually implement this.
Any other takes?
Yeah, sure. I think scalability is a problem of yesterday, not of tomorrow, not of today. We don't need more scaling solutions. Right now, Ethereum is actually kind of clawing back the whole idea of having side chains or those L2s or whatever, people are gonna coin new terms for things that we don't need. So there's just a big merge between DeFi and TradFi happening right now. So there isn't any need to solve for more problems or create more problems within such a small ecosystem. Like all our volumes start with a B, billions, which is huge. But when you're speaking to TradFi, to institutional players, they start with trillions. So for them, we're just like a drop of water in a huge sea. So that's why I think that the focus should be a bit more on how do we merge those two ecosystems together, or how TradFi will claw everything in DeFi and is gonna merge and live in a very homogeneous environment.
I think in the last years the environment evolved, in which sense that there is more liquidity, the cost went down, the costs, and there is the layering that we can construct various products suits to your needs based on decentralized finance. But regarding the liquidity and the cost, there is this risk, especially when you need it more, the cost will go higher, even much higher, and the liquidity is disappearing. This is, I think, the main issue. But I was working, I was a trader, and I was working on a professional level on the FX market, the largest market, and that was a decentralized market with various players and with market makers. I think this is what is missing, market makers. But market makers to keep liquidity at any time.
It's all very connected. Like you're very much correct that the liquidity is like coming and going, but to challenge a bit the notion that TradFi is gonna come and is gonna just make the volumes and they don't care, I think that's never gonna happen. Just because the DeFi, it won't scale to these volumes. The only reason that they can trade these billions is because it's one server in a basement in New York, and which works super fast, can process all these orders, and nobody's gonna deploy capital somewhere where they have to wait 12 seconds to see what trades have happened, because it's super inefficient. And Binance right now does the hundreds of billions of volume. It's very close to the New York Stock Exchange. Obviously, they don't publish derivatives, and that's a huge part, right? But you need to be extremely fast in order to be capital efficient, and that's the only way that liquidity is going to flow.
Let's dwell a bit on this angle as well. This parallel between TradFi and DeFi, and the parallel of which is going to swallow with who. Yeah, so which TradFi will be merged into DeFi, because let's first maybe take a step back and see if everyone agrees that at some point in the future we will not talk about TradFi and DeFi. There will be everything happening on the same platforms. And if we accept this as a end state, then which is the route through which this merge will happen?
I mean, it's super easy. It's obviously going to be TradFi that's going to swallow DeFi because they have abundant amounts of capital. Look at what Stripe did. Stripe bought a WAS solution, Privy. Stripe bought out Bridge.xyz because they wanted to have the railways that Bridge is offering from fiat to crypto, and wanted to have a WAS solution which they can basically pack and offer as a social login to every single either DeFi protocol or Web2 startup that wants to have an onboarding process from fiat to crypto. And I don't mean that, to your point about, TradFi not wanting to be in an inefficient environment. I mean, I actually didn't mean, or I didn't allude to trading. I was saying more like, a few examples. The Stripe one, Revolut is offering right now one-to-one stablecoin to USDC to USD, one-to-one redemption. We're gonna offer that as well. We see a huge demand for one-to-one redemptions. So is neobanks that are having interfaces, and two, for the more traditional banks, they're not going to do their settlement on Ethereum. Absolutely never, ever that's going to happen. They're going to do their settlement on private chains like Canton. So, it's not in the more commercial sense that, we, or you two guys were asking about.
Yeah, exactly. And this is something very important that you're saying. I was completely talking about trading and efficiency in how you actually manage order flow and how you execute. And what you're talking is the inefficiency of the current TradFi, the encumbered system that is super slow to transfer, that has 1,000 checks, like you push a transfer, it arrives 2 days after, which is complete nonsense, or how Visa and MasterCard are charging like 3% on each transaction. And this is super inefficient, so the inefficiency there is coming onto DeFi, and I completely agree with you. This is gonna happen on their own chains, and they're gonna move to this because it's just better. It's better for them, it's better for the users, and users are gonna come there. For trading, I don't, it's a different story.
The technology, I think, is very appealing for the traditional finance companies, and we are seeing already those companies employing technology, like, for example, the largest bank in US have its own blockchain, private blockchain for transactions. The largest asset manager had a money market fund on blockchain, but it is on a public public blockchain on Ethereum. So the traditional finance companies will take this technology and embed it in their own products. But on the other hand, there will be few players from the purely crypto environment that will grow to become as large as the traditional financial companies. To give some name, for example, Coinbase, that is listed on the stock exchange, Circle. So there will be some players that will become as large as any other large financial institution.
Let's now look a bit, let's go past the scaling and the merging route, and let's look at the risks associated with DeFi, and maybe looking at DeFi from the point of view of destructive finance, and what can go wrong in this kind of evolution.
It's very scary, especially for end users. Understanding this technology, it's a marvelous technology. But it's in order to do these things, it's very complex. I've personally lost funds doing things on DeFi, and it sucks because I know this will never happen. But it's a trade-off. It's a trade-off you do. You have control of everything. Nobody can take this away from you, and for that you pay with other risks that are. You have to be mindful of what you do, you have to be mindful of what you say, what you download on your computer and everything. There are solutions for this. Like a lot of smart contracts, I say, every contract, there isn't a secure contract. There is only contracts that have not yet been hacked. Obviously, not so much the case with public ones. Safe has been, and Genesis are very safe. They hold a lot of money and nothing has happened to them. But you building your own contract, I don't think that's ever feasible. It's only for advanced users. But there are solutions with OK UX for for normal people to go and use it. They are still not very easy to use.
So there is layering. So if a layer collapses, all that is built up above it will collapse. So this is one risk. Another risk is the fact that funds can be lost. And for an institutional investor to say to the clients, I don't know why, but I lost your money, but I don't know why I lost it. It's unacceptable. Then another point, enforceability. You lost money. What contracts do you enforce on what kind of law? This needs to be settled. So all the contracts to be, I don't know, in British law, in American law, but to be an applicable law, an applicable contract, and be able to enforce that contract. Also, I think this is another topic, and another topic like in traditional finance, you want less risk, you have to increase the capital. Are the players willing to increase the employed capital on the DeFi in order to reduce risk? It's a trade-off.
Okay. Anything to add?
Yeah, I mean, I have a very short comment on this. I think the biggest risk is the human risk associated with the smart contracts is not necessarily the underlying contracts themselves, and that's anyways getting a lot more abstracted and automated right now. So I see the risk going down as time passes on.
In here, I have I want to add a bit of nuance to this smart contract issue. And if you remember, maybe it was 8 years ago or so, when there was a problem with one of the Ethereum clients. So at the time, it was only Get and Paul. I don't remember the name of the client done by the guys from Polkadot. Well, they subsequently left, and Parity. Yeah, that was the name. So there was a bug that crashed all the Get clients, the Parity clients remain. So in the same way, there can be subtle bugs in the virtual machine that even if your contract is fully solid audited, the results can be unexpected. So from this point of view, another layer of complexity. And I will go back to what you were saying about the experience. How much does the experience in interacting with the DeFi application in the end matters in the grand scheme of things? How much does it hinder or does it encourage adoption?
Everything is getting a lot more simplified, so gas is abstracted right now. Users don't care if they're gonna do a swap or a bridge through a centralized solution like a centralized relayer or a centralized solver. The whole ethos of the cyberpunk and everything being decentralized is gone nowadays. Like, no one cares about if you're gonna swap and bridge through the most decentralized system by the Ethereum Foundation or through a solver, which is basically two EOAs on two chains with a direct link. And you basically have one party which has funds on chain A and on chain B. They take your funds and they release your funds on chain B. So I think it's getting a lot more simplified. And again, the merge to TradFi is happening because they have solutions that work, which are centralized. Now, obviously, there is a big decentralized component. Everything is still permissionless to a certain degree, or it has to be. But I think that's kind of where we are, and that's definitely where we're going, at least from a moving money cross-border, cross-asset on chain.
You are alluding correctly to that for swapping. Yeah, I agree. People don't really care. But if you're keeping a lot of money, if this is your investment account or your personal finance, you don't want to keep them on a centralized exchange. Like, yeah, everybody, they all do audits, proof of reserves, etc. But you still have risk that you don't have to take. And at that point, I feel like people are. This is the problem. If the UX was better, if they could trust it more, they would be more kind of pushing towards keeping their funds on chain and being using the security of those big protocols. But yeah, for swapping and things like that, I agree. Nobody cares.
What about, so you already mentioned the gas fees. No, I was actually thinking about if the ethos of, decentralization is gone, why do we need DeFi then? Because in the end, the first DE stands for decentralized. So why do we went through all this trouble of, let's say, inventing these things if things will go centralized in the end?
It's a very fair question, I would say. It's because incentives from a certain point further were not aligned for the end user, and the end user realized that pretty late. And let me, explain. First, you had the whole decentralization era from, what Satoshi did and what Vitalik and his whole, co-founders built with Ethereum. And there were a lot of good initiatives. But at one point, those initiatives started to have a diminishing return for the end user. And that probably ended like 4 years ago when the whole L2 frenzy started and everyone was, launching a new chain, launching a better and faster solution, launching the next big lending market, which was absolutely not needed. And Aave has proved that they now have 80% of the lending market and the fees that they grab. So it wasn't really needed. So incentives were not aligned. The initiative was super good, but incentives were not aligned further down the line. So now we're at this point in which DeFi in itself has, millions of users, is processing billions a month. But we have this very nice toy on the table, which someone is probably gonna either, dismantle or buy from us. And that someone is, players who have been in the market for a lot longer than, any of us have been, and that have, abundant amount of capital. So now we're kind of forced to, play along with the big boys because we've built something that's pretty cool because people wanted to make money. Like, let's be real, that was kind of the trigger for everything that got built further on and further on.
A beautiful thing about DeFi is that you can build your own financial services by taking pieces from different places to do the service that you wanted. And I think when the AI agents that will do commercial stuff will be around, they will use probably this kind of environment, the DeFi, the pure DeFi for realizing transactions. But on the other hand, there is a place for I think for everybody. If we want big volume and a certain certainty of transaction, we'll go probably to a big market maker to do that transaction, not use DeFi that has some risk. So depending on the value of the transaction, what we really want to use a certain service for, we'll find what institution or decentralized finance applications is better for our needs. So I think there is a place for everybody depending on the type of standardization of the request, the value of the request, the volume, the certainty of realizing a certain transaction.
I feel like DeFi doesn't need to solve everything. You are correct. Some things are better centralized. They are more efficient. But what DeFi gives you that is nowhere found in TradFi is actual freedom. And for us, we live in these countries where that's not a concern. Like I can go to any broker, the fees are going to be higher, sure, but in the grand scheme of things, they don't matter that much. But what I can't do is, if I'm in China, I don't have access to these things. If I'm in some Asian countries, I don't have access to other things. And these things truly enable everybody. They give access to financial instruments to everybody. Not everybody can go and lend or get a loan from a bank. You can do that without permission now. And it's liberating for a lot of people. Like not everybody is in our...
I will jump on what Adrian was saying about AI. And I would also make an observation that everything around crypto is very well suited for everything related to AI. And I will also remind people that with all this effervescence we've seen in the past maybe month around OpenClaw, there are a lot of services which cater directly to the Claw agents, I don't know how to call them, including services through which these agents can launch their own coins in order to finance their activity. So how, using this as an example, how will DeFi and AI work together, will be joined at the hip?
So agentic payments right now are probably one of the three topics that I'm super excited about, because there is a big overlap, as you said, between AI and crypto. And I think that agentic payments is probably the biggest one, because now you can basically include any sort of DeFi action into an agent and start having them work on-chain, not only off-chain, to do any sort of action that you want. And it can be from some super simple, like natural language prompts, like go on this lending market and find me the best yield and do a looping strategy, run it 3 times. So I think that that's something that I'm actually very excited about. And also, on the other hand, for the people that are building those protocols, I know so many projects, some of the top projects that are using AI in 90% of everything they do, from doing the PRD, doing the first, generating the first code, doing the review, and then there's obviously a lot of human interaction and human-based review of it, but it has streamlined a lot of the work in for protocols. It is the same probably for anyone who's running a tech company like you.
Cloud is my best friend. Like it's so nice, and definitely this ties into like the DeFi permission listing. Like a lot of AI, I think it's here to stay, and I think every tech company that is going to thrive in the next few years is already using them and getting used to them. Again, as you mentioned, a lot of human intervention at this point. Maybe that's going to change, maybe that's not going to change. I don't want to speculate on that. But yeah, this is the perfect playground for these agents, because even right now, like OpenClaw, for example, you tell it you're hungry, you want it to order. The current Web2 companies like Uber Eats, they don't have these APIs ready. The agent has to go on the website, it has to click buttons, and it can do that now, and it does do that, but it's a bit more friction than it should, in my opinion. And with DeFi, it's a lot more open, easy to do. So I'm also very excited about this, and we are looking very closely as a company as well. And I think this is kind of a problem of Web2, and they're going to have to adapt, because else they're going to lose all this flow from all these agents that are doing things for people. When you say, oh, I'm sorry, I have these captures. Yeah, sometimes they solve the captures, but again, a lot of friction. You remove that friction, those agents are naturally going to come to something that works, and you're going to miss out.
So we are having already agentic payments, but probably we'll have also agentic trading, agentic asset management, and DeFi will be the best environment for such an agent, because it can find the best solution for a certain activity, where to make, which protocol to use for the payment, in which protocol to make an exchange, one asset versus another. So it can construct its own financial product based on various pieces on the DeFi environment.
I will go back a bit to the usage and to the DeFi, let's say, adoption. And we've seen lately, maybe not at a big scale, but bigger than in the past few years. In the last year, we've seen a bigger adoption, or if not adoption, at least bigger openness towards DeFi in institutional investing and in institutional, let's say, discussions. What has changed in the past few years to drive this adoption or this openness, and what will it be needed in the future to enhance it even more?
What has changed? One, the price. So that has definitely been a pretty big breakthrough, let's say, for TradFi, not being considered a nice little experiment on the internet, doing lots of volumes and Bitcoin hitting 6 figures. So that's definitely, you start to raise an eyebrow and see if that's maybe a good place to allocate your capital. And what will, now that, price has, done well for many people and institutions are starting to see it more seriously, what was going to make it a stick here is probably the fact that they can do on a public ledger in a private way a lot of the things that are doing right now in banking, for example, or just touching another pool base of users. So at the end of the day, I think it's more about making sure that they extract the best of this technology for their needs.
A big institution will always try first to build their own private chain and to have from A to Z their own product, not so by definition will not go to DeFi, only if it's forced, if it is forced. But on the other hand, the smaller institution, can use DeFi. So I think DeFi can go to smaller to mid-size institutional investors, not the big ones. The big ones will always want their own chain.
So in other words, for the small player, DeFi is a sort of a competitive advantage, while for the big players, it's a sort of a moat which they can use in their own backyard.
They will want to build their own ecosystem, the larger, and we have these cases already in US.
I always struggle to understand what's the use of building something which mimics a blockchain but it's private instead of using the public ones.
The private ones, you have the control, so everything is in.
Yes, but so
then there is a single point of failure, so
yes.
there is operational risk
Yes.
associated, but you get all the funds through you.
Yes.
So you have all the funds in your books that are on that chain.
Okay.
Security. If you have your own blockchain and somebody comes and says, you're a regulated exchange, right? And somebody comes and says, please show me every transaction, every balance, show me that you aren't cooking the books, that you aren't like wash trading. You go and you show them, here everything is on our ledger. Yeah, it's private, yeah, it's centralized because it has to go fast, but you can cryptographically prove everything.
Yeah, but my question remains, why do they need a blockchain and why do they build or they continue to use what they already are using today? What do they need to switch?
Basically, it's like a central bank.
Yes.
They own their own currency.
What is the biggest unsolved problems in DeFi today?
I don't think there are many unsolved problems in DeFi right now. Bridging has been solved, swapping has been solved, lending is at peak. What hasn't been solved is how you do all this cross-border to TradFi. So bridging from Ethereum to your bank account, there's no way of doing that right now. You have to do a lot of actions. You have to use an on-ramp then you have to do a swap, a bridge, a swap, and then a deposit if you want to go into a lending market. So I don't think there's actually that many things unsolved in DeFi, but putting your bank collateral on a DeFi platform is still an unsolved issue, but I'm absolutely sure that it's going to get solved in the next 3 to 5 years.
I also feel like there is one benefit to banks that is kind of not possible to do on DeFi, which is that banks serve, there is a different kind of trust. On DeFi, it's in order to get a loan, you have to put up collateral. Okay, you cannot start a business. There is no point of getting a loan if you already have the capital to start a business. So banks still do this function for society where you go to somewhere, you take out a loan that is uncollateralized, or you take a loan for a business, and all these things are still valuable and they have not been solved.
In order to have stable liquidity, you have to have their big players. If there are big players, there is no decentralized anymore. You are going to centralized. So basically, as I said, there is on this market for everyone there is something. So retail and smaller to mid players, there is DeFi. For the big players, there are financial institutions that are market maker and can provide liquidity anytime in any value.
How about composability? Is composability one of the biggest advantages of having DeFi and the biggest, let's say, difference towards TradFi? So from TradFi.
This is by far my favorite question out of all the panels about composability for a very good reason. We have spent 24 months in research and development to tackle exactly this, how do you do composability. So basically abstracting a lot of actions, not necessarily unnecessary actions, but a lot of painful actions like an approval, pay gas, execute a swap, then again, approval, gas, execute the bridge, and so on, and then do the deposit into a one flow transaction. And we call this product exactly Composer, in which you allow the users to compose a transaction without dust, because that was the biggest issue when composing transactions. You had a lot of remaining dust, and transactions were failing on the execution because the users or the smart contract wasn't sure exactly what output amount is needed. So right now you have an input which offers an output, and you can roll this as many times as you want, because you can basically do any sort of DeFi action. And as I said, you will have this merge between DeFi and TradFi, and if you plug in an on-ramp into this, then you can basically, from your bank account or your Revolut account, deposit money directly on an exotic L2 and get yield. So this is by far, what I'm the most excited about DeFi composability, and how different teams like us are trying to solve this by offering an actual product in an API for anyone to integrate and use out of the box.
Yes, I think this is the biggest advantage of DeFi.
My last question will be around a particular use of DeFi with stable coins, and especially the DeFi that generates yield either directly, either indirectly. Meaning, for instance, the whole discussion in the US around Clarity Act, you cannot give holders of stablecoin the yield, but allowing them to do some other type of transaction that will generate the yield. So is yield generation sort of a incentive for the users in the system, or in which way?
Yes, it is and should be. We have an example in US with the largest asset manager, BlackRock, that had Builder. So basically, it's in the same time a stable coin and a money market fund. So the owners get the yield. So it is natural because the issuer of stable coins get financing for free and place it into treasuries and get the yield. Some part of the yield needs to be given to the owner of the stable coin.
Okay, so 0.000, which means that we have to finish. Thank you everyone for staying up so late. And thank you the panelists for answering the questions, and yeah.
Well, thank you so much. Hands together, please, for our panelists and our moderator. Staying up so late, as if it was like 11 o'clock at night, but it's not. It's only 5 o'clock in the afternoon here in Bucharest, on a Sunday afternoon, in fact. Right, let's move on to the next session. Mika. We've heard that throughout the day, and when we hear it, it means many things, clearly, and clearly there are many things for some of us that we have to kind of accept and get down to with this, in fact. But what we're going to do right now, we're going to jump into it right now in terms of a healthy, productive panel discussion to unpack it, take a look at it, understand it, make sense of it, and again, also, as I always say, helping you to make those better decisions as well. Let's get cracking straight into it right now. So please welcome to the stage Sorin Cristianița, Bastian Ciochez, Luca Dejan, and our moderator to shape this beautiful panel right now, Ana Maria Buta. That's right, they do deserve a round of applause. There we are. Absolutely. No. If you could sit there.
Hello everyone, and I'm Ana Maria Buta. First of all, thank you for being here. So lately we've been hearing a lot about MiCA, but one question still remains: how MiCA will affect us? So today we will try to answer this question, and we will have a legal and a test perspective. So to dive into it, I will firstly ask Bastian, is this the official moment when crypto becomes mainstream finance, or when is the moment when it stops being decentralized?
Good question. I don't think it's when decentralization stops. I think actually from a legal regulatory perspective, under MiCA, it's maybe where we find out what decentralization means. There is not really a black-white binary approach to decentralization. There is some nuances, and I think MiCA reflects that by saying that when crypto asset services are provided in a fully decentralized way, then they shouldn't be regulated. There is always some decentralization aspect, at least most of the time. If you look at even which blockchain is being used for a protocol, there might be some centralization, just depending on how many validators exist on the blockchain, how many of them are being controlled by an entity. So I think here what's important for projects is to define whether they can be decentralized or whether they cannot, and in that case they have to accept to go into mainstream finance. So I see it more as a crash test in reality. If you want to keep control, or if you need to keep control over a certain aspect of your protocols, then you need to accept to go into mainstream finance. But if you're able to actually keep things decentralized enough to fall outside of the regulation, then fine, but you will have to prove that you are decentralized. And then there is a lot of things to take into consideration to see if you're really decentralized or not. We were talking on the previous panel on RAMP, for instance, if there are any payment rails, that can be a centralized aspect. So yeah, I think it's really a matter of whether you need to keep some control or you don't need to keep some control.
That's a very fascinating tension between the mainstream and the decentralized. So Luca, that tension is playing out in the courts and in boardrooms right now. So looking at the legal structure MiCA creates, has it effectively transformed crypto companies into regulated financial institutions, or in everything but name?
I would like to add one thing with respect to decentralization. I think also companies should not rely just on the fact that it does not apply to fully decentralized. because most of the companies try to use that in their advantage. Yes, with respect to your question, I think the answer is yes. We started from nothing and we've reached the point where we have this extremely comprehensive regulation with a lot of implementation regulations and at least 2 major European authorities that are overseeing this market. So yes, I think from this perspective, we can say that we are a fully regulated area, and the CASPs should be seen as same as the banks and other financial institutions. I mean, up to this starting from now, it won't be possible for a CASP to say, okay, I will follow the old crypto rules and I'll just try to stay outside of them. Right now, the founders and the managers of these CASPs really need to understand that there's a new era, there's new rules, and it will be very hard to comply with them if you're not starting earlier. So yes, the answer, I think.
And now, from an ANAF perspective, how this clarity change the game? Specifically, how do you anticipate the new MiCA classification of cryptocurrencies and service providers will affect the way ANAF identify taxable events?
Currently, when we're looking from a fiscal standpoint, ANAF recognizes revenue in only one moment, more specifically when you take out the income and you put it on the card. So basically, when the gain is realized, that's the moment that you taxed it. Problem is that payment systems are evolving, and generally speaking, transactions are working much faster as they previously did, and you already have crypto as a way of payment. In other words, if I want to buy a Tesla right now, I can just go buy a Tesla, pay it with Bitcoin, and in theory, ANAF is not going to see that. Now, the problem is that when you do that, automatically the level of fiscal fraud that you have is going to increase. So what can we do is basically try to adapt the Romanian legislation to what's going on, and automatically we will start to capture more of the market, so to say. Now, the main idea isn't that of just strangling the market, rather than have it regulated and more specifically make it safe for the users. That's our view, and that's how we sit on this.
Okay, and moving beyond just identifying events, will MiCA provisions give enough new tools or cooperation mechanism to actually support crypto audits and enforce tax compliance?
The cooperation mechanisms already exist. ANAF has partnerships with multiple countries all over the EU and some outside of the EU as well. Changes of information already exist. The implementation of DAC Opt will also help us. It will force, so to say, more exchanges to actually report data with regards to the CARF regulations. But tools, so to say, tools already exist. Everybody has chain analysis, everybody uses it, everybody tries to look at it. Problem is that up until the point in which you're going to start to get the public system, so to say, at the same level of the private system, more specifically as training, because right now the government is not specifically prepared to deal with big volumes of data as the private sector is. When we're going to reach that point, I think we're going to have this conversation from a different standpoint.
Let's get a little bit earlier about your decentralization point. So even with this tight framework, they are gray zone. Where do you see the greatest legal gray zones in MiCA definitions of crypto assets?
I think one of the main gray area to me seems to be the case where a token has actually different features. For instance, utility, but also governance right. It's being used as a payment token, and there might be some economic rights aspect behind it. I think in that case, actually, MiCA gives us a taxonomy that is quite too simple, I would say, because we have EMTs that obviously everyone knows are stablecoin payment tokens that will be used as a means of payment. We have RAT, the asset reference tokens that are, I would say, more into real world asset. At least they take a value that is pegged to a financial instrument or to something else. And then we have all other crypto assets. I think if a token is actually giving different rights and is having different utilities and features, it becomes hard to understand where it would fall exactly. And one of the main points here is if the token is actually giving you some financial rights, because then that token would look more like a financial instrument rather than a proper crypto asset, at least from a regulatory perspective. It would not necessarily fall under MiCA, but under another regulation directive actually, which is MiFID. And here's the question, or rather the issue, is that each country in the EU has different definition for financial instrument. So your token can be considered a financial instrument in one country without being considered a financial instrument in another, and then maybe somewhere else is going to be considered as a crypto asset. Maybe the best approach would be to follow what the US is doing here and see how the token is being marketed to users. Probably if the marketing is focusing on the governance right of the token, then maybe that aspect will take the lead, and that's how the token should be classified.
And Luca, if you had a magic wand and MiCA were rewritten tomorrow based on a real-world experience, which provision will a regulator amend first, and which will the industry fight hardest to keep?
There's a principle in law that you have to apply it, not comment it. So yeah. If I were to start from the beginning, I would make two things different. First of all, the approach towards stable coins which are pegged to non-EU currencies. And because the MiCA's approach towards them, especially the USDT, is like that you're a significant RT, you are bound by some obligations. It's up to that point you can be stopped. So if the idea of the MiCA regulation was to promote stable coins referenced by euro or other EU currencies is to block the USDT, I think I would have chosen the approach differently. So I would not have gone so harsh with respect to the USD related crypto. I would try to promote the EU ones by not blocking the other ones, because the market was mainly using 90% from the stable coins were used by reference to the USD, and the MiCA regulation says, okay, if you're reaching some thresholds, you need to stop. So I don't think this is the right approach. I would have changed that. And the second one, I would have tried a slower regulation. I mean, okay, you're starting from zero, you're getting the financial regulation into the crypto market from zero to a lot of regulation. I would have tried a middle approach. So I would have started with some regulations, but ones that will not kill the innovation, that will not kill the new companies that need a lot of money to stay up to date with this regulation for compliance, because compliance usually costs a lot of money. I would have made a different approach towards different companies. I'll make it easier in the beginning and make the regulation as they are right now, like in 10 years. And one provision that I think is very important, I think the ones with respect to the white papers, which at least I think there are minimum requirements. I mean, those should have been from the start. There are minimum requirements. They should be provided in the white paper. I think they are good ones, and they should be kept. But unfortunately, we have to respect them also. My opinion is not so important.
Sorry, you mentioned earlier the data sharing. How will ANAF coordinate the cross-border exchange of crypto transaction data with other EU tax authorities?
Well, that isn't very complicated. Right now, there are platforms which are set in place through which exchanges of information are basically happening automatically. The main problem that not only us, but the majority of governments are meeting is the very, very large volume of data. More specifically, you have data coming in from all over the world, and you have very limited capacity to actually analyze it. Now, once you're able to basically sort it out and try to put it end-to-end to understand, to make something out of it, automatically you're going to have a better view on the market, and by having a better view on the market, you're also able to regulate it better. We're constantly trying to work with our partners from abroad. We are constantly trying to work with the business environment as well. But as you know, generally speaking, when we're talking about government, it's very hard to actually do things in the right speed, so to say. We're trying to stay on top of it. In theory, the deadline for the CARF reporting, if we're looking at CARF, would have been 31st of December 2025. Sadly, no country in the EU has actually managed to meet that deadline. So we're trying to be right there with them and build up from the foundation, so to say, so we can be prepared when it's actually going to be enforced.
And what technical or organizational changes should ANAF implement before 2026 to be ready for MiCA full application?
Well, first of all, we need some units which are highly specialized in blockchain. We're going to start from there. Currently, we do not have that. Probably it's going to happen in the near future. Once we do have that, again, and we're able to modify maybe the personnel scheme to be able to meet the new challenges. Right now, the population, so to say, in the government sector is rather old. So they're kind of having a hard time to adapt to these new technologies. We're trying to teach them, we're trying to show them, okay, this is how it works. It is a work that we're trying to do, and it's ongoing, and I'll try to leave it over there.
Okay, so the green zones create a choice for innovations. Do they stay and fight, or do they leave? Bastian, looking at the sum of these, the clarity, the compliance, the cost, the green zones, do you see MiCA positioning Europe as a global crypto hub or unintentionally pushing a project offshore?
I think it really depends on what is the purpose and what is the project. What do you want to achieve? Because if you need to actually ship something fast, there is no question, you go to the US. I don't think with MiCA today you can really have an idea, say, okay, I'm going to use Cloud AI, just vibe code the platform and launch it tomorrow. You need to actually think about which right your tokens are going to have, how you're going to implement the design. If you rely on some third-party services, these kind of things, you need to actually do a deep assessment. And even if you actually just want to launch a token, you will need to have a white paper for your token. And to have a white paper, to make sure that you have all the information that are required in the white paper, to notify the white paper to the competent authority before you can finally get it published, it would take at least 1 good month if you're moving very fast. And 1 month in crypto, it's like an eternity, right? So if you need to go fast, you will go to the US. Then if you want to actually have long-term market access, specifically if you're targeting retail, in my opinion, then yes, definitely here MiCA is making Europe a hub, because you would want to be compliant, you would want to show that you're willing to provide any information, to have some strong governance feature, to also implement all the compliance requirements that are required, and then you would be able to access it. But the cost is so high that it's not a short-term strategy, in my opinion.
So the industry wants to keep the passport, but the regulators are looking at the bigger picture. Luca, with bodies like EBA and ESMA taking the lead, do you think the supervisory approach signals a long-term converge between crypto regulation and banking regulation?
I think it has already been done, because the European Banking Authority stated that starting from tomorrow, if you're a CASP that's providing payment services using stable coins, so you need a PSP license. So the European, I think MiCA was drafted as using EBA as a supervisory authority for sure. So the banking supervisory system will be already included in the crypto world. The CASPs really need to be careful that if they are using these stable coins starting from tomorrow, they need also a PSP license, and if you're not having it, the supervisory local banking authority will most likely fine you or proceed to criminal charges against you. So right now we have at least ESMA and EBA that are having this supervision authority in the crypto world. So yes, most likely the obligations will come more and more, and the European Banking Authority most likely will have a word to say in this industry, because let's be honest, most of the time people using USDT, they already use them for payment. So when we say payments, we say banking authority, and yes, unfortunately, it will be I think it will be as heavily regulated as the banking system in the future.
So you're talking about massive compliance cost. Is there a risk that this compliance complexity will unintentionally create dominant players, turning the diverse crypto ecosystem into a market of a few big regulated incumbents?
I think so. I think so, to be fair. I mean, the costs are very high, not only in terms of financial costs, but also in terms of resources. If you're a project and you don't have an in-house legal team that can actually handle all the compliance process, your MiCA application, EMI, whatever you need, you will need to actually use a third party, and then the cost becomes even higher. So I think here it's still possible for smaller projects to do it, to try to minimize the cost. There is a way, but I think we also need, in my opinion, from the European regulators, specifically ESMA and EBA, which is going to play an important role in the future, to have a very not an harmonized approach, to make sure that the approach is case by case and to make sure that it's proportionate to the size of the project. You cannot have the same compliance requirement when it comes to an exchange like Coinbase, which is the top one on-ramper in the world, to a little crypto project that is basically launching NFTs or something like that. I think here we really need to rely on the competent authority also. In the EU, there is a debate right now on whether actually the supervision should be centralized to ESMA, or if we should keep the current system where each local regulator has competency to supervise the crypto asset service providers that are established in this country. I think that model allows proportionality, and that allows projects that don't have a huge user base to grow from the beginning. While if we centralize everything to ESMA, then most probably the compliance model will be the same for everyone, and then it's going to be very hard for small projects to be able to compete with the big ones.
But I also think it's a mentality approach, because you need to explain the classic crypto guys, that they need to allocate time for reporting to authorities, for preparing their compliance team, for making all this internal procedure. I think this is also besides the cost part, which is of course will be higher, but you need this mentality just to be prepared, because if you're in the banking system, you're accustomed of reporting things every day, but in the crypto world, people are not used to that. I think this is the most difficult thing.
That is true, but take into account the fact that it's very difficult to actually make the difference between what is a big project and what is a small project. How do you treat one that is big? How do you treat one that is small? Also take into account the fact that in the definitive, EU only gives the broad regulation, but it's going to be up to each and every one of the countries to actually create a better business environment, so to say, for new businesses to actually open over there. So you might even see competition amongst countries. You might see countries such as Spain or such as France, which attract more new entries on the market, and you might see countries as Bulgaria, Germany, or whatever, which might meet the opposite. So I think it's rather early to talk up until the point in which you see what governments are actually doing.
That's a very good point, actually, because I know that ESMA is mentioning and start to rely on the concept of being a significant CASP, which is not something by itself that is being defined by the law. So then the question is, okay, how do you assess what is being significant or not? Is it in terms of how much money you make? Is it in terms of how much user you have? How much risk you are exposing your users to?
And how do you align it? Like, how do you put everything in the same picture?
Exactly.
But what are the sanctions if a crypto asset service provider does not comply with MiCA?
I mean, it depends on the infringement, obviously. If you take, and some local authorities started to do that, if you actually keep providing services in a country without being licensed and the regulator considers that you should have a license, then they can just ban you. They ban your website, and then you cannot keep providing services to local users. So technically, it's a strategy that you can adopt in a market where you don't have a lot of users and when you don't consider that the compliance cost is worth it. But when we're talking about market, like we mentioned, maybe France, Spain, Italy, that are bigger markets inside the EU, in that case, being banned by the French regulator, being banned by the Dutch one or the German one, which are actually quite strict, it will not only ban you from providing services in that jurisdiction, but it would also affect your reputation. And I think in crypto, you have one chance to make your reputation, And when it comes to being compliant with the laws, it's the same. You have one chance. If you don't, then that's going to follow you.
And I would really like to see after the 1st of July, speaking about sanctions, how they will be applicable. I'm really curious in finding out how the financial authorities will approach towards the first breaches of the MiCA regulation after it will come into force. If they will start like a very abrupt way of doing things and imposing fines in the left and the right side, or they will just try to make it compliant and still make Europe as a good place to start a crypto business. It will be very, very interesting things to find out, because the fines in MiCA can go up to tens of millions of euros.
I think we've seen that also with GDPR, right? GDPR, the fine can be extremely high, depending on the size of your business, because I don't think there is a strict amount. I think it must be something. I'm not a data protection expert here, so I might be saying something a little bit incorrect. Forgive me for that, but I think the fine are usually capped to 3% of the total revenue you generate over the year. So when we are talking about big companies, like Meta, for instance, because Meta got fined a couple of times under the GDPR, the fine becomes too excessive to keep infringing the regulation.
And could founders now face personal legal exposure for poorly drafted white papers?
Yeah, for sure. One of the main reasons the white paper structure with the name of the issuer and all the identities, yes, is for having the ways of making civil liability towards the issuer. So yes, it depends. The company should firstly be liable, but of course it depends on the local regulation. The responsibility might go after the founders as well. So this is why it is very important how you draft the white paper and to have the proper consultancy when drafting it, because you can be liable for a lot of things.
If we do just a quick check by raising your hand, how many of you have ever read the MiCA white paper? Okay, I don't see any hands up, actually. I've been drafting, one maybe? No? So I've been drafting around a good 40 white papers, because we have a lot of tokens, unfortunately. That took me a lot of time. And putting all those information in a white paper, it's good for transparency, but you also need to think, am I actually making things more easier for retail investors, for people to understand how things work, how my company works, how my project works, what are the procedures I'm following? I don't think so. A white paper is usually 50 pages, more or less. So I don't know a lot of people who would want to go to a 50 pages document before buying a token, right? Just buy it and read it after, maybe.
This is like the TNC of one website. You're never gonna read them, but if something bad happens, you go and open it.
You can look at this like an opening for new businesses which aren't in the market right now, because you're probably going to find yourself with agencies that are going to summarize and actually grade those white papers depending on what's in there. They're looking at the project, which would be more viable, which will not be. And once you establish such an agency that basically provides trust for the public, automatically things are going to start to simplify a little bit.
I think the crypto exchange is going to have that role.
And have disclosure and governance requirements changed how projects design their tokens from day one?
I think it does. I think you would want to ask yourself the question, if I need to disclose stuff, what do I want to disclose and what don't I want to disclose, you know? I really think today, as we were saying just before, I don't think that we have the same culture in the crypto industry that we have in the banking industry, where we don't see compliance yet as something good, as something that brings transparency, as something that brings disclosure to user or protection. I think we see it as a cost. I think we see it as an hassle. And that's pretty much what it is in the first place. Then if you actually think about it, definitely you would want to consider which legal design I want to use for my token. So which right I want to give, which company is going to be issuing the token, where do I want the token to be listed, because you need also to consider that, yeah, today the market is quite different from what it used to be. Centralized exchange are huge, and that's, in my opinion, the primary user interface to the crypto industry, the centralized exchanges. So if you cannot really get your token listed on centralized exchanges because you don't want to do disclosure, that's going to be an issue for your project. But at the same time, if you want to get your token listed and you're doing disclosures, that can raise concerns from the public and from different industry players. So you would really need to ask yourself the question first, and today I don't think project founders, builders are asking themselves this question because I don't see compliance as something beneficial overall.
And can a CASP authorized in one member state provide services across the entire EU? Can a CASP authorized in one member state provide services across the entire
Yeah,
EU?
that's actually one of the main points of MiCA, that you can obtain a license anywhere in EU and you can passport it and provide services everywhere. This is actually, this is a very good thing under MiCA. It's one of the best things that you can do, and of course it had started the race for each member state of becoming the leaders in this industry, and then, as we have already seen, some countries are already in the top of CASP as issuers of CASP licenses and places where crypto companies decide to submit their white papers.
I think that's a very good point. I think we've seen that some countries took the lead in the EU when it comes to which CASPs they have that implemented their companies there and got the authorizations, the MiCA authorizations there. We've seen a few months ago that there was some tension between the local regulators, specifically between the French one and the Maltese one, which is funny for me because I'm a French citizen living in Malta, so I was in the middle of that conflict. And I think here it seems a little bit dangerous because under MiCA, the law is very clear. If you have a MiCA license, you can passport your services wherever you want, in the EU, of course. So would the regulator be able to say, I consider that this entity shouldn't have received a MiCA license, and I consider that it is not safe for my users to use their services, so I will block them? I don't think that's possible because that would actually question the whole EU political and diplomatical system, right? At the same time, if they do so, they can maybe do so for other reasons than just MiCA. They can do so because, for instance, in terms of AML, you have different directives that apply, and each member state has a different way of interpreting AML laws. So they could say, okay, you got a MiCA license, you can passport your services, but I consider you're not complying with AML directive, and then in that case, I can take the same sanction against you.
Also, I would have something to add over here. Now, when you're looking at the EU, like, you have two major policies which run the entirety of the EU. You have the monetary policy, you have the fiscal policy. Now, when we're looking at countries that have adopted the euro, automatically monetary policy is being directed through all the EU, like, as a whole. But when you're looking at fiscal, you don't have the unified regulation system. So basically, if you're trying to get your MiCA license in one country, that is fine. But take into account the fact that you're going to have to adapt the country's fiscal standpoint. Automatically, they're going to make them more desirable or undesirable for the players in the market. So that should also be a point that has to be taken into account.
Or you can do like some company did and apply for a MiCA license in 3 different member states, which I still don't know what is the reason for that, but okay, why not?
It will be very interesting to see because some EU countries have not yet enacted the implementation regulation for MiCA. So it will be very interesting to see what will happen after the 1st of July when I will try to passport my services to this country, which has not yet enacted, has not designated the authority that will have the responsibility to apply MiCA. It will be very interesting to find out because there are at least 3 or 4 countries and we are in March.
But what happens to licenses obtained before MiCA became applicable? Can they still be used?
I believe the deadline is 1st of July or 1st of June, right? So yeah, technically passporting is ending. I mean, not passporting, grandfathering is ending. So we still have actually a lot of players, in my opinion. I think it's something we've seen in the legal industry, kinda. A lot of companies did not really take MiCA seriously and thought, okay, I will wait and see what happens. I think now we are getting very close to the deadline, and there are still a lot of companies that didn't apply for a license. So the plan might be, okay, I just take as many consumers as I can before the deadline, and then I will stop all my activities and just act on the reverse solicitation basis. So basically, I'm not promoting my services anywhere, but I keep the users that I managed to obtain. Or maybe they will realize at that point that it's too much of a big risk for the business and they cannot keep doing business that way, so they will need to apply, but in that case, that will be a strategic mistake, in my opinion.
But I think it's really dangerous to just rely on the reverse solicitation. I wouldn't recommend it.
Generally, businesses try to adapt to the new regulations because they want to keep their services going on. Like, yeah, of course, they can keep their users. Like, they're going to be okay. If they manage to pull it up to a certain point, they're going to make money, everything's going to be fine. But you don't want to keep your business on a standpoint, you want to grow it. So if you want to grow it, you would rather just, okay, try to get for the license, try to adapt a little bit to what's going on in the market, because in the end, I guess, adaptability is key no matter what business you're into. If you're talking legal, if you're talking blockchain, if you're talking economics, you kind of want to adapt to what's going on in the market. So.
And I also think it will be a matter from a customer perspective. Everybody will ask, why you do not have the MiCA license when everybody has it? I think it will be a very important thing in the future.
I mean, to be fair on that point, I kind of like the idea that as a user, I can choose between a MiCA license exchange and a non-MiCA license exchange. But that's also because I'm involved in the industry, so I know what are the risks of using an exchange that is not licensed under MiCA. Obviously, if you never touched crypto before and you want to start buying crypto and you're looking at different centralized exchange, you wouldn't know what are the difference, what having a MiCA license means. So I think it's good to have the two options, but indeed, I don't think that it's a long-term business strategy to not have the MiCA license and just rely on reverse solicitation.
CASP have to be present here in order to be authorized, have to have a stable presence here.
I think the regulator would expect that you have consistency. I think that's a word that was used by ESMA. I think ESMA said you need to have consistency in your operation. So you need to have some substance. You need to make sure that you have your teams that are there, specifically when it comes to compliance, right? You cannot just say, okay, I'm using ChatGPT and my compliance team is basically ChatGPT, you know? So yes, you would need it. Then to which extent do you need it? And specifically, I think a question that starts to arise as well, and we've seen it recently with one specific case, is what if when you get a license, you have that substance, you have the team, you have enough governance, but then you decide to change your operation because you need to adapt to your competitors, you need to adapt to the market, and you stop having enough substance to keep providing the services. What the regulator can do in that case. That's, I think, something we'll see soon as well.
And what are the main exclusions from MiCA, such as certain security tokens?
The most important one, I think, is that everybody's relying on being as a fully decentralized system, which, again, I wouldn't rely on it. It's just one sentence in a recital of a large regulation. So I wouldn't be so confident to just rely on this statement that is in the recitals part, and I'll say, okay, I'm fully decentralized, I'm outside of MiCA. I think it will be very hard to demonstrate that you're fully decentralized.
But at the same time, we didn't see any communication from the regulators, with whether EU or local regulators, about Uniswap, Aave. They didn't mention anything about them, right? So it seems like they are fine with those not being regulated. But did they start actually looking at, are they decentralized really or not? No, I think that's going to take another 2 or 3 years before they start looking at it.
Yeah, and you still won't see them because the government is moving us there. Let's not forget the EU is still government. Okay, so automatically when they're trying to regulate, it takes them 2 years. So basically, whatever happens today, they're going to react to it, but in their own time. So let's just give them space and hope for the best, you know.
Yeah, for those, I have enough centralized player to run after. So.
Yes, yes. I was thinking the same.
Okay, so we are running out of time. Thank you so much for your answers and for your attention. Thank you.
Ladies and gentlemen, hands together for our panelists and our moderator. Wonderful. Fantastic. Would you like, you're standing as if you would like a photo. And I'm not asking, would you like, you're like as if, well, there we are. Let's have a photo. There we are. Why not? There we are. Fantastic. Great. You're welcome. Right. Again, another great conversation here on stage. All the ins and outs of Mika and really where it's going and everything in between. And we're coming towards our kind of final session of the day. But again, remember, if you still haven't decided what you're going to do this evening, whatever that is, you may not do anything. You may just go home like these two lovely ladies here. I don't know. You're coming back, right. So again, we've got 2 side events going on this evening, but you need to decide where you're going to, which one you'd like to go to. But before you do that, you need to, after you've done that, you need to register. So register on the website, decide where you want to go, and then go to it this evening. Enjoy this evening. Enjoy, again, more conversations together in a more, but maybe even more relaxed atmosphere than here in this hall. Right, let's move on now to our last and final session of the day. Lots of conversations, lots of food for thought, probably a lot of words you've been hearing throughout the day. These are the last set of words, not from me, well, almost, but from our session here on stage. Please welcome on stage, I'm not going to say anything more than his name. He'll come on and explain exactly what he's about to share. Ladies and gentlemen, hands together for Adrian Paraschivescu.
Hello, everyone. Let me get a round of applause first for the organizers, for the Crypto Expo guys that are girls actually that did an amazing job. So let me see that energy. Give me some energy. Come on. Cool. I'm glad that you still have it in you now for the final talk of the day. My name is Adrian Paraschivescu. I'm the co-founder of Pigly. It's the kind of first spend to invest ecosystem in the crypto space, but it's also a Web2 business. You will learn more about it in just a second. First of all, I want to congratulate the Minister of Finance for the strategic initiative to bring receipts and everyday transactions on the blockchain. With that in mind, I want to ask how many of you actually get your receipt from the supermarket when you want to leave? Raise your hands, honestly. How many of you get your receipts? Okay, so not that many. But how many of you would you get the receipt if you will be rewarded for that? Raise your hands. Okay, so I see way more hands now. Well, that's what we want to do with Pigly. We want to reward every user that comes in Pigly for the most common action in one's lives, and that is spending. So you make your everyday spending and you get rewarded for that. Let me tell you more about it. First of all, what is the biggest issue in the crypto space and what we are all talking about? We are talking about mass adoption. So how can you sustain or how can you improve this adoption? Basically, whenever you go and spend your money through Pigly, through our app, you buy a voucher. We have partnerships with the biggest retailers in Romania. We have Kaufland, we have EMAG, we have Fashion Days. You will hear about it in just a second. Basically, whenever you buy something from us, you will get a part of the money back in your Pigly account. That money can be used to further buy other stuff from our partners. And what we do for the crypto space and how we stimulate adoption is basically every reward that you get, every spending that you make in your everyday life is converted into your first crypto token. Why is that, you might ask? One of the biggest issues with mass adoption is that if you want crypto, you have to invest your own money. And usually this can be a barrier. Most people don't want to spend their own money on crypto because it's not safe. You heard there is a scam. It's not something that you would do normally, especially if you're not used to investing in general. But when you get to Pigly, after you made a purchase, you will get your first crypto token for just making your everyday expense. You bought something at the supermarket, you get a part of the money back, and that money is converted into your first crypto token. So that's how we approach the mass adoption issue. Also, we have some Web 2 limitations. Most people call them limitations, but I think they are not limitations. Why? In Web 3, everybody says that we need to be better than Web 2. We have to create better products, offer better services. When in fact, all we have to do, and I'm saying this for a lot of time because I'm a crypto journalist for the past 6 years, we just have to join hands, to join our groups. So how would that sound to have a project in Web 3 that uses blockchain technology, that has a token, but that also has partnerships with Web 2 businesses and improves the Web 2 experience? How do we do that? Big companies usually don't want to touch crypto because, again, there are a lot of scams. They don't want to associate their name with crypto. But if they partner with us, you, the end user, can pay in crypto in our platform, and we manage the risks. So our partners will get the money, the fiat money, and we will manage the risk associated with crypto. So we are a bridge between Web 2 and Web 3. We have the trust of the big companies, and we bring them in Web 3. Also, one of the biggest markets that we analyzed and that we found when you started this business was the buy now, pay later. What does that mean? Over 50% of people in Romania just run out of money before they get their next paycheck. So usually they need a credit. Over 50% of Romania's market, of Romanians people, have a credit, either for a house or a personal loan, or just they bought something in installments, for example, a phone or a laptop. What we will do, and what we are actually doing at Pigly, if you reach the end of the month and you don't have any more money because your paycheck it's 1 or 2 weeks close, you can buy vouchers from us for the biggest retailers in Romania, and you can buy them with credit through one of our partners. We facilitate this with partnerships with financial institutions from Web 2, not Web 3, but even for the vouchers that we buy with a credit, you will get a cashback. So what is the conclusion of that we saw with Pigly? First of all, we eliminate the barrier to entry. You don't need any more money from your pocket to invest in your first cryptocurrency because you can just go buy something from the supermarket and you will get rewarded for that. And that's how you get your first crypto token. Also, we are stimulating the ecosystem growth, and our token, it's a deflationary token. Let me explain you how it works, because most likely you heard about a lot of deflationary tokens. What we do basically, we have a burn mechanism. So in every transaction, some of the money, it's burned, it's taken out of the circulation, so we stimulate growth of the ecosystem. And second of all, but actually most important, we have a buyback mechanism. So basically, when you get rewards, we will buy the token from the market with the actual money, fiat money that you are rewarded with, and we will give you the token instead. So we can buy back the token from the market and give it to you. So that's how we manage to further lower the supply. Third of all, this can lead to organic adoption for Web3, because if you are from Web 2 and you never heard about a crypto token, or you never had a crypto token before, you maybe are buying something from a supermarket, or maybe you buy something like a present from an online retailer. Then we are closing this gap by giving you these rewards. So we talked about the new loyalty standard that Pigly is bringing. We talked about the smart buyback that we do. We get the tokens from the market and we give it to you as rewards, and the rewards are based on the actual growth of the company, the revenue that we are getting, and the actual money that we get from our partnerships with international retailer in Romanian retailers. And also we have the credits. Now for the classic Web 2 business side, 85% of the consumption still happens physically. So 85% of all commerce, all retail, happens physically. You go to the supermarket, you have to buy the bread and whatever, you have to buy it physically. So that's why we included the partnership with Kaufland, where you can buy everything that you need physically. Also, the consumers are facing this liquidity crisis. As I said, if over 50% of the people are living from paycheck to paycheck, that zero interest loan that you can get to buy vouchers and be rewarded for that can be a saving boat for you at the end of the month. And also, retailers lose almost 500 million euros annually for marketing without knowing what the outcome will be. So they spend a lot of money on ads, they spend a lot of money on offline campaigns, but they don't know how many users will they actually get, how many people will cross their doorstep at the store. So that's where we come in. First of all, for the retailers, we offer them the end user. So basically, once you get to us, you already bought a voucher, you gave money to the retailer, and then you go spend that money at the retailer. So basically, the retailer pays the marketing for us only when they already got the sale. Also, in online shopping, how many of you make shopping online? Raise your hands. How many of you bought something online? Okay, okay, great. Then maybe you know this, but over 30% of the online shopping orders are not completed because, first of all, the cookies that you don't accept usually, the fact that maybe sometimes in some websites you have to deactivate your antivirus to be able to make a purchase and access the link that you were getting. So basically with our technology, and this will be a future update, we're planning to do this next year, we will be able to recover over 30% of the uncompleted orders that are made online. And also, we offer the third and most important advantage to our partners, to retailers, and to you, the consumer. We increase the basket value. That's an advantage for the retailer because obviously they get more money, but for you, it's an advantage because by getting some money back for everything that you buy, you are able to buy more products with less money. Now, in 2025, we finished the year with 400,000 euros in sales. That was the first year of our activity. We started in January last year. We have a 30% increase in sales from in last quarter. We also have a 117% increase, which is double in the second half of the year. And right now we have over 7,000 transactions. That's an error, and I admit it. So we have over 7,000 transactions. And all that was made with only with an investment of only $200,000. So that's what I want to point out with this. We are hearing a lot of stories in crypto, and a lot of projects are amazing, and I'm sure that their technology can definitely change the world somehow. But there are very, very, very few projects in crypto that actually focus on the real side of the business as well. If your business is based only on the token and the increase in value of your token, there might be an issue because at some point you might fail. But if your business is built upon real values and real numbers, and the actually revenue that you get in your company from strategic partnerships, from actual clients that buy your products and your services, then you have way more chances to succeed with your business and to actually impact the life of millions of people. So for the last part of our presentation, I just want to ask you, when Pigly? Thank you. Now, please. Sure.
Hold on a second, it's okay. You keep that microphone, I'll give you a microphone. There we are, just for you.
Thank you, gentlemen. So I heard that you already cooperate with Kaufland in Romania. So how about in Germany? How about in Germany? So can I because I shopping in Kaufland
in Germany.
Yeah, so every day or maybe once a week. And yeah, so it will be great to try if I can use this in Germany.
Well, thank you so much for your interest. My co-founder is right there. Both of my co-founders are right there, and they are giggling right now because they got the same question just a couple of weeks ago about Germany. So we are planning to further develop internationally, and we plan to expand internationally. But for the moment, we wanted to tackle the Romanian market because we know it so well, and we want to develop this national ecosystem. But after that, next year, I think it's a good timeline. We can definitely expand internationally, and we already have a way that can help us develop in 10 more European countries. But we want to take it step by step. Again, we don't want to waste money. We don't want to make bets. I mean, I know it sounds too safe for crypto, but that's how you can actually make a sustainable growth. So we will definitely come in Germany as well, but maybe next year.
So you just have to wait. Just have to wait. But at least you got your first customer there. What? At least you got your first customer there.
Yeah. My co-founder is saying we can promise we will get you 5% in Germany as well, but we will definitely get a pretty good cashback. So if we have any other questions from the audience, I know it's a relatively new field to cover in an event, in an amazing event such as Crypto Expo. But if you have any questions about the retail market or how do we work or whatever you might want, please, sir.
Thanks for the presentation, and I want to know that how to collaborate with your platform to, in my own business, such as to trade either crypto or a product, everything. Everything everyday trade, every product with crypto and anonymously with your platform is right.
Sure, we can definitely talk about that. If you have a business that it's in the Romanian market as well right now, we can definitely do it. For international businesses, as I said earlier, we will further develop products and partnerships next year. But if you want, my co-founders are right here. You can get our contact, and we can definitely talk some more about it.
Okay, thanks.
Thank you for your interest.
Any other questions? Last question now. Hand up. No, I think everybody's happy. I think they've heard everything.
Okay, well then, thank you so much for being here, and let's go to the side events, right? Let's have some party. Come on, give me some energy. Thank you.
Right, ladies and gentlemen, believe it or not, that is it. We have come to the end of day number 1, Crypto Expo Europe 2026. We've jumped from different sessions, lots of conversations, lots of perspective, lots of insights. Some of those you'll agree with, some of those you won't agree with, some of those you will probably want to challenge as well, which is all good as well. Again, this evening you've got 2 options to go for the side events, which are happening very shortly indeed this evening. And guess what? If you've enjoyed it today, guess what? We're going to do it all over again tomorrow, 10 o'clock, right here on this stage. But it's not just right here on this stage. It's also through the screen, over the other side to the world, because again, we'll be beaming live over YouTube channel to anybody who wants to join us live. So again, you have maybe communities or friends or colleagues around the world that what happens here might be of use to them. Give them, share the link to them, and they can be a part of this just like you. So have a great evening, and I'll see you tomorrow for more of this Crypto Europe Expo 2026.